When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's at stake? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
PM Modi will meet US President Donald Trump for bilateral talks on the sidelines of the G7 summit in France today. The focus is set to be on regional security, tariff and trade and energy concerns. And speaking at G7 summit, US President Trump stresses that he would not invest any money in Iran. Media reports meanwhile suggest the deal would encompass $300 billion in fusion, no sanctions and no nuclear program for Tehran. And US futures stay almost steady as traders look ahead to the central bank's interest rate decision. During the day's regular session, the Dow climbs to new intraday and closing highs, crossing over 52,000 for the first time. S&P and Nasdaq, however, closed lower. Oil prices slide as Trump says that the US will allow Iran to immediately begin selling crude under the terms of the deal to end the conflict. Indian benchmarks, meanwhile, extend gains for another session on Tuesday on the back of improving geopolitical cues around the Middle East conflict. The benchmark Nifty index is expected to continue the up move going forward. Good morning. You're watching Markets Today with me, Shreyanti Singh, and over the next half an hour or so, we'll tell you everything that you need to know to start your day on the right note. In fact, let's begin with just that. Take a very quick look at the handover coming in terms of some of the headlines that you're tracking at this hour. At the G7 summit, PM Modi met US President Trump ahead of their scheduled bilateral talks, and that is something that you should be keeping on your radar as well. But during discussions on global security and trade that were held already, you do have PM highlighting the importance really of ensuring the safety of seafarers and securing key maritime routes amid recent geopolitical tensions against the backdrop of, unfortunately, 3 seafarers losing their lives. Now, meanwhile, you do have Ukrainian President Zelensky also meeting Trump, seeking greater international support as the Russia-Ukraine conflict continues to dominate global diplomatic discussions. So that's the latest update coming in as far as G7 summit is concerned. Quickly taking a look at the markets as well. In terms of the handover there, so you do have a little bit of mixed session that you're looking at when you talk about US markets. Nothing decisively higher there. As you can see on your screens as well, about 0.6% uptick really coming in for Dow Jones, which is the clear outperformer there. And when you talk about the US futures rate as well, you're seeing largely a similar picture in terms of them being near the flat line, just about a 0.4% uptick really coming through for Nasdaq. Let's quickly take a look at Asian markets as well in terms of the handover there, and it's largely a little bit of a mixed bag there as well, as you can see on your screen. So only Nikkei decisively higher with that 0.7% uptick coming in. Shanghai on the back foot. Speaking about crude prices as well, also not much of a cue that you're picking up there as well. So about 0.5% uptick, a little bit of recovery, in fact, not even uptick, close to $80, below $80 a barrel that's Brent for you this morning. So that's said and done. Let's also take a look at some of the stocks that are going to be in focus this morning. In fact, Varsha is standing by with that list. Varsha, good morning.
Good morning. Let me start with the companies or sectors which will be in focus. One is, of course, aviation. You have ceramic, tire and paint companies will be in focus. Now, why I say this? Because Brent crude is at 3-month lows. Even HAL and L&T will be in focus as 10 bids has been submitted by Indian defense firms in race for IAF's 30,000 crore UAV deal. Chola Finance and Bajaj Finance and all the NBFCs will be in focus because RBI has eased capital norms for exposure under Emergency Credit Line Guarantee Scheme 5.0. This is positive for NBFCs. They'll have more lending capacity and better capital adequacy. Even Power Grid will be in focus as they have won bid for Interstate Transmission System project. Sona BLW will also be in focus as they've approved capex of around 63 crore towards manufacturing of components. Coforge has been targeting $5 billion in revenue by FY30. Krishna Defence has won 46 crore of order from Ministry of Defence, and KIMS has launched 1,500 crores of QIP. NHPC will also be in focus, in pact with Arunachal Pradesh government for hydropower project. And lastly, HCL Tech, Everready, NCC will also be in focus as promoter has been buying the shares.
Absolutely, and thank you so much, Varsha, for joining us with that update. Time for a very quick break. More news and updates on the other side.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Aisha Sehgal. What's that today? How to do?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Aisha Sehgal, on Prime 5 only on NDTV 24/7.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Aisha Sehgal. What's at stake? How to win?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Aisha Sehgal, on Prime 5 only on NDTV 24/7.
Welcome back. Thank you so much for staying tuned in. Let's talk about Wipro that is deepening its AI push with a new center of excellence built around cloud models. In fact, Jasmeet is joining in with all of those important details. Jasmeet, over to you.
Well, very good morning and thank you for that. As we have seen, IT companies are catching up with a lot of AI that's happening globally, and now here we are, Wipro, which is launching its center of excellence for overall cloud AI model. Now, what this exactly means is companies launching a center of excellence under the initiative of key business new units, AI units, where they would want to elaborate and make cloud more accessible to the clients. Well, they want to strengthen the overall AI application in terms of the enterprise adoption. That is why we see the launch. Well, alongside this, the Wipro would also strengthen its other key business unit in terms of applying AI to it. It's across healthcare, airline, manufacturing and consumer. Now let's quickly understand what is Wipro building. Well, Wipro is building a global talent pool of engineers who are well trained in AI, which can help them to expand the AI further. Companies also having engineers who are embedded with the overall client environment to adopt the AI. We have seen Wipro also adopt the overall AI in their own system itself, in the departments where they operate in, to increase the expansion and make it operational efficiency. But Wipro is also applying the entire AI aspect in terms of the client application. So this is one of the centers. Anthropic had launched the centers earlier with Infosys. Now we have Wipro in the line as well.
Absolutely, and thank you so much, Jasmeet, for joining us with all of those updates. So that's an update coming in on Wipro, but with that, it's a wrap on this edition of Markets Today. Thank you so much for tuning in. India Market Open up next.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a meeting of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury
and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open. The next 24 to 48 hours becomes very, very crucial, guys, for a number of reasons, right? We hear from Kevin Walsh for the first time as the Fed chief. Prime Minister Modi and US President Trump meet at the G7 later this evening, and on Friday we know if that Iran-US deal is finally signed and
Switzerland
sealed when we see both sides in Geneva.
Yeah, I mean that sums it up, right? In some sense, Friday dwarfs what Wednesday will bring, which is not ordinary, right, per se, for the Fed to actually play second fiddle to something even larger than the Fed commentary. But it's very interesting. Yes, but this week is promising.
Also, particularly because so there's no expectation of a rate movement this time. More importantly, it'll be Walsh. What does he say when he come in? But guys, did you see, I saw this on social media, but in that 20% up move for SpaceX, apparently Musk made more in a day than Warren Buffett made in his entire life.
Yeah.
Which is incredible, right?
The stock came off, thankfully.
Of course it did.
Else would have been something. But yeah, 2.66, it's Eclipse, Microsoft, etc. and stuff like that. By the way, either of you use Telegram?
No, I don't. I used to.
Good for you. Because for the next few days, there are going to be hiccups there.
Yeah, but so this is an interesting story, right? Why is it? It came through yesterday, I believe.
Yeah, I think they're doing it for a particular thing. I think any exams.
So here's the context. There's been a huge furore across the country because exam papers for the NEET, which is an entrance test exam, were leaked. They had to cancel those results. The lives of thousands of students and at least their careers, actually, not their lives, but their careers and their education hangs in the balance because of it. And so out of abundant precaution, the government has decided to suspend Telegram for the duration of when those exams are on.
Wow, yeah.
But apart from students, a lot of people who are in the stock markets use Telegram as well.
That's true.
So those Telegram channel businesses would be impacted for the next 15 days. And just a side note.
You know, I don't know if that's necessarily a bad thing. Not trying to brush every Telegram channel out there with the same,
tar them with the same
tar
brush.
them with the same brush. But the fact is that it's completely unaccounted for, right? What people put out there, how many people are listening, some of those tips. SEBI has cracked down on Telegram
channels. A lot of
channels.
dubious stuff, yes.
So maybe it's going to be some days of living without it one way or the other. But here's what's happened overnight globally. It's a mixed day of trade in the US markets ahead of Governor Walsh's first Fed rate announcement. And if you look at it, you had really maybe the Dow doing well, but indices all over the place. Dow actually hit new highs and then closed a little below them. Futures, just pull up futures as well, and you will see a similar kind of a move, slightly in the green now for the NASDAQ. SpaceX continues to be the story. It's zooming in trade, in after trade, now trading at about $205 per share. That's a 50% premium to the issue price. US bond yields, meanwhile, continue to dip. Several reasons for that, but ahead of the Fed interest rate announcement as well. Rates are expected to remain unchanged. The 10-year was at 4.43%. Another interesting news piece that is being reported that Kevin Walsh, as governor, is likely to do away with the dot plot entirely. We'll see if that's what he actually does at the announcement and the press conference by the Fed later tonight. But that was always one indication that the market watched very closely. It's an accumulation of what everyone in that Fed Council thinks, and maybe he will do away with it completely. Oil prices, meanwhile, plunged to their lowest levels in 3 months in hopes of the Strait of Hormuz opening. Not just that, they've also plunged because reportedly Iran will be allowed to sell oil as part of the deal. Let's pull up the latest Brent rates for you. See if they're still trending under $80 mark. Yes, they are at $79. Of course, this has huge implications for India. Let's pull up the Asian markets as they're opening up, and then we'll show you the India implied, which is fairly flat. Asian markets also mixed, and India opening perhaps flat this morning if you look at the implied. Very quickly before we get to our next speaker or our first speaker on the show, let's look at the India implied, please. It's showing a muted opening today. There you go. It's about 4 points up in the green. Peter Maguire, CEO, AustraliaTrading.com, joining us now on the show. Peter, very good morning to you. You think there's much lower levels for Brent to touch once the Strait of Hormuz actually opens?
Well, good morning, Tamara. Greetings from Sydney. Yeah, I do. And what we've seen over the last week and a half has been dramatic, from nearly $98, and now you're looking at $79.04 for Brent. I think it'll go through to probably $78.50 sometime later today in Asia trade or leading into New York. So the downdraft is it's very much it's happening. It's incredible what we've seen, that big strip out, nearly $19 in that short, 8-day trading period. So yes, structural softness, and let's see where it ends by end of month. But it's certainly one-way traffic at the moment, and that's very bearish.
Yeah, Peter, morning. So we've also seen some other commodities come off quite sharply, right? So there's crude, and then there's aluminium and various other commodities losing ground. But specifically on crude, now that we've gone past that $80 per barrel mark on the downside, where do you see it settling? Because ultimately, and also, would you differentiate between what you're seeing on the screen and the situation on the ground? When do you see the spot rates and the physical rates reflect what you're seeing on the screen as well?
Yeah, well, that's right. I mean, a dislocation as far as price. And good morning, Alex. And leading in what you mentioned about aluminium, I can't believe it. It's under 3,400, but that's another matter. I think it's got plenty of good time ahead of it. But as far as crude prices, yes, I want to see, whether WTI has the capacity to hit 70 this month. I think it does. We're less than 2 weeks away. We're waiting to see what the Fed announcements are, and there's been a lot of, big themes play out, and it's very much a work in progress. But yes, I do think 70 is achievable for WTI this month. Let's see where Brent is, probably a 73 handle. So there's a bit more to strip out of it, and there'll be a realignment as far as physical price versus futures. But at the moment, there's still a lot of dynamics that have got to come together, and that's the beauty of the market, isn't it?
It is, Peter. Maybe just to reiterate it, maybe you kind of briefly answered it, maybe Tamanna or Alex did ask this to you, but I'm now trying to paint the blue sky scenario here. if the conflict, if we see the signing of the peace accord, if there are no more skirmishes, etc., and stuff like that, and if normal demand supply takes over, does Brent go back all the way to 70 to $1 in the next 2 months? Is that even possible?
I think so, Niraj, and good morning. Yeah, I think it has got the capacity for that. I feel as though that there's a lot of naturally water to pass under the bridge, but the overall theme, one saying President Trump, there is no further conflict as far as he's concerned. That's what he's saying. And there'll be the parties aim for a final agreement within the next 60 days. I think the softness across the energy complex will work through the market in the lead up to, the mid part of Q3 to the end of Q3, that summer period in the States and Northern Hemisphere. So I'm thinking it's going to be softer prices. He wants to see naturally softer prices leading into the midterms, and that's only, 4.5 months away. So there's a lot of, I think, dynamic parts of the market that need to be worked through, but I think it's going to be structurally softer, and that's going to be a win for inflation and certainly for GDP across Asia.
Certainly. All right. Peter, on that note, thanks so much for joining us this morning. Pleasure having you as always.
Thank you, Alex.
All right, let's talk about what happened in trade yesterday. It was an interesting day of trade. You had heavyweights that pushed the benchmark Nifty 50 higher on Tuesday, and it was actually a pretty tight range for the Nifty 50 through the day. It was just about 125 points, and that 24,000 mark was tested. We ended just a handful of points, 11 points shy of that 24,000 mark, and HCL Tech was a top Nifty 50 gainer on the back of Sarvam AI deal. But the banks, some of them, the public sector banks actually underperformed. So HDFC Bank was the one that powered the Nifty along with Reliance Industries, but State Bank of India on the other end of the spectrum was an underperformer, though it gained ground towards the end of trade. In fact, BOB, Axis Bank were also relative underperformers that resulted in the Bank Nifty gaining just about 0.2%. SBI, by the way, ended about 0.8% off the low point of the day. Broader markets gained, but less than the benchmark. And it's very interesting, if you look at the advance decline ratio through the day, there was midway through the session a meeting of those two lines, and then once again the advances took precedence towards the end of the session. That's exactly what you're seeing on the screen right now. So there was a recovery towards the end of trade. The gains were muted though. Real estate pack was the top gainer in trade yesterday, followed by the Nifty IT. Metal stocks underperformed after aluminium saw that big drop overnight in trade yesterday. And Dixon Tech, by the way, this was actually one of the stories of the afternoon. It was a packed closing show where we had exclusive stories breaking left, right, and center. Dixon Technologies soared quite a bit, gained over 3% from the low point of the day. On account of an NDTV Profit exclusive that spoke about that Vivo joint venture being approved by the government. We don't have confirmation of that yet, but sources are telling NDTV Profit Streamy that this is indeed on the cards. The other pack, in fact, you had Suzlon and a couple of other wind turbine manufacturers that were in focus. It ended with gains of about 4% on the possibility of that review of old wind turbines, and this was one other pack that was doing well. Neeraj, you pointed this out in the morning yesterday.
Yeah, I mean, we flashed this news.
Yeah.
In fact, we were the first ones to flash the news, thankfully, and as a result of which, if you saw, I mean, intraday, the stocks rallied quite a bit and then came off a little bit, but still, it was a heady move, and therefore, it just shows that the market is waiting for whiff of good news into pockets which have been beaten down, so keep that in mind. Now, trade setup, oil is off the boil, and frankly, that is center stage of almost everything that you will think of or do per se. That whole pocket, cohort, etc. will be front and center, and some bit of it may have played yesterday, but I think below 80 is a psychologically important mark, and I think there will be some bit of merit out there today too, even if the markets were to be a bit flat. Metals are getting punished, and there are enough reports out there which are saying that maybe, just maybe, because of the conflict easing off, there will be some more loosening of supply, and therefore aluminum, etc., may come off. But I think the more experts I speak to talk about buying at lower levels, and in fact, I'm going to highlight an MK note a bit later on in the show as well, but keep an eye out for the metal names. And NBFCs may be in focus on account of further moves by the Reserve Bank of India. And, we were talking about this yesterday as well, that you expect a waft of good news to come up over the course of the next few days, weeks, months, you will see trade deal related news flow, you will see ADD news flow, you will see export duty news flow, you will see some of these coming through as well. So Reserve Bank of India doing further and further moves in order to ease up things. So I think there will be very, very strong bottom-up sector-specific thematic opportunities that will come up over the next few days. You just need to be a bit more alert. The only part is that unlike what used to happen 15 years ago, most of these big announcements now get announced post-market hours. Yeah. It's equitable for everybody, which is good news. No fastest finger first, but still.
Yeah. I suspect that maybe some interesting moves coming out of the Modi-Trump meet as well, vis-a-vis the trade deal, the India-US trade deal, and anything that has clarity on tariffs too. Let's see that. On the geopolitical front, I expect that there will be some conversation about the sailors that were killed in the Strait of Hormuz because of the US Navy playing out that blockade. So that becomes important. But as far as the market is concerned, Nifty has gained for a third straight day, but gains were relatively modest. It closed just shy of its psychologically important 24,000 mark, keeping bullish momentum intact. Nifty now faces a crucial resistance at 24,000. The market's immediate focus remains on the 24,000 to 24,100 zone. This has emerged as a critical resistance area. A decisive breakout above this range could trigger the next leg of the rally towards 24,500. 23,900 to 23,800 are your immediate support levels. 23,650 to 23,600 have a stronger support. As far as the Bank Nifty is concerned, it ended the session in green after trading within a narrow 323-point range, its smallest daily range since Feb 2026. Despite consolidation, the banking index continues to trade above all major moving averages and remains in a strong uptrend. Resistance now at 57,700 to 57,800 is the immediate hurdle. Above this, the target could extend to 58,500. Supports at 56,800 to 56,700 for, of course, the Bank Nifty. But let me go across to Sharad for the F&O update this morning. Good morning, Sharad.
Good morning. Largely, we are going to see a consolidation in the markets, especially because a little bit of tech sell-off was there overnight. And remember, today, majority of the global assets are, you could say, in a very small, tight range ahead of Fed FOMC meeting, and that's pretty much interesting. And right now, you can see almost flattish opening cues coming in. Of course, that important level of 24,000, that's where the resistance is also coming in. But yes, Nifty Bank, a little bit of profit booking has started. But let's see how the movement is happening for the FIs. There was a little bit of glimmer of hope, but now again, it has reversed back. Now, FIs have turned cash sellers for almost 750 crore rupees. DI absorption is largely very flat. So these numbers definitely look very small in terms of volumes. Looking at the overall shorts, it's remaining unchanged at 87%. Yesterday also, the same numbers we had seen. So yes, the shorts in the FI system is still on the longer side. Of course, stock-specific moves are there, something to watch out for. And before that, I just want to show that 24,000 levels for the second straight day, we are seeing a big congestion level happening here. So definitely we are going to see for the next leg of rally in case any positive news flows come in. But largely we are seeing a little bit of consolidation as per the technicals. Open interest gainers, especially if you look at Vishal Megamart, that is where a little bit of short build-up is happening and sell-off is coming in the value retail space. HCL Tech, interestingly, promoter buying happened in the last trading session as well, apart from a positive news flow. Amongst the open interest losers, we have M&M. A little bit of short covering is coming in this counter, while Prestige and Phoenix Mills over here also we are seeing a little bit of good technical moves coming in and short covering in the realty space as well. So these are the stocks which should be on your radar in this day's trade.
Here are some of the stocks that are on my watch list this morning. I'm starting with Sona BLW Precision Forgings. Interesting news coming in from there. They're entering the robotics industry. The size of capex is not massive. It's about 62 crores, but they will be manufacturing components and systems for the robotics industry. The capex also includes advanced robotics. It creates long-term growth opportunity beyond auto markets for the company. Now, this is something that put in an investor presentation some time ago that they wanted to get into this space, but these are the first moves coming in because they want to expand their product portfolio into non-automotive applications. So future robotics pipeline includes humanoid components and motors, and they had recently signed an MOU with Neura Robotics in Germany for this. Meaningful revenue, of course, from these initiatives comes after 3 years, and these products will take 4 to 5 years to reach hundreds of crores of scale. But as a first move, it's definitely an interesting one. Watch out for this company. Coforge is the other one. Their investor meet has been on. And here's a clutch of brokerages today. I've just picked Morgan Stanley. Morgan Stanley is maintaining an overweight with a target price of 1,500 rupees. They're talking about their aspiration to reach the $5 billion mark in revenue by FY30, including inorganic growth, which implies a CAGR of 15% on an organic basis. Preference of debt repayment over dividends can create shareholder value, but needs to be evaluated by the board. They've liked the confidence showcased by the management in its FY30 vision. Expectations for broad-based growth across verticals is there as well. And they retain a constructive view on Coforge as we expect it to deliver the strongest revenue growth over FY26 to 28. They believe in the current weak sector environment, the management's expectations may require even stronger execution than showcased in the past. Meanwhile, we are going to hear from Coforge's management exclusively on NDTV Profit this morning, so stay tuned for that. In that interview as well. Krishna Defence is the other one that's on my watch list. They have secured a domestic supply order worth 45 odd crores from the Ministry of Defence. The contract for supply is for specialized metallurgical inputs to accelerate indigenization of naval procurement. Order will be executed within 8 months. The contract size is substantial relative to the company's historical quarterly reviews, which is why it's an important one for this company. See a potential step jump in operational scale as well for the company, and the contract is expected to contribute positively to EBITDA margins too. So these are the first three on my radar.
Very interesting stocks. And on top, I've got a pack of stocks actually on the back of a Reserve Bank of India notification that came through on the ECLGS scheme. It's the ECLGS, it's the Emergency Credit Line Guarantee Scheme 5.0. And a few stocks that you should pay attention to: Bajaj Finance, HDB Financial, Mass Financial Services, Chola Investment Finance. Now, what has happened is that the Reserve Bank of India has cut the risk weight on 75% exposure of the ECLGS lending to 0%. So there's no risk weight associated to it. The remaining exposure will continue to have the existing risk weight norms. And now it's an important update because, okay, for you to understand this, you will need to understand how risk weights work. When a lender, a regulated lender, lends money, they have to apportion a certain amount of their capital from their capital adequacy ratio towards this lending, and that is determined by the risk weight that is associated with that lending. So, for example, if the Reserve Bank of India wants to step in and curb lending in certain pockets where it sees that there is a higher risk, it will raise the risk weights in that, make it more expensive for lenders to do so. This is therefore a significant positive, and you could see a little bit more lending, but bear in mind that these are not companies with a problem with regard to capital adequacy. Most of them have pretty high capital adequacy, so sentimentally positive for these companies. Polycab, there is a Jefferies note on Polycab where they're maintaining a buy and they're hiking the target price to 10,920 from 9,770. What they're saying is that Polycab remains or stays a conviction pick led by consistent market share gains. They see strong order book in the RDSS, which essentially is the revamped distribution sector scheme, as well as the BharatNet, diverse sales. They see power proxy and fast-moving electronic goods sustaining positive EBIT in the future. In the past 15 quarters, you've had the Polycab that has posted double-digit cable and wire sales growth with 12 to 15% EBIT. So they're estimating 26 to 29 EPS compounded annual growth rate at plus 20%, 22% to be precise. So watch out for this one. Quite a bit of news flow on Pine Labs, and we spent a little time, in fact my colleague Nimit spent a little time trying to understand what was behind all of that. It had something to do with what is called breakage. Now, let's not get into the technicalities, but Citi has weighed in on Pine Labs, and what they're saying is that they've maintained a buy with a target price of 235 rupees per share. They're saying that the growth guidance of 21 to 23% year on year is led by online payments and prepaid and affordability. Substantial operating leverage remains ahead. Guidance of steady headcount despite product development initiatives is a positive. And the prepaid breakage, this is the issue that was a little bit of a contention issue, is not material to the company's revenue and EBITDA. This is something that was stated on record to NDTV Profit by the company's management as well. Citi is anticipating an 18.5% top line CAGR over the course of 26 to 28 and adjusted EBITDA margins to be in the range of 26% in 27 and 30% in 28 versus 21% in FY26. So there's an expectation of an improved margin performance which should aid profitability.
Yeah, well, a clutch of names. Actually, it's not too many very large names in news today. So we'll have the oil beneficiaries. So 3 small names from my end. Actually, you can argue HCL Tech is a large name, but not because of the Sarvam deal, but more so because there has been promoter buying. In fact, there are 2-3 names in which there has been promoter buying, but I'm pointing out HCL Tech, wherein Vamasundari Investments, which is a promoter entity, bought about 47,000 shares of the company. So keep an eye out for HCL Tech. We should get the stock up in a moment. Anyway, so HCL Tech is the first one. Never mind. Let's do Sudarshan Chemicals. That's the other one. The CMD, Mr. Rajesh Rathi, has raised stake, exercising about 9.8 lakh warrants subscribed at a premium, completing a capital commitment of close to 100 crores. Now we're talking about where promoters are putting in money to work. This is one more wherein promoters have put money to work. So keep an eye out. Maybe Sudarshan Chemicals sees some impact today. Very small number relative to the market cap of 7,000 crores. So about 1.25% or thereabouts. But still, it's 100 crore rupees put in by the money management. Maybe the stock reacts. HCL Tech, just want to highlight the fact, in case the viewers have missed it, that Vamasundari Investments have, the promoter entities, bought about 47,000 shares. So keep an eye out for that one. In fact, aside of HCL Tech, there is also NCC and Everready, wherein promoter group have bought shares. So keep an eye out for them. And then metals will get punished, of course. Keep them in mind again. But I thought the MK note was interesting. So they've come out with a note on aluminum stocks, and they are saying that they are constructive on aluminum as structural supply risks still persist, even if there is a fall in the prices currently. They expect prices to remain supported by the risk of Chinese production curbs. Remember, Guinea's proposed bauxite export controls could actually tighten raw material availability for Chinese smelters, and MK is highlighting this point as well, which will add to the Chinese production curbs. They believe aluminum will remain in the $3,200 to $3,300 per ton range. For them, Hindalco is the preferred pick, but Nalco, they believe, appears fairly valued following its recent 16% rebound. So Hindalco too has had a bit of a smacking and might continue to do a bit more as well, because aluminum prices are likely to come off, but at some point of time supports might come in, and which is why MK is one of the, I think, 3 or 4 houses that I've read in the last 2 days which are saying that yes, there is pressure right now, but bear in mind that the pressure may be supported soon. So that's the third one on my list.
This other one about the Mumbai water cuts, I thought this was important to note, and there are 2 aspects to it. One is, of course, from the stock aspect. Mumbai-based real estate players will take a knock, but because we're sitting in Mumbai, it's the financial capital, and you realize that these issues are so impactful to daily lives. So here's what's happened. Mumbai is staring at a deepening water crisis. Reservoir levels have plunged to a critical 10.35%, triggering an urgent BMC crackdown. BMC, of course, is the municipal corporation. So construction sites have been cut off completely with no new connections allowed. Watch out for Mumbai-based developers and the impact that they will have, whether it's a Valor, an Ajmera, a Lodha, Godrej Properties, Oberoi, Rustomjee. So across the board, right, you're going to see that happening. Swimming pools have been shut off, rightly so, while commercial and industrial users will also face a 20% reduction. Bottling plants will now receive water only for essential drinking needs. Residents are barred from using drinking water for washing cars, gardening or cleaning. Meanwhile, railways, refineries and heavy industries have been ordered to switch to recycled water for operations. BMC has also warned of strict penalties against any misuse of potable water as the city scrambles to conserve every drop. I was reading one report that there's just 45 days of water left. Let's hope the monsoons finally hit soon.
And this is actually, this is not new, right? They've been conserving water for over a month now. So I think they anticipated this. This has gotten worse because we're already on the 17th.
15th is when the rains were supposed to hit
exactly.
here.
64% below normal, the monsoon already. So no surprise this is happening, right? And on our part, I just urge everybody, including all of us, including me, that let's just be careful when you are shutting the taps to see that the tap is not dripping at the end of it, because a lot of times in offices that tends to happen. I may be guilty of the same too, so we need to take care.
Water conservation is important. Watch out for real estate stocks today as far as the stock impact goes. We'll take a very short break, but we're coming back with a lot more ideas for the day, what the markets are looking like, and all of that when we return.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
All right, welcome back. Parag Bhai with us this morning in our studios. Amit Goel joining in, his partner and co-founder Blue Oak Wealth. Amit, welcome as well. Parag Bhai, I'm going to start with you. Do you think the whole euphoria we saw over Monday, Tuesday will get tempered down now till the US-Iran deal is actually signed? Because frankly, there should be much more. The fact is, Brent is under
Brent
80.
is 79.
Yeah,
yes.
Brent is under 80. Bond yields have cooled off.
Yes.
I mean, the stage is set to retrace from all of the pain that we've seen.
Yeah, so I remain constructive. I have said this, that in spite of what we saw, the 10 days rally into the event also, and Nifty has recovered so much. I don't have cash. I'm running out of cash. And I will buy on dips. The selected stocks which I like, I will buy on dips. For example, yesterday metals corrected, right? So now JSW Steel is at attractive price, 1270 or so. So Bajaj Auto is at very, very attractive price considering the buyback price and the export potential which they have. Every month they are crossing 2 lakh vehicles, and LATAM alone is now 50,000 vehicles per month. So people might say that rupee is appreciating a bit, so it might be a negative. But when March quarter they closed, Bajaj Auto rupee was at 90.5. Right now still we are at 94. And $1 rupee means 200 crore more EBITDA for Bajaj.
How would you look at the IT pack considering all of the announcements? I mean, we saw HCL Tech and Sarvam yesterday, but there was an announcement overnight from all the major IT companies of something or the other that each are doing on AI. You have Coforge's Investor Analyst Day and some notes out on that. Are you feeling more constructive on IT?
See, IT valuation wise, it is very, very appealing. Luckily, I bought back Coforge, which was good. And Coforge is talking about industry-leading growth, right? 15% growth CAGR. Of course, the Q1 will be flat, which is already known to the market. But I would like to hold on to some of these names like Coforge, which I have. Coforge, TCS, Mphasis, and Tech Mahindra.
Okay. All right. Amit, I want to bring you into this conversation. I was just taking a look at the benchmark Nifty 50 and what it's done since the 1st of April. It's gained about 7.5%. Of course, the broader markets have gained significantly more than that. And individual counters in the broader markets have gained even more than that, right? So you're talking about 20-30% gains. What is the outlook for the rest of the week, though? Because the benchmark seems to be getting stuck at that 24,000 mark.
Hi, good morning, Alex, and thank you for having me here. Yes, the benchmark indices have been in a downward sloping channel since the announcement of the first announcements rather. Now, since we have we have multiple announcements after that of the ceasefire and the trade and the peace deal. So, which was around 7th of April. So, since that gap, we've been in a downward trending channel, and we did cover that gap a few sessions back and taking support at 23,000. We are now closer to 24. So, we've broken that channel technically, which is a good sign, which is a positive sign. However, we still are at a resistance level of 24,000, both from a Y perspective as well as from a price action gap cover perspective. So until and unless we start trending and trading above 24,000, 24,126, I feel that the upward move will be, a little labored. And I would be a buyer at lower levels, which are supports at 23,800 and 23,645.
Okay. And individual counters that you're liking at this moment?
I mean, this is a trader's market. Really, one has to follow the momentum because we have seen metals rally a few days back and then give up a lot of its gains in the last couple of sessions. So right now, what I'm liking purely from an intraday or probably a couple of days perspective are Coforge, Network, and Prestige, surprisingly, given that Prestige is anyways a Bangalore-based, focused real estate company. However, speaking of Coforge, what I like over here is the volumes. I mean, if you look at the 20-day average volumes that it has done, the turnover is about 400 odd crores. Yesterday's volume was very healthy at about 600 crores, and the price action was also quite strong. So given that there is some momentum that I suspect is in Coforge, I would like to take a punt on Coforge, keeping a stop loss at 1400 or 1395 levels for targets of 1560, 1575.
Okay, so Coforge is one. There is Prestige Estates is the other one. And then, of course, Amit spoke about NetWeb. Actually, Amit, I'd like to come to you. There were a lot of volume buzzers yesterday, and NetWeb was one of those. So I can imagine why you chose NetWeb. It's easy. But there are a few others which did really well yesterday. So Fact as well as Paradeep Phosphates. And seems that some of the fertilizer stocks had some tailwind underneath them. Do you like any of those? Because they jumped up on very sharp volumes yesterday.
Yeah, I can see that the volume has definitely, been a bright spot for Fact. But if you look at the price action, it gave up a lot of its gain intraday and closed somewhere in the middle of the entire day range. So this kind of a price action where there is a lot of room on this upside, which is essentially a wick, technically speaking, is something that I do not like, and I would like to wait for the prices to actually cross, give us that confirmation that it wants to move up, and then take a punt there.
Okay. Okay, so not quite Fact, but maybe some of the others, and NetWeb was one of those. By the way, some of the others which did really well on volumes were Sapphire Foods, big jump up price and volume action yesterday. Sonata Software, big price and volume action yesterday. And of course, Inox and Suzlon, big price and volume action yesterday as well. Speaking of them, Parag bhai, can I ask you about these names? They came off completely from the highs of the day, but there are some reports that some of the old turbines might see some retrofitting, which is additionally significantly large number of orders for the wind sector. Okay. Not that the orders are a problem, the execution has been, if you will, right? And there are two players out there, the direct pure play players through which you can play. Is it worthwhile looking at them, or are there better prospects?
No. So there can be a lot of value in them, but it is out of my circle of competence. So I will not like to comment on them.
Okay, let's talk about your circle of competence. And one of them is NBFCs, right? Now, what Alex pointed out, that the RBI has amended the ECLGS 5.0, wherein 75% of the guaranteed portion exposures under this number will attract 0% risk weight, effectively allowing NBFCs to lend more, right, per se. How big a positive it is for a Bajaj Finance or a Mass or a Chola?
See, I'll tell you, there are so many good things happening for BFSI space, right? First of all, this West Asia war conflict cooling off is a very big news, because there was an expectation that the NPAs will pile up going into second or third quarter, because as people struggle in their own business, they'll. So first of all, government gave guarantee that 2,55,000 crore ECLGS. So credit guarantee was done. Now West Asia war conflict is also hopefully cooling off, and oil is below $80, and as Tamanna said, US 10-year, everything is settling down. FCNRB deposit was another very big positive. Right now, every bank has started borrowing at 6.5%. Well, here they were not able to borrow so much large amounts at 6.5%, and so deposit market was very tight. So that is now cooling off. Plus this thing. So I would say that everything is happening right perfectly for BFSI space. Credit growth is already very strong, above 15%.
But Parag bhai, specifically on this ECLGS scheme, it's meant for MSMEs, it's meant for working capital loans. And from that perspective, if 75% of the lending, the risk weight drops to 0, from a capital conservation standpoint, it's positive.
100%.
But these guys don't have an issue with CAR anyway, right? With capital adequacy ratio, it's not an issue.
Entire banking system, CAR
it's not. So therefore, what is the impact?
No, I would say that this increases your confidence, right? To lend to those SMEs. For example, you have lended 100 crores, let's say 10 crores, and you lend 2 crore more.
Sure.
And it is completely assured by government. Now the risk weight is also 0. So basically, same way in FCNRB, I would say. See, on one hand, you are raising deposits, and your SLR and CRR you don't have to keep, right? Which is also a very big positive.
Yeah. Okay. And your favorite there?
So, same ICICI, HDFC, Axis, Kotak,
NBFCs.
Bajaj Finance, Aadhar Housing Finance I have spoken of many times. So, entire affordable housing finance pack actually looks very interesting.
Entire affordable housing
so
finance.
Aadhar Housing, Home First, even...
I'm going to ask you and Amit about capital marketplace, but after we have this breaking story, let's go across to Nimit Dixit for the big one. Sources tell NDTV Profit that NSE is likely to file its DRHP today. with an offer size likely to be 5% of equity capital. But there are more details that Nimit is sharing with us, including what LIC is going to do with its stake. Nimit.
Yes, absolutely. So we can confirm that the DRHP has been cleared by investors and it's likely to be filed sometime today, possibly even in the next few hours. Now, important details from this is that it's about a 5 lakh crore valuation that NSE is looking at. It's about 5% of the total equity capital. Now, this is important because SEBI had changed the rule earlier this year, lowering the minimum float requirements, and 2.5% is what we understand NSE will have to meet based on their current valuation. What is a key finding that my colleague Shrimi has found is that LIC, the biggest PSU selling shareholder, the biggest capital holder in NSE, is unlikely to be participating in this offer for sale. Remember, they hold over 10% of the stake of NSE. Now, we also understand that the NSE IPO is likely to hit the market sometime in October or November. And also important to note that NSE is yet to close out its settlement proceedings with SEBI on the co-location matter over stock traders.
Got it. Okay, so interesting. The big question though, and some of those details coming through, Parag bhai, what would you do with a national stock exchange? Because look at the kind of marquee investors that are there already. The point is, would you be concerned about valuations at all? No. It's been bought a lot in the run-up to this.
Yeah. So I think it's 5 lakh crore market cap right now. So basically, see, it's a I would say duopoly kind of business, a great platform, and people just want to trade, so they'll trade on your exchange so much that you make. So I think it's a good business to keep holding on to.
Okay. And BSE, how are you looking at BSE as, you know,
so stock has run up a lot beyond my comfort level, but I would say that, see, from here on, if I am constructive on market, I have to accept that I will be constructive on capital marketplace.
Yeah.
Although I don't hold them in the portfolio, but it is a straight away call, right?
Yeah, it's a clear call. Amita, any quick take on BSE on charts today?
Hey, BSE has been in a tearaway rally from 3,000 to close to 4,400, 500 levels. It did correct for a few sessions and saw support around 3,800. So anywhere, if it dips anywhere around 4,000 levels, which is the consolidation or the congestion range, I would be a buyer here purely from a technical standpoint, and I will keep my stop loss if it invalidates the 3,800 levels. So the stock is in a bullish momentum. Any dips towards 4,000, I am a buyer here.
Okay, going across for an exclusive look at what's happening with Coforge. We've been talking about that company since the morning. On the charts, there are a lot of notes. There's an investor day that they had, but we've had our ear to the ground because Puneet from NDTV Profit has been at the Coforge campus listening in to all of those presentations through the day yesterday. We're joining him from the headquarters in Greater Noida. Puneet, you're enjoying that beautiful campus. Give us a sense of all of the conversations you had on record, off camera, to understand what's happening with Coforge.
Well, most certainly, it's a very interesting time to be around an IT company right now. And of course, the 25-acre campus here in Greater Noida, as you can see, a lot of greenery is what the company focuses on. But very importantly, the big headline that came through yesterday was that the company is targeting a $5 billion vision in terms of revenue by 2030. Now, this is important because stock's taken a knock compared to its nearest competitor, Persistent Systems. And hence, the company is targeting that $5 billion revenue now compared to Persistent that has a similar target by 2031. But as you can see, of course, the big campus behind me as well. And as you rightly mentioned, a lot of conversations around the key vertical of travel. That's almost 25% of the company's revenue, which was heavily impacted. And hence, you saw that stock price impact on the company as well. But from my learnings of the conversations with the managements and the heads of all companies, they seem to be hyper-focused on AI right now. And it is not just a part of their revenue. They've rebuilt their entire engineering vertical of how they look at these deals as well as these contracts as well. So the important aspect continues to be that they feel that the new vertical and how they engineer has been completely disrupted. And the other aspect that legacy companies might still take a little bit of time to revive their engineering strategy. And the third key, very important point has to be on acquisitions. Now, the company's latest big acquisition was Encora. This is the 5th one over the last 5 years. But they have never failed an acquisition, is what Sudhir Singh, the CEO of the company, highlighted emphatically. So any concerns that investor might have on the $14 billion acquisition were at least attempted to be allayed. And the company said that there's one more in the pipeline in the near to medium term to get to that $5 billion revenue target. And hence, it's a very important time right now to do this investor day. And hence, a lot of clarifications from the company. But the big $5 billion revenue vision continues to be the most important one.
Absolutely. In fact, so therefore, Puneet, the question is certainly going to be what the management says. And I'm also curious about what Parag Bhai has to say about Coforge, because he mentioned, and I caught this, he's bought back into Coforge.
So it was so confusing that I have to admit that I also changed my view in between and then again bought back, and so all sort of things have happened.
What specifically convinced you about Coforge that you decided to buy?
No, see, I would say the CEO, the entire team is so aggressive and so confident and it's a cash flow generating business. Most importantly, what they said last time was that their focus is back on margins, which is about 16.5% margins, and their focus is back on FCF to PAT conversion, which is now crossing 100%, as they have said. And they have actually let go of the low margin businesses. That's why Q1 is going to be flat. So I like that action over the entire thing which they have done. Plus the Encora acquisition was also futuristic, and that will drive their AI transformation. So I would say that, and so when I bought, I think it was at 18 times FY28 earnings, around 1260 or something like that. So I found that I should buy it back. So within IT pack, I would say I have 10% weight in the IT right now. Within that, Coforge is one of the
18 times FY28, and what is the growth?
So now it must have gone up. Now it should be 20, 21 times.
Yeah, and what is the growth that is being built in?
So 15% company is saying, and plus some margin improvement. So your EPS growth will be say 17, 18%.
Okay, interesting.
Okay, well, so Coforge it is. Parag Thakkar does believe, and I think Amit Goyal also had an idea there. So keep an eye out for that. What else? You know, there is a Fed. We've seen a lot of these global entities setting off some of their stakes in companies. DOMS Industries could be one in focus today as well, because Fila, which is the Italian stationery giant Fila, Fabrica Italiana Lapis ed Affini, in case it made sense. Okay,
not bad.
No, I have it written down. Is likely to sell about 7% stake in DOMS through block deals. The point is, Fila had, as of March, had 26% stake. So this may not be the end of it, unfortunately, for DOMS. And that's why the stock may be under a bit of pressure today. It's rallied a little bit. I remember it was a stock call given by Kush a couple of days back too. So it's rallied a little bit. Let's see if there is a bit of a fall today. So DOMS is one to keep an eye out for. But Parag Bhai, you know, other names in which promoter entities seem to be buying, and then I would want Amit's view as well on that. But HCL Tech, NCC, Everready, three companies in which promoters have bought in, well, decent quantities overnight. And any of these that you like aside of HCL, because we know you like HCL.
So HCL promoter keeps buying gradually, and yesterday they invested in 1,427 crore in Sarvam also, and stock did well actually after that, because it is a futuristic thing which they have done, and it is also trading at 17 times trading. NCC looks very interesting. It is worth looking at. There also I have seen promoters buying continuously. The only thing which I want to recheck is that last year the operating cash flow was negative. Due to some delays in, I think, some payments from some state governments. I think if that issue is resolved, stock is trading at very attractive valuations. I saw last year's EPS was 10.5, stock price around 153, so around 13-14 times trailing. And now my outlook on even capex from government side has improved. With oil price falling, if oil falls to say 75, 76, there can be a possibility that government might reverse their stance on excise duty also, which they have cut. So government finances can improve if oil stays below $80, and that can again trigger a big capex revival also, because this government, we know the intent, right? Their intent is to spend on capex to create jobs, but it was like kind of distorted due to this war. Perfect. And oil going above 100 and all, so the finances were squeezed. Now I think that will. So I think I'll be more constructive on names like L&T, NCC, and various other names after the oil.
Wouldn't it take some time for this to happen? Because there's been this big GST spend.
Market runs on narratives, right?
I mean, logically, if you think about it, you still have crude to go back some ways. Some impact has already happened. There's an emergency credit guarantee scheme. Government has come in to help various sectors. Uspe sab kharcha ho chuka hai.
But see, I'll tell you, the point is, the moment this happened, right, that this US-Iran deal is going to happen, we saw a big rally in real estate also. Now, can you imagine that on the ground, whether real estate demand might have picked up? No. It is just market narrative, right? That now interest rates are not going to rise, so my rate sensitives will go up.
Fair enough. Fair enough. So, okay. So, this is one of the narratives. Whether it makes logical sense to you or not is something that you have to assess. Samit Sarkar joining in with what he's hearing on the street. Samit, what is in this morning's edition?
Well, the first stock is Trent. Now, an MNC, a multinational broking firm's sales team has been pushing sell call on Trent. Now, their channel checks indicate that the first quarter growth could be on the weaker side for Trent, and this is not the margins that they're talking about, but of the revenue growth. So that could be weak, and hence this sell call coming in from the MNC broking firm's sales team. For Reliance Industries, there are buy flows on the DI desk. The stock was up 2% yesterday. The buzz on the street is that the company will be filing the Geo IPO, DRHP or the RHP very soon. So keep an eye out for Reliance Industries as well. For JSW Infra, there is a fundraise which is expected to come in anytime soon, and this is largely to dilute the promoter holding. But the buzz on the street is that GQG might be an anchor investor in this fundraise which JSW Infra is planning. When it comes to Shyam Metallics, there are buy flows on the PMS desk ahead of the analyst meet. Street is expecting strong commentary to come in from the management in the analyst meet which will be held today. And lastly, when it comes to Laurus Lab, yesterday we had seen some wild moves coming into this counter. The stock fell as much as 3% in trade. This was largely on the back of a buzz that there could be a block deal, but the stock recovered very fastly because dealers started to indicate that that the block deal size might be much lower, and hence this recovery is something that we had seen, and this could continue in today's trade as well as what dealers have indicated.
Got it. All right. So quite a few interesting stocks. Thanks so much, Somit, for that. In fact, let me start with the question on Laurus, right? Because it saw that recovery. Laurus Labs, it fell initially, and then that buzz of a block deal was dissipated. So what is the view, Amit, on the charts?
So yeah, the recovery is healthy with strong volumes, and so if it continues to hold this level of 1360, 1350, we could possibly see some bit of buying momentum creeping into it, because it was oversold on the lower time frame charts, and it looks like it could move up a little from these levels. So yesterday's last hour buying is quite positive for Laurus Labs.
All right, we're heading towards a bit of a flat open for the benchmark Nifty 50. At least that's what the indicative open is pointing to. We'll know soon enough, though. We have to slip into a very quick break. We'll talk about individual counters before we start trade. Stay tuned.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Back with India Market Open right here on NDTV Profit. We'll have a slight bit of green on the screen on open, courtesy crude prices falling off because Asia is actually pretty anemic, if you will. The question only is, can we build on from there or no? Remember, crude is that big thing. We mentioned about how crude will be front and center today. It's the first time since March that Brent is below 80. 30% odd fall since last month. And while this brings macro relief for India, the impact across sectors is largely positive, but in select spaces is also a bit mixed. Let's go across to Somit for a deeper breakdown on this. Somit.
Well, yes, crude falling below $80 is quite important for India, given the fact that 85% of our energy requirement is imported. Now, on economy level, if you look at every $10 per barrel decrease in crude oil prices, contracts our current account deficit by around 0.4 to 0.5% of GDP. While inflation comes down, the CPI comes down by around 30 to 50 basis points, while the WPI comes down by around 80 basis points. But when it comes to company specific, in oil and gas space, for oil marketing companies, investors perceive it as positively, but actual impact could be neutral because lower crude oil prices will lift the marketing margin. But given in the current scenario, in the last 1 month, we have seen crude prices fall from $114 per barrel to $80 per barrel. This $37 per barrel drop will lead to higher inventory losses for the oil marketing companies. So that is one thing that we need to keep an eye out for. For ONGC, Oil India, HOAC, oil explorers, lower crude oil prices means lower realizations and lower earnings, and generally every $5 per barrel drop in the crude oil prices lowers the EPS for ONGC and Oil India by around 7 to 12%. In consumption space, paint companies, it's positive because nearly 40% of the raw material prices are derivatives of crude oil prices. So if crude oil prices come down, their raw material costs come down. Similarly, for other FMCG companies, also the move is positive because lower crude oil prices lead to lower palm oil prices and lower packaging costs. Packaging materials like PET PET bottles, HDPE containers and laminated wrappers are all oil-based polymers. So this is something that is positive. In auto space, Castrol and Gulf Oil, that is oil lubricant companies, 50% of the raw material cost is oil crude derivative. For tire companies like Apollo Tyres and Seat, synthetic rubber, carbon black and chemical prices, the price of these raw materials are derived via crude and they form nearly 40% of the raw material basket. For other sectors, there is Indigo, which is positive because again for them fuel cost is the major cost and 40% of their RM cost is fuel. So that is something that is positive. For cement companies like Ambuja, Ultratech, Shree Cement, 40 to 50% of their cost is either directly or indirectly related to crude. Lower crude oil prices will benefit them as well, and multiple chemical companies stand to benefit because their raw material prices are also linked either directly or indirectly to crude oil prices.
Okay, so crude sensitives. Crude sensitives becomes the big one. Amit, just wondering whether there is anything top of mind for you on charts as far as crude sensitives are concerned?
I mean, I like Asian Paints on the top of my mind because it has been moving up in a upward channel since the beginning of April. And it looks like sustaining, notwithstanding the current week's weakness, which is it is down by it has given up about 3% from the top. It had opened with a gap up, but it has completely given up this week's gains. However, at lower levels of 2,700 odd levels, I would be a buyer in Asian Paints because again it has a direct correlation to the falling crude prices and it's a direct beneficiary there. Plus, technically, it also looks stronger.
Okay. Chandan Taparia joining us now on the show. Chandan, very good morning to you. Do you want to start with your Nifty, Bank Nifty outlook?
Yes, good morning. Thanks for having me. So we have seen a decent recovery of more than 1,000 points in Nifty in last couple of days. And the good part is that the other data setup are supporting the Indian markets. The India VIX is now near 13.5. USD INR is getting stability below 95. Dollar is holding below 85 to 90 zone. And market is forming the high rise high lows from last 3-4 trading session. So the base of the index is shifting higher, and we believe now till Nifty holds above 23,750, the ongoing bounce or momentum could extend towards 24,200 to 24,450. Talking about Bank Nifty index, it already rallied by almost 7,000 points from 53,000 to 57,000 plus. Major trend is positive, and now till it holds above 56,500, use any small decline to buy for next leg of rally towards 58,000 to 58,500. So positive in both the indices with multiple price pattern, and both the indices are holding well above 50-day exponential moving average and supporting the rising trend line. So ongoing move could continue in the market as well.
Stocks this morning, Chandan?
Yeah, so talking about the stock specific ideas, first trade will be CMPDI, that is a company related to the Coal India subsidiary. Here we have seen a major consolidation breakout on daily chart. In fact, we have seen a major surge in trading and delivery volumes. So recommending to go long with support of 252, and this counter can head towards 277. Second trading idea, that is buy on AB Capital. Positive view on the capital market theme. And AB Capital has seen a consolidation breakout, has been holding the rising trend line. Longs are intact in the counter, so one can buy with support of 363. And this stock can head towards 398 to 400 marks.
We had a fundraise announcement just a short while back, so it's in focus. By the way, Inox India seems to be starting off positively today as well. And a couple of other stocks stand out from the broader markets. Of course, initial rates, so you're seeing gains of about 0.4% on the first few ticks for the benchmark Nifty 50, 1/3% or thereabouts. But watch out for that. Watch very closely about whether we hold that 24,000 at the start. Trident is looking okay. Metropolis is looking okay. LIC, by the way, gaining about 2% at the start. Coforge in the news is gaining as much as 2%. So those are the stocks that I'm looking at.
Okay, I just want to pull up what's happening with some of these brokerages, and pretty interesting before we go to Sharad. Look at the view on Dixon Tech, and now this is a story that NDTV Profit broke yesterday, where we talked about how Dixon is very close to closing that Vivo joint venture. Right, JP Morgan has a note now. They've maintained overweight with a target price of 12,700 on Dixon. They've said if the Vivo JV is approved in June, then we expect the operations to start after 60 to 90 days. That's in the third quarter of FY27. We are assuming it could contribute 11 million to mobile volumes in FY27 and 22 million in FY28. This could drive a 24 to 39% upgrade to revenue estimates over FY27-28 and a 13 to 18% EPS upgrade. This could take our fair value to 15,100. So there's a 23% potential upside. Dixon remains their top pick. They see two potential positive catalysts in the short term: the Vivo JV approval and announcement of the PLI 2.0 scheme. I just want to see what the stock is doing in the pre-open session. Of course, we saw that spike yesterday when we broke that story here on NDTV Profit. Parag bhai, Dixon.
So basically, see, as the stock has corrected, although it has gone up from 10,000 or below 10,000 to 12,500 now. So part of this is already played out. But I would say that the stock looks reasonably valued if the earning upgrade is so much, 13 to 18%, because right now it is trading at 52 times trailing earnings. So then it becomes, I would say, affordable stock to buy at 40 times 1 year forward or something like that, I think.
Chandan, on charts very quickly on Dixon.
Yeah, so it seems that counter has bottomed out, started to form the higher base. So with support of almost 12,000, one can look for 12,600 to 12,750.
Okay, all right. So that's the view on Dixon Tech. The stock made quite the recovery in trade yesterday. Let's see where it goes today. Let's go to our big brokerage call, though. It's 9:05, and it's time to talk about CLSA and what they're saying on LG Electronics. They've initiated an outperform, but I'll let Sharad come in and tell you all of the details there. Sharad, very good morning. What are they saying?
Good morning, Alex. Largely, there is a bullish stance coming in from CLSA when it comes to LG Electronics, and recently, a couple of more broking houses have turned bullish in this counter. They've given a target price of 1,830 rupees. That's around 15 to 20% of upside potential from current prices, and they've stated that there are some important margin tailwinds coming in, and of course, the company is having market leadership as well. Now, they're positioning this company as a key beneficiary of India's durable consumption cycle, now expecting to deliver a double-digit CAGR growth, especially in the large appliance category for LG Electronics, and the rising penetration and a shift towards premiumization that's going to aid the growth in this counter. Strong brand, broad product portfolio and deep distribution reach is something which offers more to this brand, and operating leverage is also likely to kick in going ahead, and that's why CLSA is bullish on LG Electronics.
Well, let's see again, and thanks for that, Sharad. Can we, if we bring up that price chart of LG for the last 1 year or maximum as the case may be, I think unlike a Hyundai, which kind of didn't do too much post the listing, in case of LG, it actually did okay on listing, but somehow has not been able to deliver post that, right? I mean, this year, look at that, just about 3%. And consumer electronics, not necessarily everybody has had a sad year, but LG is kind of meandering along. Is there merit in trying to look at an LG Parag Thakkar, or are there other better consumer players
so we
available?
already own it.
You own LG?
Yeah, we own LG. Right?
So why are you holding it right
So
now?
basically, see, after the, it's a very high ROIC business. It's about 60% ROIC business.
Okay.
It's a great brand in whatever, in TVs, in consumer durables, it's a great brand. Plus, they have a good export business, which is likely to double. So I would say that due to this time the summer was really hot. So what I am also expecting is that from this quarter, I think the earning trajectory should improve. Margins will also improve as exports improve, as their B2B business improve. So I would say that after listing, you are absolutely right. The results were very muted. But I think I am looking forward for this April, May, June quarter results to turn the tide.
Okay, so after April, May, June, the results may turn the tide on LG. Let's see, maybe an underperformer could start doing well. The other one, and I would want Chandan Taparia's view on this, is Bajaj Housing Finance. Look at this JP Morgan note, by the way. They are maintaining an underweight with a target price of 70. They say everything is great. I mean, things are looking very good. Medium-term ROE guidance is intact. The franchise is best in class, etc. But valuations are expensive, and that limits the stock upside. The point is, Chandan, it listed at a price northwards of 160, 170. It is now at 85. One brokerage house is saying the target is 70. I would love to know from you, are charts there indicating any kind of bottoming out, or difficult to say?
So it would be very tough because the counter is underperforming. If I look at the YTD basis, the stock is down by 10%. But in last 6 months also, we have seen a corrective move. However, it took some support near 72, 75, has been consolidating, but momentum is missing. And we have noticed that whenever it bounces, somehow it attracts the selling or liquidation of the long position. So as of now, if it sustains about 90, 92, then only the stability will be back to head towards 100. Otherwise, it can drip down to 80 to 77 marks.
Okay. Now, Amit, before we let you go, 908 prices have settled. If you had to bet on one key name for trade today or this week, which one would that be?
Coforge.
Wow. Okay. And what are the targets, Amit?
So I have given the targets, but let me just reiterate the targets. The initial target would be 1560, 1566, but then the eventual target could possibly be 1750 in the next couple of weeks if this momentum sustains. There is some tailwinds for IT sector, value buying, and all the good positive news that is coming through. So I feel that Coforge would be a big beneficiary of this, and eventual targets would be about 1700, 1750 levels.
All right. Amit, on that note, thanks so much for joining us this morning. Pleasure speaking with you as always.
Yeah, thanks.
Chandan, I want to ask you about a few of these realty names, right? Some of them are seeing pressure. Of course, Brigade, there's corporate action. It's trading ex-bonus today. So that's why you're seeing that big downtick. Godrej Properties, Oberoi Realty, both Bombay-based players, and seeing a drop today. Of course, this could be on account of the BMC action on water. What would you say on the charts, though? This is a pack that has gained quite considerably in the recent past.
Yeah, so we have seen a recovery in the Nifty realty counter, but again, the momentum and the follow-off is missing at higher levels. In fact, if I look at all F&O real estate counter, most of them are witnessing sustained cold writing. Even after some bounce, we have not seen any change in the data internal. So that's why it would be very tough for these counter to hold. So better to avoid. Counter like Godrej Property has seen some support-based buying, but again, the multiple hurdles are there. And same applies to the DLF and the Oberoi Realty. So better to avoid, let them correct. And I believe this sector will be having the limited upside with sustained cold writing. So let the sector and let the entire sector get some stability before going for the bargain hunting.
Are you seeing any kind of movement or opportunity in a DOMS, Chandan?
So you are talking about DOMS?
DOMS,
Yes.
DOMS, yeah.
Yeah. So here we have seen a corrective move by more than 5 to 10%. Immediate trend is a mix, I can say. Witness some recovery, but again, multiple hurdles are visible near 2250 to 2270. So may see a consolidative move, but one can go with buy on decline. If it comes near 2100 to 2150, one can accumulate for a bounce towards 2300 marks.
But what about DOMS? I mean, it's a FILA-owned entity, but there is an overhang of higher stake.
Yeah, there is an overhang. Otherwise, it's a great company.
Otherwise, it's a great company. So you wouldn't buy it because of the overhang, right?
Because of the overhang, yeah. And it is not too cheap. 14,000 crore market cap for 250 crore kind of PAT last year, so around 50 times. It's not too cheap for me to buy and to ride against that overhang that still there is 19% to be sold.
उससे तो अच्छा है जहाँ प्रमोटर खरीद रहा है वहाँ पे देखो.
So बजाज ऑटो बायबैक है 12,000 में.
HCL देखो, NCC देखो. बहुत है.
I want to share a story on DOMS when their listing was going to happen, and the company had come here to meet us, and we spoke with the management. So I said, now in the age of digital learning, all kids are doing e-learning and on their devices. What is the future of DOMS? And he said, my kid loses his pencil box every week. At least once in 2 weeks, I'm ordering a new pencil. Sharpeners are gone, scale is gone, ruler is gone. And that's why our business will continue to grow.
I don't know about the DOMS management's child, but if I did that, मुझे आराम से pencil box नहीं मिलता.
We are in the age of gentle parenting. People will buy it and they'll buy it on Blinkit, Zepto, Swiggy,
I would
wherever.
get second-hand stuff.
So that's it. Maybe that's a fundamental story on DOMS. Who knows? Okay. Godrej Property, Oberoi Realty, macro tech developers. We told you this would happen, right? Because of the BMC water cut and no water coming to these construction companies. Chandan, opportunities here to pick up any of these Mumbai-based real estate players?
No, I'll wait for some more corrective and the consolidative move because the entire sector has witnessed some bounce, but again, the trend has not changed on the short term. So better let them consolidate and correct to get any opportunity here.
Okay, Chandan, I know that you've already given us your picks, but I'm going to still push you to give us one more that you've not spoken about. Just about 30 seconds left. What do you like after the pre-open session?
Yeah, I'll focus on CMPDI, that's Central Mine Planning and Design Institute Limited.
But that's the easy one, Chandan. You've already given us that. Give us something more.
Yeah, so then I'll focus on capital market theme with the view that BSE can do well. Recently, it witnessed a corrective move, but that was bought. Taken exact support at 38.2% retracement of the entire swing. Major trend is positive, and the recent corrective move has given the fresh buying opportunity. So BSE could be one trade one can pick for. With support of 4,050, it can head towards 43.50 to its all-time high of 44.44 marks.
Okay, well, maybe the investor activity coming back could help. By the way, NSE on the private bourses side also has picked up some steam in the last month and a half, if I'm not wrong. Prices were at circa 1900. The last trades are probably happening at 2150 or thereabouts is what I'm told. So maybe there's some bit of traction in the exchange names as well. So keep them in mind. But here's how the markets are starting off this Wednesday morning. Remember, we've had 2 or 3 fairly decent days for the broader end of the spectrum, 2 good days for the large caps as well. And we are starting off mildly positive, actually fairly flat now, you would have to say, on the markets, but 24,000 or thereabouts maintain. Banks 0.17%, but the mid caps and the small caps is where the action is. 1/3% for the mid cap index, 0.5% for the small cap index. Advanced decline 1311 to 423. So it's not been a bad start for the broader end of the spectrum. Maybe I won't have too much to talk about, and therefore we'll quickly move to the mid cap end of the market, but bring up the large caps nevertheless to see what's happening. Yes, there aren't too many movers, winners or losers, if you will. So Trent about 0.78 or 0.79%. There is sales calls being given by an MNC brokerage house, but that is not phasing the stock away. Tech Mahindra, Wipro in the green. Indigo yet again 0.7%. No surprise there. There is a bit of a strength in Infosys as well. So IT is actually doing well for itself. ICICI Bank is giving support to the Nifty about 0.58%. So that's one heavyweight aside of IT stocks which is doing okay. What is not doing well? Bajaj Finance 0.5% lower. Eicher Motors 0.4%, Axis Bank 0.3%, and Reliance is under a bit of pressure. So yet another, what ICICI Bank is trying to do on the upside, Reliance is kind of thwarting that by correcting about 0.5%, if you will. So that's the long and short of it. Not surprised that eventually right now, Indigo seems to be ruling the roost, but on a very flat day and therefore hardly any moves. Tamana, you'll have better luck today with the broad end of the spectrum.
Very cautious, I would say, the markets are after that 2 days of run up, staying above 24,000, but just about. Nothing exciting happening there, frankly. Let's pull up the mid cap and the small cap and show you what the activity is there, if any. 0.25% up on the Nifty mid cap, not half bad. Small cap is faring better, 0.5% up. The advanced decline ratio is fine. So the broader markets really are doing all the heavy lifting today, if you may. Let's pull up the sectoral indices for you, and the impact of crude under 80 will be seen one way or the other. Nifty consumer durables are doing fine. I suspect LG has a part to play there. IT stocks are okay. Maybe you have select IT stocks which are doing okay, but everything less than 1%, right? India defense is fine. It's more green than red as far as the sectoral indices are concerned, but nothing great there. Biggest losers are Nifty Realty, 0.75%, and that's also possibly because their index is dominated with a lot of Mumbai-based realtors, and which is why you're seeing that impact there. Metal stocks are also taking a tumble today, but all within a very tight range. Maybe more interesting to look at what individual counters and stocks are doing and how they're performing this morning in the markets. So I want to start off with an LIC. Remember the NSE DRHP, so National Stock Exchange's initial filing for their IPO is expected to be there today. We've been talking about how LIC has a share and might not participate in this. That stock pretty much flat, 0.4% down. I want to look at what's happening with Coforge. Investor Day analysis is out on brokerages, 1.2% up on that stock. The Mumbai-based realtors, this is an important story. BMC has restricted water supply. So let's look at a Macrotech. Let's look at a Keystone. Keystone's doing okay. Macrotech is about 2.45% down. And Ajmera, Valor, and Oberoi. Actually, we should add a Godrej Properties also and look at what's happening there, if there's any impact. So all of those stocks between 1% and 2% down. Brent is under the $80 mark. So let's look at the crude sensitives. HPCL, BPCL, IOC are doing well, but not that well. The kind of knock these stocks took when Brent was at 100, you're not seeing the reverse in place. So let me put it that way. ONGC Oil India expectedly down in the red. Asian Paints, Indigo, it's good for them. So which is why you're seeing an Indigo about 0.76%. But for one of the top gainers in the Nifty, that's no great shakes, frankly. Let's look at Pine Labs and Dixon. Both had positive brokerage views, and those stocks between 2.5%. Now look at Yum Brands. So news yesterday that they're exiting their stake in Pizza Hut. That stock about 1% down. And Corona Remedies, that's a story that we're just breaking on the NDTV Profit ticker. Right now, you're seeing the impact there. Sources say Sepia Investment, an affiliate of Chris Capital, has sold its stake, and 7.1% of equity has changed hands in Corona Remedies. That's an NDTV Profit news break. So that's some of the action that you're seeing this morning.
Yeah, you've summed up quite a bit of it, Tamanna. I'll add a few names to the list. Cyient is losing ground today. down about 4% under tad bit of pressure. DOMS was highlighted to you at the start. This is selling by an Italian entity, Fila. The stock is now down about 3% or thereabouts. City Union Bank under a tad bit of pressure, 2.2% lower. General Insurance Corporation of India. Now this is a stock that was under pressure in trade yesterday, GIC Re, on account of the sale that is taking place. It is a further 2.3% lower today. FACT was one of the top gainers in trade yesterday, cooling off today. But what are the gainers? You have Newgen that's looking good. You have Tata Teleservices, 5-star business. You have Gillette India that's doing well. I just want to pull up the tire stocks as well. So pull up in Apollo Tires, pull up a Seat, as well as an MRF, as well as a JK Tire, Balkrishna Tire, all have a bearing on account of the crude oil prices coming off. Remember, the carbon black prices are an offshoot of that, and as a result of which you will have a benefit come through. Chandan, from the various stocks that we've spoken about, let me ask you about actually one that I have not mentioned, which is Tejas Network. It is up as much as 4% in trade today. Is there a trend building? Would you buy into this?
Yeah, so short-term setup looks quite positive. In fact, we have seen a run-up in last 3-4 months, and now after the consolidative and corrective move of almost 5-7 days, again forming the higher base, respecting well above its rising support trend line. So I believe this momentum could continue with support of 585. It can head towards 629 to 650 kind of level. So bullish stance, and the good part is it's formed a strong bullish belt hold kind of pattern on the daily chart, and the same kind of repetition could be there in the weekly in terms of long leg shadows. So positive view, looking for 630 to 650 marks.
Just want to just draw attention to the story that is on the bottom of your screen, and this is parachute prices that have been corrected. This is significant, of course, from the perspective of Marico. The stock is something that Parag Bhai tracks. So let me ask about this, right? It's a 16+% drop in coconut prices, or rather in coconut oil prices, which is on account of a fall in copra prices. Yes. So that's being passed on, but this accounts for 30+% of the revenue. So it's going to have a bearing on the revenue in terms of, just in terms of top line, but the margins will be intact.
Yeah, I think the margin improvement will continue in Marico. By at least 200 bips over next 2 years, because the copra oil prices have corrected from peak significantly. And remember, as I told you earlier also, that when copra oil prices went up significantly, it is a good time for branded players like Marico to gain market share. So they also must have not passed on. So this price increase, which is looking price reduction, which is 16%, looks very high, because they must have held on to their gains also, right? When the prices started dropping, copra prices. So I would say that Marico, I am a structural bull on Marico, so I would continue to buy if there is any dip due to this.
What are the charts indicating to you, Chandan? At close to 800, 808 levels, the stock has recovered from the low point of the day already intraday, and of course early minutes of trade. But what are the key levels that you would watch out for?
Yeah, so yes, I think the stock is taking some support at key juncture. Even the moving averages are supporting, but the only problem is sector has not seen a major momentum. It has been consolidating with multiple support near 795, hovering and flirting near 50 DEMA. Multiple hurdles are near 830, so likely to be in a range. One can look at support near 794, hurdle at 830.
Okay. What else? Let's bring up some individual names and try and see what's happening there. Sudarshan Chemicals, there was the promoter raising some stake while exercising of warrants. Is that stock reacting? No, not quite. Kajaria Ceramics has proposed a buyback of 21 lakh shares at a price of 1380. That stock is up about 1%. Kim's has launched a QIP. The floor price is set at 771. That stock is 1.39, nothing too great. And promoter buying was seen, like we said, in HCL Tech, NCC and Everready. Let's see if there is any kind of reaction into any of those. HCL Tech, after the 3.5% uptick yesterday, up on the 0.5%. NCC, 2 flat, as is Everready, maybe 2.65% higher actually. Everready is not doing too badly. for itself. Okay, metals are under a bit of a cloud of late, and we spoke about this with Parag Thakkar yesterday. Parag bhai, aluminum stocks, because the prices are falling, do this give you an entry opportunity, Hindalco and Nalco, because of the correction? If so, what valuations would you be comfortable with the Hindalco? I know you kind of like that over Nalco.
So Hindalco below 950, as I mentioned yesterday.
Below 950.
And JSW Steel anywhere close to 1260 are my great buys.
JSW Steel?
At around 1,260, 1,270.
So it is at 1,271 right
so it's a buy on from medium to long term perspective.
Why so?
Yeah, so basically, I'll tell you, this is a company which has done everything right, which has to be done in metals. Okay, 62% of the products are value-added products. Now they are backward integrating also. Plus, they are adding capacity at lowest capex per ton, and they are operating at lowest opex per ton. So everything which has to be done right, this company is doing right. And now they are expanding from 38 million tons to 50 million tons. And through partnerships with JFE and POSCO, they will scale it up to 80 million tons by FY32. And Jayant Acharya, the CEO, has said that 9,000 rupees per ton EBITDA is now a floor. So imagine if you make 80 million tons, you sell 75 million tons, and you make 9,000 rupees, which is a floor. It will only improve from here. In fact, this Motilal note today is saying this can go to 14,000 rupees per ton EBITDA because of the value-added products and backward integration. So this can be a 75-80,000 crore EBITDA company. And with import duties in place, I think the sector should get 9.5 times EBITDA.
Okay.
So this market gap of 3,10,000 crore today can be 8 lakh crores in 5 years.
Interesting.
So from a structural long-term perspective, this is the only company where I say that I don't look at too much at steel prices before for buying JSW. It is an efficient company you are buying, expanding at a very good, and now they will generate a EBITDA of 35-40,000 crores every year, and capex is 25-30,000 crores every year. So net debt also will not materially rise. Plus now they are going to get this 7,800 crores from JFE, which will reduce their debt to 45,000 crores, which was 80,000 crores a few quarters ago.
Yeah.
So I think everything is in good place in this company and are doing all right things.
I think over 12 months and over 5 years, I think JSW Steel has shown that despite it being technically a commodity company, if you will, you can argue steel is, and JSW is no longer that, but 5 years, the runway has been pretty good for that.
So I will say it is a rare commodity compounder.
Rare commodity compounder. Great. Parag Thakkar, thank you so much for joining in today. Chandan, great having you as well. Really appreciate your time this morning, gentlemen. Okay, Goldman Sachs has turned more constructive on India's external position, cutting its current account deficit forecast and expecting a balance of payment surplus backed by strong remittances, service exports and RBI-led inflow measures. In fact, they said that these were amongst the reasons why India's numbers thus far haven't looked all that bad. What's coming up though? That's the key question. And Santanu Sen-Gupta, Chief India Economist at Goldman Sachs, joins in with more details on this. Santanu, great having you. Thanks for taking the time out. Neeraj here, good morning. And I was reading some bits of your report with interest. And I want to start off by asking what you've highlighted in the opening 5 lines of your paragraph. You say that going forward, higher oil prices, this is on June 14th, by the way, viewers, that on higher oil prices will likely widen India's CAD, current account deficit, but the deterioration is likely to be less severe than in the past energy shock episodes. We are already starting to see some bit of this cool off in crude prices as well, Santanu. So juxtapose what you believed on June 14th with what's happening to crude prices currently, and therefore tell us what your hypothesis is.
Sure, thanks, Neeraj. So the short answer is that it's got even better, right, with oil prices coming off. So when we wrote this report, we still had oil assumptions at around $90 a barrel. Our commodity team has already cut their oil forecast numbers towards 85, and then in 2027 into the 70s, right? So the price effect of that is already going to be better than what we have anticipated in this report because this was written earlier. But the point that we were making was that, look, there are 2 or 3 things that we are seeing on the current account front. A, your remittances have turned out to be better than what we anticipated. So when the shock started, we thought that remittances will be slower. In fact, in that quarter, it was better. You'll probably have a little bit of cool off, but even with that, it's a pretty strong remittance number. 2, we are finding out that India is generally able to shift quickly into alternate fuels and the sensitivity to higher oil prices have increased, which means that you're destroying demand with respect to oil and being able to shift into other energy sources very quickly, which also explains the resilience in the economy in the first 3 months of the conflict. And three, in general, your trade is again starting to recover. So the Middle East trade exports had completely collapsed in the month of March, and from there you're starting to recover. Now, if you put on top of that that oil forecasts are lower, I would say that the risk is that the current account deficit is narrower than what we have projected in this report. And then there's the whole capital inflow story, which we can get into later.
Shantanu, hi, morning. This is Alex. You've also spoken about the rupee, and I think in the run-up to today, we've had conversations about the real effective exchange rate and the fact that at the bottom, it actually had slipped below 90. And so therefore, what you're seeing concurs with what other people are also speaking about. But you've also mentioned that you don't anticipate that the rupee will appreciate materially from this point. It's already moved from 97 to 94.3 as I speak to you. You don't anticipate that it'll go much further?
Yeah, we don't anticipate the rupee to appreciate very much. And the reasons are very clear in our mind. So because you brought up the RER, we think that the rupee is pretty fairly valued on a trade-weighted basis. But any renewed dollar inflows, which will happen due to the FCNRB related inflows in the next quarter, and then further the ECB flows that continues up to December of this year, we think there will be a reserve accumulation that will happen from the RBI and some unwind of the short forward book. Remember, the RBI is running around $120 billion nearly of the short forwards on the spot reserves of about 680. So when these dollars come, we think that the RBI will be knocking off some of these short forwards at least over the next 3 to 6 months, which is why we are not anticipating a very large appreciation in the currency. When the flows come, how the RBI deals with liquidity effect of that is another question. But yeah, I mean, our call is that you can get probably a spike up in the rupee towards the early 90s, but we do not expect it to stay there. And we expect it to settle in the mid 90s over the next 3 to 6 months.
Shantanu, hi, good morning. Tamanna here. Just wondering, what is your internal figure about the amount of capital that India can mop up because of all of these new measures, whether it's FCNR and other measures that the government has also announced? Because there are various figures doing the round. Wonder what your number is.
Yeah, so wide range on the FCNRB number. I think a narrower range on the ECBs from the PSUs and the debt flows. So the way we are thinking about this is that the total number is about $60 billion for this year, and then there'll be some more coming into next year. Our sense is that the FCNRB could range anywhere between $30 to $50 billion by our estimates. The ECBs could be around $10 to $15 billion. And if the taxation changes, which we think are very important and quite critical for India on the GSEC, if that means that India gets included in the Bloomberg index into next year, that could mean about $15 billion of passive inflows. But that is more of a next year story than a this year story in terms of calendar year, the next year story than a this year story. And on the back of that $15 billion of passive inflows, you will have some active chase. One of the points we have been making is that the yield curve in India is quite steep, especially at the ultra long end. So if you look at a 30-year bond, like 750 plus, we think there can be interest from the FIIs once they get around to the fact that there is stability in the INR. The carry can look quite attractive, especially with the taxes now being taken off.
Okay. And how low do you see the Brent going? Shantanu, has come off quite dramatically last few days, currently below 79. Do you see it going much lower or going back to pre-conflict levels?
Look, our commodities team has changed their oil price forecasts. So the Q4 of calendar 26 is now at 80, and they had 90 earlier, so it's $10 lower. And 75 is the range now versus 80 earlier for 2027. Our sense is that as oil prices come off, there will be some demand in terms of restocking of inventories. You have had inventory decumulation around the world. We think that there'll be some restocking of inventories that happen, but prices, in our view, should be around that $80 range by the end of the year.
Shantanu, in the opening answer, you spoke about 3 points is that remittances have turned out to be better, but more importantly, the number 2 and number 3 point that India is able to shift to alternate fuels rather quickly, which kind of explains the resilience in the economy, which is a surprise because one didn't anticipate India to be able to do that. So was that a surprise to you as well, part 1? But part 2, more importantly, you mentioned that you wanted to talk a little bit about the capital account story and what's happening around there, if you want to talk about that a bit.
Yeah, look, on the current account, what we figured out was that in general, if you compare the earlier elasticities of oil demand for India versus now, at $80 or higher oil prices, you are knocking off some of the oil demand and you're able to, crude demand, and you're able to shift to other power. I think we have seen it pretty much over the last three months or so, right? I mean, there was no power. Although power demand was quite high, there was no power crisis in India, really. And the fact is that we are just able to produce from both thermal as well as alternate other fuels. And we are not really dependent on power production from oil or gas. So I think that's been the main difference versus other economies where, you've had to have some power demand destruction as well. In terms of capital flows, well, I pointed out the range of estimates. We think that these swaps will be the concessional forex swaps that the RBI is offering both on FCNR and the ECBs is very well rounded, and it is coming as an overall package rather than piecemeal, which is the great thing. So, this is very clear in our mind that this is the way the RBI is thinking about FX, and it doesn't need to use rates for FX defense, which is the point that we have been making for the last 3 months, that the RBI will be concentrating on inflation and rates will be used for inflation rather than as an FX defense, which you have seen in some of the other countries in the region, including Indonesia.
Interesting. Shantanu, I want to ask you about what you think about the government's finances based on everything that we've seen in the very recent past, right? You would have made certain assumptions mid-conflict or even maybe a couple of weeks back, and assuming that the crude oil prices correct further from this point or even stay below the mark that they are at right now, then things might change from the perspective of how the government will be able to spend in the rest of the year. There's that sticking issue, the fertilizer subsidy as well, and the expectation that might have to be amped up. But how do you think that they will spend in the rest of the year?
Yeah, again, what we thought in the month of March versus now, things are getting better. We have learned that the government, through the month of March also, in the first month of the conflict, ultimately stuck to the fiscal consolidation number. Because you brought up fertilizer, we had anticipated a higher spending on fertilizer subsidies. Just a case in point was in the 2022 cycle, post-Russia-Ukraine, we ended up spending almost 0.5% of GDP higher on fertilizers. And we were thinking that, you will need somewhere in the region of, 0.3% of GDP higher on fertilizer subsidies. But by now, even before oil prices came off, urea prices have actually come off materially. Globally, and therefore you might not have to foot as large a fertilizer bill as we would have anticipated earlier. Now that said, the fiscal will have to be used. I'm not by any ways meaning that you're completely out of the woods. It's still a relatively elevated oil price, but much lower than what we were anticipating 2 or 3 months back. And the government will be careful about using their fiscal resources. But what I'm trying to say is that it just opens up a bit more room, given that urea prices have come down, and you'll be able to deal with the fertilizer subsidies better than what was the anticipation.
So on the fiscal side, it's looking better. On the monetary side, Shantanu, and here I'm talking about policy, right? And of course, we're heading into the decision for the Fed, but more specifically on India. What is your base assumption for inflation and therefore for monetary policy action in this cycle, and when do you anticipate rates will go up?
Yeah, so on inflation, we are exactly in line with where the RBI is, in the early 5% on average for fiscal year 27. We think inflation will head towards 5% on average in the next quarter. And by the end of the year, in the October-December quarter, we think it'll be anywhere in the region of 5.5% to 6%. There can be a slight bit of downside risk now that oil prices are coming off. But our core view on inflation was based on core goods inflation being higher because of product prices, not so much oil. And that's refined products, that's petchem products, and so on. That view is not really changing materially for us. So inflation, we think, will still head towards, at least around 5%. And therefore, we think that the RBI will have to hike, but hike only twice. In October and December is what we are penciling in, 25 basis points each. We think that the OIS pricing in the middle of about 4 or 5 hikes, or it had almost gone beyond 5 hikes, was too much. And somewhere in the region of 2 to 3 hikes was more appropriate in our view, given the inflation forecast. We have in our forecast only 2 hikes in October and December, which takes the repo rate to 5.75 by the end of the year.
Interesting. All right. Shantanu, thanks so much for a very engaging conversation. Pleasure speaking with you as always.
Thank you very much.
Right, it's time for a very quick break, but on the other side, we've got Arnab Banerjee, who's the Managing Director and Chief Executive Officer of SIAT. It's a great time to be speaking to him, not just because of what the automotive outlook is, but also crude oil prices coming off and what the business outlook looks like. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Right, let's keep the focus on corporate action. You're seeing the Nifty at least staying steady above the 24,000 mark, but no, I would say exciting moves, strong and steady. Nothing to complain. CEAT in focus. A number of reasons. The company is, of course, set to benefit from healthy demand across truck, bus and passenger vehicles. Then there's the GST cut, which took place. Replacement demand is there. Crude prices are down. So much to unpack with Arnab Banerjee, MD and CEO of CEAT. Glad he's on the show with us. But Varsha joining in first to just set up that conversation quickly. Varsha.
Well, let me start with what's working for the company. You have strong demand in FY26 supported by GST cuts. A truck, bus radial is seeing double-digit growth. MHCV replacement demand is expected to grow in high single-digit. Well, but the concerns are the higher raw material prices like natural rubber and crude derivatives may impact margins. Companies expecting commodity-led inflation to rise in H1 FY27. And how is CEAT responding to this? They have already taken 5% price hike in March and April, and other 5% hike was planned in May and June. And they are also focusing on international expansion, EVs, premium tires, digital electrification, which is gaining traction in all other major OEM tie-ups.
Arnab Banerjee with us, MD and CEO of CEAT. Mr. Banerjee, great to have you on NDTV Profit. So much to unpack. Let me start with what's most current, right? When you're seeing those Brent prices tick down, how much of a relief is it to you? And how quickly does that relief pass through?
So the relief is definitely there, but pass-through is going to be difficult because we are already covered up to July and most of August. It's not just Brent crude, which is one part of our raw material cost. The other part is natural rubber, which is at a record high in domestic market and is showing no signs of coming down. So I would say the inflation is going to stay bad even in Q2. So the entire first half of Q1 and Q2, we don't see much respite from the overall inflation, which is 25% plus on a raw material basket vis-a-vis March exit price. So that is humongous, which will lead to erosion of our margins.
So obviously some of that price rise has been passed on, about 5%. How much more can you pass on? And when you say erosion of margins, to what extent do you expect that erosion?
So there are two aspects. One is the price increase on finished goods is delayed vis-a-vis the raw material price hike. It is going on with a lag. And also, so far it has been inadequate. So we expect a price increase of 3 to 4% immediately in the next 15 to 20 days in replacement market. In OEMs, our prices are indexed to raw materials, so we expect to get a double-digit price hike from the OEMs as of 1st July. In international business, also, we carry an order base of 30 to 45 days. So to that extent, the passing of the prices is delayed. We expect to pass on another 3 to 4%, just as in the aftermarket in the next 15 to 20 days.
Interesting. Okay. And so after this next round, Mr. Banerjee, of price increases, will you be done then? Or do you anticipate that you will have to trickle that through heading into the next quarter as well?
Definitely more price increases will be planned through July, August and September. We are not yet done even after the immediate 3 to 4% in the next 15 to 20 days. To maintain margins, we have to match the raw material price hike. Right now, we are just trying to catch up with the per unit price, but to maintain margins in terms of percentages, more price increases required. We may see cooling off of raw material because Brent is down. So we'll have to calibrate our increases in July and August vis-a-vis how we see the petroleum-based raw materials track after August.
Okay, so the other question is, of course, seemingly based on the traction that is visible in the Vahan data and what automotive dealers are telling us, is that the demand on the ground, Mr. Banerjee, is robust. So from the OEM side, what is the kind of demand that you're seeing? And therefore, give us a sense of that, and also absorption of the prices in the replacement side.
So I'll answer the second question first. Absorption of the prices in second quarter will have to be seen, because second quarter, when the monsoon sets in, usually is a lower demand quarter than the first quarter. That's number one. Number two, with 10% plus price hike happening by end of first quarter, we expect some moderation of demand in quarter two vis-a-vis quarter one in the aftermarket. The overall demand situation is very robust, I must say. Quarter one is a summer month, and aftermarket demand has been as good as quarter three and quarter four of last year. Coming to OEMs, we all know that OEMs are showing very high growth in 20s and 30s in various categories, starting from two-wheeler to passenger to truck bus MHCV markets. So we will see the demand from OEM continuing in the month of June and also in quarter two. So that demand is also going to be robust. Internationally, barring Middle East, we have a pretty good order base. So demand-wise, even though there'll be a moderation in aftermarket in quarter two, I think overall we are sorted. Our issue is margin management because of the raw material price hike.
Mr. Banerjee, I'd like to follow up on the question I asked, and I don't know if that clear answer came in, but allow me to ask it again. You had mentioned in your response to us that you will see some erosion of margin because there's a lag in passing on the quantum of price increase. What is the extent of erosion of margin you expect?
Well, we don't give a specific guidance, but it will be significant because the price hike, as I said, is 26-27%, in excess of 25% definitely vis-a-vis March exit price, as we see it in July and August. So the price hikes at best would be 10% by end of quarter one with a lag. So the margin erosion will be significant.
Until what point do you expect that pain to continue? Because like you said, while crude prices have come off, rubber prices domestically are still zooming. So do you expect that pain on margins to continue, say, for the rest of this financial year?
Definitely, we see it continuing up to the end of first half. And thereafter, it depends how the crude prices cool off, if they cool off. And the industry has shown a lot of evidence in the past that when the raw material prices drop off from such a steep high, the industry recovers its margins. I'm very confident that CEAT will recover its margin once the raw material starts cooling off, hopefully in half two.
Mr. Banerjee, Neeraj here. Good morning. You did mention, though, just a follow-up on this margin before we move on to the other things. You did mention that through September, you will take price hikes to not just recover the unit cost, but to protect margins. But at the same breath, you also said that the drop in margins will be significant. Could you define that significance, sir?
Well, as I said, we don't put out a number.
Broad color, sir?
See, we have been doing about 13 to 15%, and we always maintain that we would like to maintain the margin in a very narrow band, but it will be far from that.
I hear you. Okay. Well, all the best with the price increases and the acceptability, because that will help you do that. But kudos to you, Mr. Banerjee, that despite all of this happening, not only have you gained market share in replacement and OEM demand in India, but I believe in your Vision 31 statements, you've spoken about how international as well, the business has grown meaningfully for you, about 20% of revenues as well. I would love to know what happens beyond this uncertainty of FY27. Let's say it goes at par with what you're thinking right now, and the conflict settles. What happens post that? Talk to us about this Vision 2031 and a bit of a roadmap there, because 2031 is 5 years away. Don't quite know what all will happen until then. So just a bit about what happens in that interim.
So in the interim, we are very bullish on domestic demand, both OEM and aftermarket. And we know in a span of 5 years, which is about 20 quarters, 3 to 4 quarters will not be good. At least 3 to 4, maybe 5, 6 will not be good. We have started this year, first quarter and second quarter being part of those 4 to 6 quarters that we thought will not be good. So overall demand will be good in domestic aftermarket. There's the penetration is still very low, and with the Viksit Bharat roadmap of GDP growth of 7% plus, even 6.5% plus is good for giving a boost to all category of tires in domestic aftermarket specifically. Coming to international businesses, it's a very big market. I think we have found a good value positioning for the brand across categories, whether it is specialty tires, which is farm and off-highway, whether it is four-wheeler tires or truck bus radial tires. We have found a very solid positioning where we make good margins. It is margin accretive. So when I say margin accretive, it is higher than OEM and replacement margins in domestic market. That saliency today is 20%. And with Camso acquisition, it has gone up to 24%. And gradually we'll inch it up to in excess of 30%, more towards 1/3 of the company, which is the entire basket is margin accretive. And the Camso acquisition, which is there, which is yet to play out because we are in a transition phase. It's a premium brand play. And not only for the sake of Camso, but the overall basket, we would like to premiumize in the domestic market also, which will be margin accretive through FY26 to FY31.
Got it. So in which case, sir, just trying to understand, I was looking at your history from FY15 till FY26. You haven't broken the 14% margin threshold. Yeah, 14% in select years, 13%, 9%, and obviously the business is such. Do you envisage that by that time, because of the international business, etc., you can be at the next plane of margins? And from a 15,500 odd crore revenue run rate, the Vision 31, does it have a number or a range in mind for the revenues as well?
Well, the revenue is a function of market shares, actually, whether it's domestic or specific countries in international market and OEMs. So we are market leaders in two-wheeler. We would like to be market leaders in four-wheeler segment as well. We are not yet there. And we would want to be having a respectable share in MHCV segment, where we are actually a small player with 10 to 11% share in the aftermarket. So if everything adds well, and the Camso itself is a $1 billion prospect, the Camso brand, out of which maybe we'll harness about 300 to 500 million in the next 5 years. Our specialty business plus Camso business, which is a highly profitable part of the business, should yield about 1 billion out of wherever we reach in FY31. So we are looking at aggressive growth, definitely. We'll have 4 to 6 bad quarters in that. And to answer your question, we are seeking to improve our margin profile of the basket because of international business, because of Camso, because of OHT, because of the entire international business, as I said, beyond the 13, 14, 15 level, which we have delivered so far.
Okay, so the new trajectory, therefore, the new range can be upwards of 15%, maybe even heading towards the 16% mark.
See, we are looking at a significant erosion of margin right
now.
The wrong time to project in the future.
I understand, Mr. Banerjee, you've been forthright, so I'm assuming the next time we speak when it's better times, you'll be able to give us a perspective on that. I do want to ask about, and you have significant capacity right now, right? In multiple facilities here in India, you have 6 manufacturing plants here. So what is the utilization as things stand? Because you pointed to robust demand, and at what point will you have to bolster capacity?
Well, if you have noticed, for the last 2 to 3 years, we have not announced any major blockbuster 5,000, 6,000 crore expansion. And the reason is that we are continuously expanding. You are right, the demand has been robust. Our capacity utilization has been very high, barring a few categories. Whether it's truck bus radial, it's in the 90s. High 80s, 90s, whether it's truck bus radial, whether it's four-wheeler passenger, whether it's two-wheeler. And we are in expansion mode in all. We are also in expansion mode in OHT and farm. In the Ambernath facility, our Nagpur facility of two-wheeler is under expansion. Chennai facility of four-wheeler is under expansion. We have an expansion going on in truck bus radial in Chennai. So we do all of this is brownfield. So we don't expect a new greenfield expansion in anytime soon.
I remember this is now in conversations that I've had 10 years back or more with SIAT when the company was toying with the idea of international presence with regard to manufacturing facilities. And of course, the Sri Lanka facility is there. But beyond that, is there anything on the anvil that you will look at that you are considering right now?
Sri Lanka, what you mentioned is a SIAT JV facility.
Yes.
Now we have another facility by way of Camso in Sri Lanka. And we are not looking at setting up any manufacturing facility outside of India at this point of time in the near future.
Okay, Mr. Banerjee, we wish that crude prices come off for the current account deficit mainly for the country, but it's great for companies which are so crude sensitive and rubber sensitive like yours or paint companies and others. We wish you all the best for FY27 during the tough quarters as you suggested, and may 2031 be even better than what you're thinking of right now.
Thank you so much. Thank you.
It's a pleasure talking to you today, sir. Well, that's it. And a comprehensive interview. Guys, it's interesting what they are saying, that there are pressure points, but thus far, the OEM demand is strong. But he was candid enough to say that with the price hikes taken, replacement demand may impact to hoga. 10% hike.
And he said significant erosion, not once but several times. So appreciate the candor of any management who comes and speaks about it. And I think it's important to understand that we look at the daily price of crude. And of course, markets react that way. But for a lot of companies, the hit that they have taken the last few months will stick around. The stickiness of that inflation in the system will stick around for a bit.
And so Amit pointed out with regard to the OMCs, but I think it also has a bearing on all manufacturing companies because there will be inventories that are bought and kept. And so therefore, to that extent, even if the prices come off, it could well be till the second half that this problem persists.
Yeah, OMC is a lot more sensitive, but some of the others too sensitive for sure.
Yeah, just to reiterate the other big story that we broke this morning, and Nimit did that story at 8:40 a.m. Glad to see that it's been picked up across the board. But sources are telling NDTV Profit that NSE is likely to file its DRHP today with offer size likely to be 5% of equity capital, reported first at 8:40 a.m. today. But I think the important part of that story was that LIC will not participate in this entire issue, which I think is also telling you that it's the kind of confidence that LIC has in the company. They don't want to exit over
And
here.
it's a considerable stake if you think about it. 10.7% stake of 5 lakh crore market capitalization is a large amount.
Yeah, but you want to play India. How can you not play it via BSE NSE?
Yeah, and you're already there at great at a great entry point as an investor as far as LIC is concerned. All right, we'll take a very short break, but all of the action continues on the other side. We're speaking with Ramesh Mantri, Chief Investment Officer, White Oak Capital.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit.
All right, well, back with India Market Open right here on NDTV Profit. After a while and after a really long time, Ramesh Mantri, Chief Investment Officer at White Oak Capital AMC, is with us on a markets conversation. Ramesh, great having you. It's a complaint, but also a pleasure to have you because it's been a really long time.
Thank you. Look forward to it.
Yeah, we too. And Ramesh, at the outset, how do you feel about the mood, the sentiment right now, which is a bit more upbeat with the set of tweets that have gone in from Donald Trump and Iran, etc. If this indeed sees the resolution, do the markets get back to normalcy behavior, or the proof of the pudding will be what happens in Q1 and Q2 results?
I think, this, peace agreement, if it goes through, is unequally positive to India, considering we are a large importer of energy and also the pressure it had created on our FX, right? So I think one of the key risks to Indian growth story, gets managed out now, so I think that's unequally positive. And I think markets will reflect that, are already reflecting that. Actually, the March quarter results were quite good. But of course, those got hijacked by this development. So I think we can move on from this. There are other issues. For example, the AI story, where we are not a beneficiary. In fact, there's a concern that India gets harmed because of the AI developments. So that remains. But this pressure because of energy costs and also the fact that we do a lot of business in Middle East, Indian companies There's a large Indian diaspora in Middle East that sends out remittances to India. Plus, a lot of Indian businesses do. We have a lot of business presence in Middle East. Those issues are taken care. So I think it's clearly a very positive development for the Indian economy, and that eventually gets reflected in stock prices.
Ramesh, I don't have that complaint because I was lucky enough to speak with you not too long back. Alex here. Very good morning to you. But I do want to ask about what your strategy has been through this conflict, because now it looks like things are settling down. But did the market provide you with a lot of opportunities which you might have exercised to shop in the names that you have highlighted? Did you find some new names that you might have maybe kept on the shelf and said that you would look at when the valuations look more attractive? What has your experience been?
Yeah, that's a good question. And interestingly, for the first time after many years, we got to invest in a number of consumer names.
Okay.
So suddenly we figured out that one basket got attractive because of a lot of concern on how energy prices impacts consumption. So that's a basket that was delivering good results in March quarter, had corrected, and it's actually an opportunity for us to deploy capital there.
Okay. This conflict has also, of course, highlighted a few advantages, opportunities, but even before the conflict, certain narratives were being created. And one of that had to do with artificial intelligence, which continues to be the case, and the implications that has for Indian IT services. Now, a lot has been said over the course of the last several months, but I haven't had the opportunity to ask you what you think about this. Can you paint all of them with the same brush to say that, their time is ending? I think their obituaries have been written multiple times. What do you think, particularly in the context of the spending right now on AI?
Yes. So first I think valuations have corrected in technology sector a lot in India. So at least there is no cause for concern from a valuation perspective. I think the concern remains on how fast the AI technology landscape is evolving. Practically, there's new technology, new developments, new application areas emerging every week. So you're in a space where things are changing on a weekly basis. New models are being launched, efficiencies coming through, new applications are being found. So it's hard to take a view, forget about what happens in 3 to 5 years. Hard to say how this landscape looks 6 months out. So our stance is, while valuations have corrected, there's a lot of fundamental uncertainty on how this space gets impacted. I think it will be more difficult for larger companies to evolve to the changing landscape. And even some of the biggest companies, including Chandra of Tata Group, has called out that there's going to be a lot more agent deployment and a lot less people deployment in the business. So clearly, it's an evolving landscape. I think smaller and mid-cap technology companies, which are a lot more agile because they are smaller teams, probably can pivot to a different technology era. But it's going to be a lot more challenging for the larger tech companies.
Want to come to you, Ramesh, with a little more detail on which of these technology companies do you think is going to make the cut. But allow me to just play out a bit of the interview we had yesterday with HCL Tech and Sarvam after that major stake of 10.46% was taken, and how India is also trying to develop its own AI play. Let's listen in to what both said.
Firstly, we will build larger models. I have put it out openly as well. We'll build models, especially for coding, cybersecurity. These are areas where there's an extreme need for sovereign control, and they will be much larger than the models that we have seen. And this funding round enables us both from a compute perspective and also from a point of view of attracting talent into Sarvam, right?
The enterprise architecture is going to be much more hybrid, and there is a need for frontier model capabilities. We have very good partnerships with other frontier model companies, which we have built, and it's going to be a collaborative solution that we will build. But Sarvam gives us an edge in really driving the private SLMs and sovereign AI capabilities.
So, Ramesh, not to ask you about specific stocks because you may not want to respond on that, but between the top tier and the mid cap, where do you think the agility lies on this AI adoptability?
Yes, so one is, first let me comment on Sarvam. I think the unicorn status of Sarvam and the fact that it's being led by traditional IT services is a huge positive move. I wish India sees a lot larger investment in frontier models, and the incident that has happened last week with Fable. Suddenly, Anthropic had to cut off because of US government concerns. Tells you there's a sovereignty issue with frontier models. And I think India, with its frugal engineering, can do a lot better in creating a lot more efficient models, which is something China has demonstrated. So I think that's one significant positive, and I'd like to see significant more investment in this domain, both private and public sector. Now, coming to companies, I think the challenge with larger companies is when your workforce, which is 3 lakh to 5 lakh people, I think turning around them and being very generalist, broad-based platform where you're getting hit across the board versus smaller companies, small caps, mid caps, where your headcounts are, let's say, 10 to 30,000. You're a lot more agile, you're a lot more specialist. You can figure out areas where you want to focus on AI, building AI capabilities, and focus your energy there and build capabilities there. So it's much easier for the smaller mid cap companies to evolve, build capabilities in their limited domains versus broad-based generic larger companies where they are going to fight a battle, across the board, and you are going to get hit, by AI challenges. So I think as of now looks like the environment is more suited to smaller and mid-cap companies.
Okay. Ramesh, the other thing is the trader's mindset will be that if crude prices come off, look at the ones which got bombed out completely because of higher crude prices, then see where is it that the value may be a bit more sustainable, and those are easy investments to do. We were talking to some auto companies the last few days, and one of them said that if everything goes fine, FY27 could be the best year in history for the auto industry. Siet was talking about strong demand as well. So I'm inclined to ask you, do you like autos at the current juncture, looking at the demand supply as well as the fact that crude prices also have come off?
No, I think auto is well placed. I think, see, the benefits of the last year's income tax cut and GST cut, if we have to call out one sector that's a direct beneficiary of those big tax cuts, both on income tax and GST, is auto. And clearly that's a sector that's going to benefit. They're going to probably face some margin pressure because, metal prices are still much higher when you look at aluminum, copper and all. But I think fundamentals of the sector look good. So auto seems to be in a sweet spot, for the foreseeable. At least this year, auto outlook remains very good.
I'm just wondering, with crude prices coming off, how soon do you think we see a reversal in the kind of weakness in Indian markets as well? To be fair, the slide has been much sharper than the way that we're climbing back, despite crude prices moving so effectively. Do you think that gains are yet to be seen, or now we'll just meander along at this pace?
No, see, I think the big outflows out of India have happened on the AI trade.
Yeah.
So if you track the AI basket globally, including countries which are significant exposure to AI, including countries like Korea, Taiwan, China, US, the money flow has, and this is a global mega trade, by the way, where money has moved towards AI names and AI countries. So that's a narrative that's not changing. So I think the AI narrative has to get punctured, right? And then I think the India story on a relative basis will get more attractive.
Ramesh, you're obviously bottom up and you're looking at stocks on an individual basis, but I'm wondering whether a thesis has been built as you sit in the middle of June with the conflict now over. You've probably gone back to hopefully now with the conflict over, you've probably gone back to the drawing board to say what the key opportunities are for the rest of 27 and then heading out into 28 as well. So can you tell us what your thinking is with regard to the Indian equity markets?
Yeah, so I think clearly, as I said, March quarter results have been quite strong. The markets got hijacked by the Middle East developments. And as we can normalize and mind you, normalization will take at least one more quarter. So even the September quarter will get impacted because of inventory levels. So we're looking actually at more at a second half where things should get normalized if nothing goes wrong from here incrementally. And I think the sectors where we see fundamentals are strong and valuations are attractive are, one is financial services, which is a domestic sector. Pharma and healthcare services, again, very strong fundamentals. Valuations are reasonable. And the sector that can be a dark horse should have done very well, but for a number of developments because of the income tax cut and GST cut, and mind you, next year there's also the 8th pay commission, right, is consumer sector.
Interesting. Ramesh, I like to ask you about your strategy on your multi-asset fund. And we've spoken about this in the past as well, because a lot of people choose to play that commodity play differently, and you've been pretty nimble on that. So I'm wondering what your strategy is in that with regard to precious metals, specifically on gold. What is the outlook?
Yeah, so, first, let me give the easier outlook, which is the silver. Silver, our models are, recommending zero exposure. Our models are also recommending lower exposure on gold. But remember, we need to at least have 10% exposure to commodities. Honestly, a few months ago, I would have loved to own crude, but that trade is gone, right? It's no longer in our domain now. So we are now only exposed to gold, and we are at the lowest possible exposure we have to maintain as per the regulatory guidelines for the multi-asset. If I had more freedom, we would have had lower exposure to gold also. I think the asset class that is more interesting in India at this point is equities.
Okay, fine. All right, that makes a lot of sense. So, just to complete that point, Ramesh, why is it that you are so negative on gold?
No, see, it's okay. I am not negative on gold. We have an asset allocation model.
Yeah, the model. Yeah.
Yeah. See, when we look at relative valuations of different asset classes, including equities, fixed income, and gold, clearly the model is indicating that first of all, equities are attractive the most, then fixed income, the third is gold. Mind you, more than 2.5 years ago, we used to own 24% of our portfolio in gold. So it's not that we have not had large exposures to gold when gold was not popular, but now as we speak, our models are indicating lower exposure to gold.
So since
gold is the fear trade. Gold is the fear trade, uncertainty trade. And as we speak, hopefully things are getting better in the world.
Okay, so the fear is easing. You're most interested in equities. You find equities the most interesting asset class. So what is December 2026 looking like for Indian equities? Significantly better from here? What is the Nifty broadly looking like for you?
I wish I had an answer. Nobody knows. The world is too uncertain to predict on the short term. I think the 3-year outlook remains very good for equities.
And what does that 3-year outlook look like?
We should be able to compound in mid-teens.
Mid-teens, over 3 years is the compounding that Ramesh Mantri, Chief Investment Officer at White Oak Capital,
sees.
This
is for the Nifty. So for the broader end of this bottom-up stock-specific ideas, the compounding in Ramesh's view would be even higher.
Are you speaking specifically on the Nifty, Ramesh?
Yeah, broader market.
No, the mid-teen compounding is for the Nifty or the broader market?
Broader market.
Okay.
For the broader market, yeah.
So
I just wanted that clarification in. Thank you so much, Ramesh Mantri, for joining in today. Always a pleasure to have you on the show, and we hope to see you back soon.
Thank you. Have a nice day.
Okay, that's all the time we have on the show, but power-packed and so much news breaking through. The markets are looking steady, though. No exciting moves one way or the other, which is not half bad.
Yeah, let's hope this lasts until June 19th. We are happy with that, but we really wrap up the show. Thanks so much for watching. Ask Profit up next.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Welcome, you're watching NDTV Profit, and of course this is Ask Profit. I am Mahima Vachrajani, and with me is Soumit Sarkar, and this is a show that gets all your stock related queries answered. For viewers who are watching us, you can either give us a call or send us your queries on the WhatsApp number that's flashing on your screen up there. But before we start doing that, let's take a quick look as to how the markets are doing at the moment. Let's try to pull up the Nifty 50. It's holding above the 24,000 levels. We're seeing an uptick of around 0.3% on the Nifty 50, almost at its day's high point. Let's try to pull up the heat map as well and see as to what are some specific names that are doing well in trade today. You have Trent Limited, which is gaining about 3.6%, followed by Eternal, which is also up 2.8%. Tech Mahindra also doing fairly well, up 1.4%. Hindalco, for a change in green today, up 1%. Infosys, Nestle, Wipro are some of the other names that are doing fairly well. So it's a mix of consumption as well as IT doing fairly well. But on the flip side, you have ONGC and Tata Motors, which is taking a knock, down by about 1% each, followed by Cipla, Bajaj Finserv and Axis Bank that are a tad bit under pressure. Let's try to pull up the Bank Nifty. It's hovering around the 57,400 levels, almost mirroring the benchmarks as we speak. Slightly off from its day's high point, but still around the 57,400 levels is what we're seeing. Let's quickly pull up the sectoral heat map as well to see as to what the sectoral action is looking like. And you have your defense leading the pack, up by about 1%, followed by IT and consumption. Only the realty in the red is what we're seeing, down by about 0.8%. Let's also try to pull up the mid cap 150 and the small cap 250. The mid cap 150 is up by about 0.4% and the small cap 250 is also up by about 0.4%, so slightly doing better than the benchmarks. But let's also pull up the constituents, the BSE 500, and see as to what are some specific names that are doing fairly well. There you go, some names like Cyient, Lodha, Sonata Software, Embassy Developers continues to be under pressure. But on the flip side, you have IDBI Bank, which is up 10%. Chemplast up 9%, Yes Bank seeing gains about 5%, Brigade Enterprises up 5% as well. Rajesh Exports is back in the green today, up by about 5%, and Dixon is the other name that's doing fairly well. So that's with regards to where the markets go. But let's start taking all your stock related questions, and to answer them we're joined by Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher Capital, and Gaurang Shah, Senior Vice President at Geojit Investments, joining us now. Welcome to both of you and a very good morning to the both of you. I'll start by taking the first question, which is from Uma, who is writing us from Bengaluru. She has a question on the recently demerged Vedanta companies. What she's asking is that among Vedanta, power as well as aluminium, which one is better, and whether she can enter any one of these or both of these at the current market price from a slightly long-term perspective is what she wants to know. Gaurang, a very good morning to you. Any view on these?
Hi, Mahima. Thank you so much for having me on your show. Good morning to all the viewers of NDTV Profit, to Vaishali, and to you and your entire team. A small disclosure, all recommendations that I'll be sharing with you this morning on your show, they are part of our fundamental research team recommendation from a long-term point of view. Our company, Jujit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we give investment ideas to our clients on similar lines they might have their investment interest. So, as a candid disclosure, again, Mahima, before the demerger of 3-4 businesses, we used to have a positive coverage on Vedanta as a consolidated balance sheet. That means, in effective, that we were positive on all the different business verticals that they had at that point of time. Post the demerger, as of now, we are maintaining a positive stance on Vedanta Limited, which is the parent company. On the demerged entity, our research team has not given a thought as of now in terms of recommendation. But again, we were positive on the consolidated balance sheet and we remain positive on the flagship company, Vedanta Limited.
Okay. The next query coming in from Sushila from Bellary, and it's on Cupid. She has few shares bought at a price of she has 1,577 shares bought at a price of 136, currently sitting on a good gain. She wants to know some targets on this. Any short-term target on this, Vaishali?
Hi, first of all, very good morning to all of you. I think the stock has really run up quite a bit. So I would say that Cupid current price being 169 can go towards 175, 180. Keep a trailing stop loss and that would be the short-term target.
The next one that we have is coming in on Grasim, and this is from Bhaskar, who's writing us from Bengaluru, asking about a short-term target and stop loss for Grasim. Vaishali, I'll stick with you for this one. Your view on Grasim?
Definitely. So Grasim is already in a good uptrend. So if you're looking at it with a short-term point of view, I think 3,000 should act as a support and 3,300 would be the next trading target.
Okay. The next one is coming in on from Murthy from Vizag on Happiest Mind. He's holding few shares bought at a price of 470. He wants to know whether should he hold or exit. Gaurang, any view on this Happiest Mind?
So again, a challenging time for the sector and the companies because of the ever-changing and evolution that is happening in the IT sector. From a long-term point of view, we have a accumulate stance on Happiest Mind. In case if you have, of course, I don't recollect the level at which the investor has gotten, but in case if you gotten at higher level, use dips to add on to it and bring down your cost of investments.
All right, the next one that we have is on Titagarh, and this is from Maniket, who's writing us from Karnataka. He wants a short-term view that is approximately 1 to 2 months on this particular counter. Vaishali, your view on the charts?
So well, Titagarh, now again, we are seeing the stock getting in a trend. So I would say near-term point of view, 860 should be taken as a stop loss. And I think 2-3 months horizon can look for a target of around 950 to 980.
Right. The next query is coming in on Bear Crop, and it's from Rajesh from Noida. He's holding 50 shares. And it's for you, Gaurang. He wants to know whether should he buy more to average. He hasn't mentioned the buying price though.
Again, a very niche company, Somit, but unfortunately because the coverage is not there, I won't be in a position to give a clear-cut buy, sell and hold. But let me say this, the company is well placed in its sector. Because of the product offering, it has got a very strong market presence. And equally strong is the product recall by the customers. So definitely quite a performer within the sector.
Okay. The next one that we have is on 3 particular names, Vaishali, and Padma from Bengaluru wants to know which one is faring better on the charts. I'll take the names one by one. One is Karur Vysya Bank. The second one that she's asking about is Sumitomo Chemical. And the third one is Aarti Industries. And she wants to know from a slightly long-term perspective of 1 year, which one is a better bet according to the technical analysis. If you've seen all 3 charts already, do you have a pick?
I think I would go for Karur for sure because it's already showing strength. The other one that I would look at is Aarti Industries. Also, because chemicals are showing some revival. So Aarti is another stock to my liking for a long-term perspective. If at least you're looking at a year or two horizon, Aarti currently at 484. I think with patience, this can go towards 750, 780 levels. So this is one of the stocks to my liking as far as the technical levels are concerned. And of course, Karur is already in a good trend. So I think yet a buy and look for higher targets.
Right, let's slip into a short break and we'll be back and address more of your queries post that.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When the headlines move fast, perspective matters.
Well, welcome back to NDTV Profit. Now, we are in Greater Noida, and to get some more perspective about the IT industry, we're now being joined by none other than Sudhir Singh. He is the MD and CEO of the company. Mr. Singh, thanks so much for joining in. It's a pleasure to have you here.
My pleasure. It's good to be here.
You held the Investor Day yesterday, and it was one of the most important ones. And firstly, thanks so much for inviting us in this huge campus, 25 acres here in Greater Noida. We've had the chance to look around, and it's a beautiful facility. We'll talk a little bit more about it, also show our viewers a bit. But as you go across this vision that you set for the company going into the next 4 to 5 years, you've given a big target or big vision or goal of $5 billion in terms of revenue. Talk us through that a little bit. You're currently at $2.4 billion and an ambitious target at a time where there's a lot of disruption in the IT industry. What gives you that confidence?
Well, for starters, it's not terribly ambitious. All that we're saying is that we will continue the growth rate that we've been on for the last 9 years. This is just an extension of the growth rate that we've carved out for a decade. We aren't talking about going over and above and beyond it. We're just talking of maintaining it, though we'd be disappointed if we can't figure out a way at some point in time of pivoting that line upwards and accelerating the growth. So at this point in time, all we said yesterday was we have a run rate of $2.5 billion. All that we said yesterday was if all we do over the next 4 years is one acquisition of about $500 million, and just maintain the rate that we've been on, we should, by FY30, be a $5 billion organization on an ongoing basis. So that's the contention. The confidence comes from the order book that's locked in. The confidence comes from an execution track record that's been second to none. The confidence comes from the fact that we aren't just talking about AI. Everything that we talk about when we say execution, getting things done, did get translated. And you did hear it yesterday in the investor call as well.
Yeah. The one thing, and because I wanted to show our viewers also what you've developed as well. So it's a good time to get into the golf cart, just show viewers about the campus, show what the strength is about. And as we go across, because there's a very important conversation that you also spoke about yesterday, and that was about how the company has been acquisition friendly. you've never failed an acquisition. And you spoke about the 5 acquisitions that you've had. As we go through, of course, the beautiful campus, talk us through where does that confidence come from as well? Because that's a strategy that you expect to continue going forward as well.
Well, it's a mix of strategy and tactics both. There are 2 things that I've marked out our approach towards acquisitions, and both of those approaches have been very contrarian. Number 1, when it comes to acquiring an asset, as we said yesterday, the contrarian approach comes from the fact that we never acquire a firm that is also being very actively solicited or assessed by any other organization. What that allows us to do is to do a very detailed due diligence, in person meet all the key clients, insist on meeting every member of the client services or the sales teams. That approach has worked for us, as you rightly said, over the last 5 acquisitions over the last nearly 10 years. The second thing that's marked us out has been our approach, again a contrarian approach when it comes to acquisitions, to the way in which we do drive the integration. The integration does not rest on the leader or the top 2 leaders of the organizations that we acquire to make it successful. We insist, once we consummate an acquisition, we insist that the number 1 and the number 2 leader of the organization do step away and that our leaders run.
And that's a big
so that's
change
where it
that you
comes
do.
from.
I also just want to talk about the surrounding as well, because you spoke about how this garden is very close to you as part of the 25-acre campus as well. If you can show a little bit of the garden too, because you spoke about, and I think the CFO spoke about, they have a gym, you have a pool here as well, but this garden is very close to you. What is about the space that you like the most?
Well, we call it the secret garden, and as the cart moves around, you'll get a sense of this. This is the garden where you will see a Navgrah, as per Vastu, that's been created. This is the place where actually, when I joined about a decade back, the founder of the firm used to sit, and we used to have reading sessions somewhere around here.
Yes, correct.
As we continue along this route, to the left, you will find the place where, and I suspect that's one of the very few places across Delhi, where we do grow tulips. And it's a, I said this yesterday, if you want to understand the capabilities of an organization, you can invite management teams, they can walk into a room, they'll walk you through it. But if you want to understand the soul of an organization, you do need to come back to where they're anchored. For us, all of us, all 45,000 of us across the world, the soul, the center point is this 25-acre campus. We've always maintained that we believe it's the finest technology campus in all of North India. You rightly said. You talked about a cricket field that's coming up right now. There's a tulip garden. If you were here 4 months back, you would have seen to the left. Swimming pools, auditoriums, amphitheaters, a guest house for employees. I think we do it all.
Do it all. I also, before, because I want to ask you a lot more about acquisitions as well, but this cricket field also, because you have sports also, is something that's very close to your heart as well. You make a lot of sports analogies also when you're speaking to investors, speaking to shareholders as well. Why is that so crucial for you to emphasize this with impact, and also, because of what is visible in this campus as well as we go across this huge field? What is that expectation, those learnings from sports that you want to apply in business and that employees can be helped with?
I think there are a few things that you're right. I use sporting analogies. I use analogies from the army because that's where my father used to work. And we fundamentally talk about what makes us different. We say it's execution. And we always say that execution is the simple art of getting things done. It is not the intricate art of coming back with excuses around why you could not get things done. It's the goal that matters, and I think sports teaches you that, right? At the end of the day, if you had a fantastic cricket match and if you've lost, there's no point sitting around and commending each other on a loss. So a lot of it comes from that, and a lot of it also comes, as you would have seen yesterday, from the initiative that we've started, which is public libraries, which again is unique to us.
The thing about acquisitions, and as you highlighted there, on day one, you have that change, and it's not just the previous organization that continues, it's a change. But you have been successful in that. You've also guided that you want to do one more. Is there any space that you're looking at right now? Because you've spoken about healthcare as a vertical that you want to grow. But is there any space, or is there a particular acquisition that you're looking at? Or is it that there's an acquisition in the near term, but you don't have a particular asset in mind right now?
We don't have any asset that's cooking. We don't have any irons in the fire at this point in time. And we're honestly, given the very significant organic growth that we see ahead of us, not really desperate or hungry for an acquisition. Also, to the first part of your question, there are no white spaces that we believe that are left. Healthcare for us is growing well. It's almost $175 million business.
Yeah.
We suspect healthcare, even in the absence of an acquisition, is likely to go and do roaringly well on an ongoing basis.
Yeah.
We will keep looking out for assets as long as we find an asset that is not being very actively solicited. The valuation is reasonable. And the management team understands that we would like to step in and run it on a go-forward basis. We'll go for it.
Let's also step out because I want to show around the campus a little bit as well. Because the other aspect that has been with you is the fact that, about how AI has completely reimagined the process for you.
That's right.
The engineering has completely been transformed by the company. You are saying that it is now a very different way that you look at when you're approaching a particular project because AI has reimagined that. Could you just explain to us what has happened in the last 12 to 18 months since agentic AI come in and how has it differentiated? How has it changed completely the way you look at new deals, the way you're approaching deals now?
Sure. So for us, and this is a question that comes up very often, is AI deflationary? Is it a tailwind? And so on and so forth. We maintained, and I suspect we've been somewhat contrarian there, saying that from a Coforge vantage, from a Coforge perspective, AI is a tailwind and a very clear tailwind. Specifically to AI engineering that you're talking about, what we presented yesterday, what Ram from our team talked about in terms of AI engineering was that the way we approached engineering, even 6 months back, versus how we approach it today, and that's what we presented to investors, has changed radically. 6 months back, engineering from our vantage was AI assisted, right? We had programmers, we had the equivalent of co-pilots, and that's where the momentum was coming from. When Ram presented yesterday in the investor meet, he talked about the fact that it's now AI-led. And to your immediate question once again, the example that he gave was the largest legacy modernization program that we're running today. The entire process of the ingestion pipeline, the entire process of the knowledge assessment, knowledge management pipeline, and the entire forward engineering in that live example was being done by 25 agents spread across these 3 specific stacks.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends, before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are tuning in, you can give us your stock related questions, the numbers that are flashing on your screen up there. Because we have less time, we'll start taking the rapid fire round now. And Vaishali, as well as Gaurang, you both know the drill. Try to keep your answers as short as possible. The first question that we have is on Power Grid. Our viewer wants to know from a short-term perspective whether to continue to hold. The buying levels are 290 rupees. Satyan is asking this question. Vaishali, on the charts.
Well, so Power Grid right now 284, it's just consolidating. So I would say keep a stop loss of 280 as the near term perspective and look for a target of 295 to 305.
The next query is from Siddharth from Bangalore. He wants a technical view on Marksans Pharma. He's holding 500 shares at a value of 254. Vaishali?
I would say continue holding. The stock continues to be in a trend, and I would say 240 should act as a near-term support. And once the stock, I think in all likelihood, can cross 260, and then it would be ready for a target of 280 to 300. So continue holding.
The next one is on Sagility India. Sanjay from Bengaluru is holding 1,000 shares at the levels of 39 rupees. From a slightly long-term perspective, Gaurang, continue to hold.
Sorry, don't have coverage, Mahima.
Next query is from Gautam from USA. It's on Birla Soft. He's holding 1,500 shares, but at a price of 552. Current market price is 325. He's sitting on a loss. Gaurang, any view? Should he continue to hold?
Prefer names like KPIT Tech and Science Limited in the mid-cap IT, small to mid-cap IT category.
Okay, the next one is on Jammu and Kashmir Bank. Sabita is holding at the levels of 121. Short-term target on this one, Vaishali?
Well, I'm not tracking. Just give me some time. I'll just have a look.
Sure. Jammu and Kashmir Bank is what we're talking about. It's currently trading at 162.
Yes, I got it. So it's already in an overbought zone. So if you have to take a short-term view, please book profit.
Vaishali, the next query is for you. It's on Finolex Cables. Mahesh from Bangalore wants to know whether is it the right time to enter this counter for short term.
I would not say so because cable stocks have already given a good run up. But yet, if you want to get into Finolex Cables, short-term perspective 1050 is the stop loss and can go towards 1150.
Okay, the next one that we have is on NTPC Green. From a long-term perspective, Sriram from Visakhapatnam wants to know if we can continue to hold this counter. Go around.
Had a positive coverage, Mahima, during the IPO, and currently I think it is trading beyond the IPO price. IPO was at about 108. So if you're a long-term investor, keeping that IPO note as my base, hold on.
Vaishali, the next query is for you. It's on KFinTech. Prashant from Bangalore is holding 152 shares, bought at a price of 927. He wants to know whether can the stock reach 950 level in the next 1 to 2 months.
Definitely, actually the stock is showing signs of reversal. So hold with a stop loss of 840 because view gets negated below that. But the way it's showing right now, it will give a bounce and it can go probably beyond that towards 1000 levels.
Okay, alright. So that's the view coming on KFinTech. With that, time to step into a short break, but don't go anywhere. We'll be taking more questions on the other side of the break.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this, the biggest stage.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big.
Welcome back. You're watching Ask Profit here at NDTV Profit. And I think we've got Sanjay waiting by patiently on his call. And Sanjay, a very good morning to you. Go ahead, ask your question.
Very good morning, Mahima. My question is to Ma'am Vishali. This time again, I have bought Bandhan Bank 200 shares at the rate of 205 levels in the first week of June itself. And again, I need help from Vishali Ma'am. What target shall I look for in a shorter period?
Sure. Okay. And Vaishali, I'll take this up with you. Bandhan Bank, from a short-term perspective, what is the target and stop loss that Sanjay should expect?
Definitely. So Bandhan Bank already is in a good trend, and this has been on the radar for many of them from trading point of view. So I think 220 for short-term basis, 220 is a target resistance. Beyond that, if you have patience and if you're ready to hold, you will still get higher targets. But for short-term, 220 should be the target.
Okay, the next one that we have is also for you, Vaishali. This is from Ray, who is writing us from Bengaluru, asking if this is a good time to buy something like an NTPC or Coal India from a short-term perspective, as to where are the charts looking more attractive. Vaishali, which one would you choose, NTPC or Coal India?
I think both are good stocks, so I think both can be accumulated at these levels. They both have corrected significantly and currently at a fair value. So I think I would say buy both.
Okay, now the next one that we have is coming in from Suman, who's writing us from Kolkata. She wants to make an entry into the tire space from a long-term perspective. She wants to know as to which companies are best to kind of make an entry right now. Gaurang, your view?
Sure, Mahima. So we remain positive on the sector. There are 3 companies which are currently under our coverage on the fundamental side, long-term point of view. And one of the good things that has happened is crude is at 78 on Brent and 74, 75 on NYMEX, likely to come down further, likely to be tailwind positive for the tire manufacturing companies. So Apollo Tyre, JK Tyre and Balkrishna Industries. These are the 3 positive coverage from our side on the long-term fundamental side. And if you have to pick one, I mean, of course, you can pick any, but I think JK Tyre would be a preferred pick, followed by Apollo and Balkrishna.
Right. The next query is from Mahesh from Maharashtra. He has 292 shares of Garden Reach bought at a price of 3,074. Vaishali, he wants to know the view for the next 1 month on this counter.
Well, next 1 month, I would say keep a stop loss of 2,600, and all going well, this can go towards 2,900.
Okay, all right. So that's the view coming on Garden Reach. The next one that we have is from Raghav, who's writing us from Hyderabad. He says that he wants to know if this is a good time to invest into IDBI Bank or wait till the divestment, and he wants to be invested in this counter for the next 2 to 3 years. Gaurang, any view?
This divestment story, Mahima, for IDBI Bank has been years old and nothing seems to be moving. So instead of relying on divestment and thinking that you will get appreciation, concentrate on fundamentals. I would advise him to look at Federal Bank from a long-term point of view. You don't know when this divestment is going to happen, at what valuation, at what time, and how it is going to go through. So instead of preempting all these things, focus on fundamentals. Federal Bank would be a preferred pick in the small to mid-cap category.
Okay. Well, before we take our next query, let's slip into a short break.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Welcome back. You're watching Ask Profit. It's time for our second rapid fire round. Vaishali and Gaurang, you both know the drill. Try to keep your answers as short as possible. The first one that we have is on Kalyan Jewellers. Leenu from Bengaluru is holding 200 shares, bought at an average price of 402. From a 3 to 6 months perspective, can she continue to hold, Vaishali?
I would say so because Kalyan Jewellers is already showing a lot of strength. Near-term resistance is 380, 390. Above that, it can go to 440. So that would be the view.
Okay, the next query is for you, Vaishali. It's on rate gain. Neelam from Jaipur is holding 80 shares, bought at a price of 645. She wants to know any stop loss and target for the next 1 to 3 months.
Well, so rate gain is already showing a lot of trend. So I would say continue holding. 800 should be the stop loss. And this can go to 1100 rupees as a target.
Okay, the next one is on KPIT Tech. Savita from Nashik is bought it at the levels of 1313 and she wants to know from a long-term perspective, can she add more? Gaurang?
Definitely yes, hold and add for long term.
The next query is for you, Gaurang. It's on RailTel. Ahmed from Delhi has 50 shares, bought at a price of 400. He wants to know whether should he continue to hold this counter for the next 1 year.
Well, the outlook for the sector, Indian Railways, looks quite strong given the kind of modernization and upgradation and introduction of new trains. Won't be specific since we don't have coverage.
Okay, the next one is on Genesis International. Arnab wants to know whether if this is the right time to make an entry seeing the technicals. Vaishali, what would you recommend?
Tell me again the name.
Genesis International.
Well, I don't have
It's up 3.7% as we speak.
Let's move on. The next query is coming in on Hyundai Motors. Gaurang, for you. Rajesh from Mumbai has around 470 shares bought at a price of 1,968. Should he continue to hold this counter?
Amongst the PV players, positive on Tata Motor PV, M&M and Maruti. These are better placed.
Okay, the next one is on Transrail Lighting. Kumar has 480 shares bought at an average price of 650. Hold, exit. Vaishali?
Well, Transrail Lighting, I think hold. This can go a bounce up to 525.30. And Genesis also, I think you can continue holding because that is showing a good strength. And this can go to around 350-55 as a short-term trading target.
Okay.
The next query is for you, Gaurang, and it's on MTAR Tech. Lavanya from Ilaru is holding 150 shares bought at a price of 7,975. Should she continue to hold this counter?
We were positive. Our targets are in place. We have given reduced stroke book profits from a long-term point.
Okay, the next one is on KFin Tech. Prashant from Bengaluru has around 152 shares bought at the levels of 927. From a 2 months perspective, a good hold, Vaishali?
Yes, as I just said, it's a bounce back, so continue holding.
Okay.
The next query is for you, Vaishali. It's on Samman Capital. Sunny is holding around a few shares of this counter. He bought it at a price of 176. He wants to know whether can the stock touch the target of 210.
It's already in a trend. 170 should be taken as a support and it can go to 190 to 200.
Okay, Natco Pharma from a 1 year perspective, Srinivasan from Indonesia wants to know whether he can buy right now. Gaurang?
Yes, you can from a long-term point of view. We have a positive coverage.
The next query is for you, Vaishali. It's on Keynes Tech. Venkat from Chennai is holding 20 shares bought at a price of 3,200. Should he sell or hold?
I would say continue holding. It's showing signs of bottoming out, can go to 3,600.
Okay, sale 1,000 shares bought at the levels of 192, 6 months perspective. What is the target price? Mine from Kolkata wants to know. Vaishali?
I would say add more at these levels and go for a target of short term is 210, above that 260, 270.
The next query is for you, Vaishali. Again, it's on JSW Infra. Sai Karthik is holding few shares bought at an average price of 272.5 rupees. He wants to know the target for the next 3 to 6 months.
3 to 6 months, continue holding. Now 280 would be your trailing stop loss and look for 320 to 330.
Alright, okay, so that is with regards to where JSW Infra goes. But with that, we're completely out of time on Ask Profit. Vaishali and Gaurang, thank you so much for taking out the time and helping us answer all those stock-related questions. Viewers, time to slip into a very, very short break, but don't go anywhere because KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. down the stories shaping the world. From markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, and in this show I'm going to get you interesting mid caps and small caps where they have come up with good stories, and also interestingly the recently listed companies at times. Of course, there's a little bit of hint to that as well, but I'll give you some more hints. Try to guess it. The company manufactures diesel generator sets. Hardly 3 to 4 players are there in the listed space. It was recently listed on April 2nd, 2026. I'm sure you must be guessing it by now. Mutual funds have interestingly a 15% stake in the company, and from the IPO price, the stock is up 23%. The company in focus is Powerica. Yes, this is the company which we'll talk about. And if you could understand why are we calling this company, and of course the first and foremost reason is of course on their Q4 numbers, the demand generation which is happening, and also how the client confidence is playing out. The FY27 guidance, we'll be looking out for both the DG, that is your diesel generator set business, and the wind power business. Of course, the revenue contribution is on the lower side. Will the margin mix change? Because both of these businesses are different, order flows are different, and the opportunities in the data center, that's something to look out for, especially in the power segment. And also the wind business portfolio, because there were some recent government changes also coming in. Will that impact this company or not? Further expansion plans, especially with their extra land in Khopoli, we would like to know what happens next. They already have 3 manufacturing setups, and of course the momentum in EV infra, defense, this new age sectors where a lot of bullishness is coming in the markets. And of course, to decode that, we'll have the management of the company, Ritesh Agrawal and Pradeep Om Prakash. But let's understand, what does the company do? Let's get into the details about it. Of course, it's a recently listed company, but it's an integrated power solutions provider, and remember, this is just a recent listing on the month of April. Also, it makes diesel generator sets for primary as well as standby appliances. And on the other hand, the wind business, if we talk about it, it's an IPP as well as EPC services. They do a very smaller portion of businesses on the allied services. 3 important locations are also there where they are manufacturing, and an extra land is there in Khopoli, Maharashtra as well. Diesel generator business model is of course powered by Cummins engine. That's a pretty big name, and also it's you could say it's pure end-to-end solutions for medium speed and large generators are also there. Of course, they have a tie-up with Hyundai also, and that's a very big actually tie-up, and they have a bigger names also, and I'll tell you those names also in a while. Apart from this, manufacturing services for Schneider Electric's Prisma panels, that's also where the company is having its diesel generator business model. But look at the strategic tie-ups. There are very big names over here, which you can see we have discussed. GE Vernova is there, Vestas Wind Technology is there. So definitely the company is making some bigger moves. The FY26 revenue breakup, diesel is still the majority one, almost 83% of it. Compare that with 17% when it comes to the wind energy business. Apart from this revenue breakup business, the margin profile is pretty different. Diesel generator stands at 9%. Wind power, on the other hand, is at 31%. But let's try to get into the details why it may work for the company. My thesis, it's a strong sectoral tailwinds which are happening. New age industries need power. Companies there. It has turned net cash after the debt reduction in IPO, and that's a good sign for a company to follow. The third important reason is a stronger balance sheet which comes in after this. Also, importantly, there are 2 other reasons I would like to point out. There's a good participation coming from institutions. Both DIs and FIs have invested in the company, and valuations are still attractive compared to its peers. But what may not work, medium-term impact might be there on the supply chain issues. There are rising prices, so those impact will definitely be there. Competition coming from the larger established players. They have tie-ups, but nevertheless, there is still a competition coming in. Wind power business is seasonal as well, so there will be lumpiness going ahead. But let's try to judge the company on the KYC rating parameters. We have the usual flows, the income statement, balance sheet, cash flow, return ratios, and also और details में अगर बात करें, then we also have your shareholding and StreetCred. But remember, take things with a pinch of salt. It's just been 1.5 months since the company has been listed. Valuations, I'll give you a very interesting analysis, especially with Cummins India in one more pair. Try to guess that, and outlook also about how things pan out for the industry as a whole and for the company. Let's start with income statement and let's see what's happening in the income statement. Largely, the numbers are single digit for operational profits as well as revenue. We need to give it a little bit more time to judge the company. This was there in its unlisted history, which was there, but definitely PAT up move has happened. Margins has been a decent set of a jump coming up in terms of the fourth quarter number, but it's too early to judge the company. Let's give in 3-4 quarters. So right now I'm going to give this a neutral rating, even though the margin slight downtick has come in, but they have maintained it at that 13% odd margins. Also, let's talk about balance sheet. What has happened? Balance sheet, one thing I have liked is, of course, this is the old number on the borrowings at 558 crores. This is expected to go down. Company has turned net cash also. This is because of the IPO proceeds where they have reduced the debt. The overall cash balance is pretty decent, 961 odd crore rupees. Of some expansion can happen, but right now it's a very strong balance sheet, and that's why I've given this a strong thumbs up. We spoke about income statement, balance sheet. Let's talk about cash flow and see what has changed here. Largely, there's been a significant jump coming in from the cash flow from the operation. The conversions have improved and even the net cash flows have improved. But let's give it a little bit of time to understand how this business model plays out. As of now, what we had discussed on the RHP and the Q4 numbers, it's been a neutral rating. Return ratios, pretty much interesting. Company is doing a little bit of expansion. So the numbers which we are seeing on the higher side, be it the ROC or the ROE numbers, they are reducing as well. So, but will this change on the business model? We need to give it a little bit of more time and then try to understand. But prima facie, it looks like there is a good reduction coming in the return ratios. There is a pressure. So I'm going to give this a thumbs down. Let's talk about the shareholding. And I had mentioned earlier that we just have for 1 quarter the entire shareholding, but what I liked was the FIs and DIs. That is where they are holding the majority of almost 20% chunk in that, and a very small retail float is there. So I'm going to give this a thumbs up when it comes to the shareholding. But let's try to understand StreetCred, what has happened. You know, the company सिर्फ 2 अप्रैल को ही आई है आईपीओ में, तो सिर्फ आईपीओ और आईपीओ की लिस्टिंग से हम बात कर सकते हैं. लिस्टिंग वाज ल्यूकवार्म, 7% डिस्काउंट, सो दैट इज व्हाई द कंपनी हैज गिवन गुड रिटर्न फॉर द आईपीओ folks as well as people who have entered after the IPO for just a short period of time. I'm going to give this, based on just this, a good thumbs up when it comes to the numbers. Valuations, let's try to understand. Cummins India and Kirloskar Oil, these are somewhat the competitors, but they do have tie-ups as well, especially for Cummins India, that the trailing P is at 67 times and 45 times for its peers. But look at the valuations for the company, that's only 23 times right now. So the valuations are quite attractive right now also. That's why we are seeing a good DI and FI participation, and post IPO also there is a buying. So I'm going to give this a strong thumbs up as well. Let's talk about outlook. The last rating for our analysis, a double-digit growth target in FY27 in terms of business. Second important point, a healthy demand commentary coming in from all the business. A little bit of hiccups definitely there in the first quarter. This is because of the supply chain pressure which the management has mentioned. But apart from this, the collaborations and alliances with established industry players, that is where they are getting the credentials, and the electrification, renewables, EV ecosystem and data center growth. These are the new areas where a lot of demand is coming. So that is why I'm feeling that the long-term story is strong. Outlook, I'm giving neutral because some medium-term impact would be there. But come over, I'll try to explain you the entire KYC ratings for the company. Where does it actually stand? Largely, the balance sheet has shown a good strength. Return ratios, a little bit of pressure. But if you look at it, overall shareholding and valuations are really strong. I've given this a thumbs up. And also the StreetCred post its IPO, the stock has sustained and done well. Outlook is also neutral. So overall, the KYC rating for Powereka stands at 5.5 out of 8. It's largely in line or a slightly better numbers at our average KYC show. So that'll be pretty much interesting. But to understand more about the business and its outlook, we'll be joined in by the management of Powereka. Stay tuned for this chat.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Welcome back to KYC, and now we are joined in with the management of Powerika, Ritesh Agarwal, the Group CFO, and Pradeep Om Prakash Gupta, the whole-time director. Good afternoon, gentlemen. I'll start with Pradeep ji. Pradeep ji, the first question definitely I want to ask is the FY27 guidance. The numbers were pretty decent, and this is the first time you are coming in KYC as well. So we wanted a little bit of broad view on how the outlook and the business growth guidance looks like for FY27. Pradeep ji.
Yeah, Ritesh, can you take over? So, thank you, Sharad and NDTV for having us here. So our growth, when we see from a guidance, our growth continue to be led by our generator set business, which remains the larger part of our portfolio and is benefiting from the increasing demands from the sectors like data centers, manufacturing, infrastructure, and the real estate, along with the critical backup power applications as needed in various sectors. At the same time, we also expect that the wind power business to grow faster than as compared to the other the existing business of a genset, supported by the capacity addition as well as a growing renewable energy ecosystem across. Over the next 2-3 years, while the generator set business will remain dominant contributor, we also expect that the renewable sector will grow faster, as well as the medium speed large generator business, so that will have a further traction.
Right, and Ritesh, another question for you would be the margins. How does the margins actually come up, for both of these businesses, and on a blended margin front, what you are expecting, in the coming years?
Sure. So margin generally led, so from a generator set business, so it is generally, as we reported, 9% this year. And last year it was 8.35% in terms of a generator business FY25. So we see that the margin leverage, which is been coming out with the investment that we have already done. There are certain investment, as I mentioned, our data center business is growing, and that is further the data center has taken up the larger chunk, and that's that has been seen a promising. So Powerika, from the as a first mover earlier, we have invested back into the people as well as the processes in terms of a data center. So that has been taken up. So now we are getting that fruits out of the tree that we have planted earlier. So that's where we see the margin will get better over the period.
Right. Right. Apart from these numbers, how does this data center business actually work out, Pradeep ji? What are the company's plans going ahead? Because this is a very important segment. बहुत power लगता है इस धंधे में. Just wanted to understand, how is Powerika placed?
So data center business, if we see, it's a significantly promising business. Per se, as we talked about cloud computing, we talked about various additions that we are working, and especially the AI-led data center, which is going to come up significantly. Further, this year we have seen in the budget, the announcement was that the tax holiday for data center until 2047. So that gives a further fuel. If we go back to our industry report, which was published along with the prospectus, which talks about the data center CAGR is about 20% over 5 years from 26 to 30. That is a pre-budget. And now we all talked about that with the tax benefit and many other initiative that has been seen. So we see that data center growth will be more than what is given in the industry report.
Right, Ritesh ji, that's pretty interesting. But I have a query for Pradeep ji. He has been a little bit of silent right now. Pradeep ji, if you can hear me, just give me a signal. I just wanted to understand, there are 3 important manufacturing facilities and there seems to be an extra land in Khopoli. What are the utilization levels looking like, and are you looking to expand going ahead? This question is for Pradeep.
Yeah, so basically the first 2 factories of Silvassa and Bangalore, we are using it for completely for our Cummins business, and the Khopoli factory, we are using it for our allied business, which we have for the Schneider and different end use. And we have 24 acres of that surplus land, and we have applied for the expansions in the Khopoli factory. And definitely very soon we will be adding the sheds in the Khopoli.
And of course, if you look at it, there is a good momentum coming in the EV infra, the defense space as well. Just wanted to understand, Pradeep ji, this is from you only, for these new industries or the new sunrise industries, how is the demand trends or the client confidence looking like, and how is the execution you're going to do coming ahead in the next 6 to 12 months?
So here we are making the acoustic panels, and as well as the control panels, we are making it for the Schneider. So that's a very just startup basically business, and we have made the patents in that, and it's a very about 30-40 crores of the business which we have started, and it's going to grow at a rate of 25 to 30% per annum basis.
Right, that's pretty much interesting. Ritesh ji, I have a question for you, because Q1 is something which a lot of companies are going to get impacted. Let's face it, that's the fact, be it your company or the industry. Are you looking at, like a kind of, you could say a major hit coming in your margins right now, or you'll offset it with some different strategy for the company?
So I wouldn't say that we are not impacted because of the geopolitical issues which was there. Just to give you a perspective that there is a price rise in terms of a commodity. So we work in the business where it is led and it is being defined through the commodities, which is including steel, copper, aluminum, if you talk three major. And all three has been impacted since November. The price rise has been there, whether it is a steel, copper, as well as from an aluminum side. And even during the geopolitical tension, this has been increased sharply. So when we see on the margin side, and from an order book side, so we always have an order book of about 6 months or so. So while you fulfill and the price rise happens, maybe say quarterly. So now you fulfill the demand which you already have. Though we speak and we work on the margin pass on to the customer, it takes about 3 to 5 months time.
Perfect. That's an interesting take. Pradeep ji, one last question on the wind business. How is that outlook looking like?
So that's basically with the current geopolitical situation, the energy security has become very, very important for the country. And earlier there used to be just the addition of basically the capacities in the country, but now the country needs the building of the energy ecosystem. So basically the demand is coming from the data center, green hydrogen, you can say the EV, industrial electrification, urban infrastructure. And from the supply side, you know that we have to achieve by 2030 500 gigawatt of the green power. So the wind and solar need to be added by almost 50 to 60 gigawatt every year. And for that we have to strengthen the transmission line, energy storage, battery storage, pump storage, and supply chain we have to strengthen. So currently we have about 330 megawatt of operational asset, 50 megawatt. Recently we have added the capacity in the month of March 2026. An additional 50 megawatt is under construction, which is going to be added, you can say, by December 26. So frankly speaking, on an average, whatever we have added, we are going to have the ambitious plan for adding the renewable power in our portfolio by adding almost 30% to 35% year basis, and we will be doubling the capacities almost by 2030. We have a very ambitious plan because the eco energy system which is there in the country, we want to take the opportunity.
Right, Pradeep sir. So we understood the entire process for the wind setup. We are out of time, but the conversation was pretty interesting with the management of Powereka. It's always a pleasure to have you, Ritesh ji and Pradeep ji, with us at NDTV Profit, and best of luck.
Thank you.
So that's the management of Powereka we're talking about, and a little bit bullishness coming in, especially from the wind business. And there are some new age sectors also where the company is going. Valuations are cheap as compared to the other peers. So it'll be pretty interesting to watch a company like Powereka. So for interesting stories like this, stay tuned to NDTV Profit, and yes, keep watching KYC.
केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Prime Minister Narendra Modi Benchmarks hovered close to the day's high with the Nifty crossing past 24,000. PSU banks, IT led the gains, pharma as well as realty on the back foot today. Oil prices extend their losing streak as markets bet on a US-Iran deal reopening the Strait of Hormuz. Expectations of stronger supply and return of Iranian barrels have pushed crude towards 3-month lows. Sellers could offer up to 14.89 crore shares as sources tell NDTV Profit that NSE is filing its DRHP today. Valuation could reach nearly 5 lakh crore rupees. Prime Minister Narendra Modi will meet US President Donald Trump for bilateral talks on the sidelines of the G7 summit in France today. The focus is set to be on regional security, tariff and trade and energy concerns. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar. Let's quickly take a look at the market. And yes, above 24,000 levels is good news coming in on Nifty 50. In fact, Bank Nifty is also really taking the charge and adding to the momentum of Nifty today. So this particular level of the hump above 24,030 odd levels is very, very critical for the markets to really maintain. At the moment, it's stable gains coming in. When we look at all the sectoral performance, well, pharma did well yesterday. It's on the downward side today, but most of the sectors are really performing well. What is really taking charge is the IT sector as well as the metal sector, and Bank Nifty really supportive of Nifty 50. So that's really adding to the overall momentum. But let's also shift focus on some news developments really coming in for the day today, and let's take it straight to Bondada Engineering, which is joining in right here on the show with us. It has secured, remember, a 1,300 odd crore rupees of NTPC renewable energy order for a solar and battery storage project in Uttar Pradesh. The win, remember, strengthens its order book and also supports its aggressive growth plans across energy, data centers as well as defense. So that's a big move coming in a sector that is the sector of preference in the market at the current moment. Dr. Bondada Raghvendra Rao, the chairman as well as the managing director of Bondada Group, joins in. So good to have you on NDTV Profit. And my first question to you is this NTPC deal. What is the kind of performance benefit as well as the timelines of that really adding to the momentum on your performance really showing up? And what are the margins that you're really looking at gaining from this large project?
Yeah, good morning. This is NTPC Sitapur order, that is 250 megawatt of solar and 50 by 50 megawatt by 200 megawatt hour of BESS. It is a co-located plant. It is the first of its kind that actually we got it from NTPC. Even for NTPC as well as the Bondada is also is a co-located project is the first of its kind. And not only that, actually, this project has very significant importance is there because first time defense lands we are using, defense vacant lands we are using. This power is going to be used by Ministry of Defense, and NTPC and Defense had made the deal, and we are the EPC partners for that this contract. This project needs to be complete. This project is situated in Sitapur in Uttar Pradesh, Sitapur district in Uttar Pradesh of defense vacant lands. And since we are there in this renewable energy as well as the defense production, this is going to be very significant order and importance and prestigious order for us. And this order needs to be completed in next 18 months time, and which we are already on track, and our PML already reached there and they're starting the project. Right. It's going to be a very good order for us.
That's right. It's a prestigious project, Dr. Bondada, as you mentioned. But of course, this particular space is really growing. How does this particular order and how you're expanding really positioning you in the hybrid project space? And is that an area or a sector of potential for you?
Bondada is mainly into the renewable energy space, basically in the solar EPC, solar IPP, and battery energy storage system. And this order is significantly coming to us in both solar EPC as well as the battery energy storage system. And with this order, actually, we have reached up to the 10 gigawatt of order book, including that 1 gigawatt of battery energy storage. And total 10 gigawatt we have reached against our target of 25 gigawatt by 2030. And this is also significantly contributed to our order book of almost around, with this order, our order book is rose to up to around 10,000 crores.
Right. So from this 10,000 crores of order book, how much is passed through and how much is going to be the fixed price contracts? If you can give us that breakup.
It is most of them are actually it's a fixed price contracts only, but we have made the budgets. Yes, there are some hiccups are there in these geopolitical issues, but more or less these fixed price contracts can be executed as per the budgets only. Around 15 to 20% is a pass through.
Right, 15 to 20% is a pass-through. But you also mentioned, Dr. Bondada, that there is geopolitical issue. Now, hopefully the war is ending, the deal is getting signed. And steel as well as cable inflation had really impacted your margins in the last quarter. How is that particular pressure point really lifting? How is the situation for this particular quarter? Can you give us a snapshot and a view on that?
Hoping that actually situation will be getting normalized, because we are getting the signals that actually war is going to be end. And but nonetheless, it is a very least impacted by us, because most of its panels most of the panels module suppliers are affecting this. Actually, we are not supplying the modules most of our projects, because modules will be supplied by the customer. It is a BOS item, so it is the least impacted. But still, there is a little impact is there. I think we should be able to overcome this situation.
All right. And when you talk about the various segments that you are in, aerospace, defense also is there, data center is there. You have said that data center should really account for 7 to 8% of the revenue. Can you give us a full breakup of the sectors and which one will have the maximum growth driver, and what is the potential of especially the data center space?
Yeah, right now it is renewable energy is going to be a major contributor for our revenues. Even this year also, it is going to be contribute almost around 70%. But going forward, this data centers and defense are going to contribute. And what we have laid our numbers for next 4 years, that is 2030. From these two new segments, actually around 30% of my revenues are going to be contributed in our top line, which we are aiming that actually is $1 billion by 2030.
All right, so huge potential there. And a final question, and a quick one at that. You've also entered the opportunity of Kavach-related railway infrastructure. What is the potential and opportunity in this space?
So railways is coming up with a huge lot of safety projects. Kavach is one of that safety project. And a lot of implementation should be done across the country on railway tracks, this Kavach projects. And we have been participating in a lot of tenders, and it's a good potential is there in even railway infrastructure. Not only Kavach, actually we are participating in other railway infrastructure, modernization of this infrastructure, and railway stations. These tenders also we are participating. I think this will also significantly contribute to our revenues.
All right. So potential there. Dr. Bondada Raghavendra Rao, thank you so much for joining in. Of course, the stock is up over 1% and it's a big win coming in, a prestigious project on NTPC. Many congratulations on that. We'll slip into a short breather on markets at 12. Come back for more news developments of the day.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल। बोलो जुबान केसरी।
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Welcome back. You're watching Markets at 12, and we are calling it an AI moment for India. As homegrown AI startup Sarvam really becomes a unicorn in the latest fundraise, where a list of marquee investors have really taken a bet on Sarvam. Let's get chatting with Bessemer Venture Partners, which, remember, has about $19 billion of assets under management globally and about $500 million of fundraise done for India investments. Let me welcome on the show Pankaj Mitra, who's a partner at Bessemer. Pankaj, always a pleasure to welcome you on NDTV Profit. Do you think that so much has been talked about in Silicon Valley and overseas about India's AI talent and whether India has missed the bus? This particular moment has defied and given an answer to that, and also your rationale for betting on Sarvam.
First of all, Nisha, thanks for having me. Great to be here. Look, our rationale for backing Sarvam is twofold.
Yes.
First, we think that as AI diffuses into India's national infrastructure, whether it's defense systems, intelligence systems, regulated enterprises across finance, healthcare, etc., India will need to own its AI destiny, and that's exactly what Sarvam is doing. We think the opportunity ahead is tremendous. The second is that India's AI needs to be suited for India's unique characteristics. You know, India has such a diverse culture, so many languages. India is voice first, and any sovereign AI that India has should have those two characteristics, which again Sarvam has. So we're very excited about the investment. We think there's huge opportunity ahead, and yes, this is absolutely a moment for India's AI.
That's right, Pankaj. That's what we are celebrating here. And of course, you have betted on Sarvam. Investment has been made. And of course, your portfolio has many new age companies. But let me ask you one question. There is also one defining moment and one of the characteristics in AI where the large IT services firms have been really scrambling to really beat the game on this one. And therefore, HCL Tech has also invested more as a strategic partner. For an investor like yourself, was it a critical piece also because of the kind of inroads that a large company can provide in its global thrust as well as client relationship for a young company like Sarvam? Did that particular aspect matter for the investors at large?
I think it matters, Nisha. If you look at where enterprise AI is today, not just in India, but across the world, we're struggling from an adoption perspective. There's so much potential for AI, but it has not yet diffused into all the workflows that we expect that it should. And that's where someone with existing deep roots into enterprises across the world does make sense. So we think that it is definitely a beneficial partnership.
All right. So that's where we were chatting with both the partners also there, Pankaj, and really looking at the potential going forward. How do you see the Indian AI talent as well as the companies? And when it comes to our own indigenous needs, are we fulfilling that? And or with the momentum that is really coming in or the narrative coming in, or are we to follow the Western, R&D as well as innovation on this particular bit as well? How do you see the outlook when it comes to the AI momentum in India, whether we'll be able to cater for our own selves?
I think it's still early, to be honest, and there are some places where we're doing well and some places that we need to do better, right? So for instance, if you look at just the engineering discipline that's needed to scale, we've done that before with Aadhaar. We've built SaaS companies that have scaled to massive valuations before. And I think as a country, we have that talent sorted. I think where we need help is more in the fundamental AI research, the model research, whether it's text or agentic AI, whether it's voice AI. And again, it's fairly nascent, this entire ecosystem, but we're hoping to find and back and definitely hire in Sarvam more talent there.
You mentioned SAS as well. That had created a lot of momentum in the last fundraise and the IPO cycle as well. But Pankaj, there are a lot of talks doing the rounds that with the advent of AI thrust now, is SAS really losing steam? You do have investments in SAS. What's your view on that? And in AI, which are the critical areas that you're really looking at for investment?
So, two-part question. Maybe I'll address the SAS question first. So look, SAS stocks have lost over $1 trillion, right, this year alone. We don't think that SAS as a category is dead, but some aspects of SAS certainly are dead, right? So for instance, if we look at thin workflows, if we look at pricing based on user seats, those aspects are going to struggle, continue to struggle. But if you look at SaaS agents that are working on user workflows, that are adapting to users' native workflows, adapting to users' native data, taking actions, and then using that intelligence to actually drive outcomes and price based on those results as well. We think those SaaS agents are super interesting, and we'll continue to back those. And as for where we are going to invest in AI, really we think that India needs an entire sovereign stack. The models is the starting point here. But if you just look at the key ingredients that an AI ecosystem needs, it's the energy, it's the compute, it's the data, and then of course it's the models. And then sitting on top of the models are all the agents, the services, robotics companies, consumer-based applications. We're investing in each layer of the stack.
All right. So the entire ecosystem, Pankaj, it was a pleasure speaking to you. Thank you so much for joining us on NDTV Profit and giving your views on SaaS as well as artificial intelligence. Completely out of time on this edition of Markets at 12, but keep it with NDTV Profit. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, who's standing at the Profit Market Pit. Sharad, interesting day of trade. You know, somewhere we've now been able to move past that 24,000 mark in terms of intraday session. Closing above 24,000 is going to be crucial. And what we are seeing is a lot of sectoral rotation that's happening over the last couple of trading sessions.
Right, that's true. Good afternoon, Hiral. And of course, you had mentioned that 24,000 coveted mark. Last 4 trading sessions, the resistance levels was coming in. Now also, it seems like we have crossed that level, but the closing is very much important. And if they sustain, a new range opens up, and I'll give you that in some time. Nifty Bank also, let's see, the story is somewhat the same, and can expect, you know, the strength to continue going ahead, both of these indices. But let's look at the key factors to watch out for, the levels you should be checking out. The first factor is, of course, going to be Nifty. Now, if this goes above this 24,000, this is the range I'm looking at, 24,300 to 24,800. Nifty Bank also, let's see what's happening there. And the key resistance level pushes to 58,000 to 59,000. Overall, the technical setup medium term is strong. Advanced decline ratio 3:2 and helping the broader indices as well. Little bit of value buying coming in. Capital goods, industrial and consumer durable. These are the 3 sectors where we are seeing a maximum buying happening amongst the sectors. Little bit of profit booking coming in the realty space. Last 4 trading session, the Nifty Realty Index had taken a good jump. Rupee maintains a strong rebound, continuing going ahead, and that's a good signal for the macros as well. But the focus will be on NSE's DRHP filing today. That's what the sources to NDTV Profit had stated earlier. We had mentioned you at 8:40 a.m. Fed FMC meeting tonight. Status quo expectation is there. But why this is important today? A lot of asset classes are tracking it because this is Fed Chair Kevin Walsh's first FMC meet. So this is pretty much important to track. But nevertheless, the technical setup looks strong for the markets. Of course, we'll be looking at a couple of major macro events over the next 3 trading sessions. Hiral.
Okay. Lots to watch out for, and yes, the FOMC will become crucial as well. But let's look at the watch list. Tire stocks, crude at 3-month low. A push coming in across from a JK Tire to an Apollo. In fact, we did speak to the management of CET as well. Krishna Defence has seen an order win. IDPI, the divestment is on track, and that's the reason why that stock is firing up. Car trade is up 50% in the month of June itself so far, so strong moves coming in on that counter. You have Lloyd's Engineering and Lloyd's Enterprises. Both of these counters are seeing some strong moves. Anup Engineering is another one. Now, real estate, last 2 consecutive sessions have been very strong when you talk about real estate as a pack. And now that BMC has cut the water supply to realtors right now in terms of construction activity, that sector has been under pressure. Trent, the stock is at a 7-month high, Eternal up 10% in 5 days. Dorms, there has been a block deal and Fila is likely seller on that one. And you have a Coforge where they're eyeing a $5 billion revenue by FY30. In fact, my colleague Puneet, who's actually attending the investor meet at the Coforge campus, you'll be seeing excerpts of that interview in today's session as well. Polycab has hit an all-time high. You have a Dixon, but the government is likely to approve the Vivo JV. That was an exclusive story brought to you by our colleague Shrimi on NDTV Profit yesterday. And that stock is firing up in trade. HAL and L&T, both the counters, are in focus, and this is on the bids for the IAF 30,000 crore UAV deal. Schneider, you have an Ambit, which has initiated a buy, and 5-star. That stock is up 15% in the last 5 trading sessions. So interesting names that we're watching out for. But Sharad, over to you to take the rapid fire with Kapil Shah of MK Global Financial Services.
Thanks a lot, Hiral, for that. Good afternoon, Kapil. It's always a pleasure to have you at NDTV Profit with us. We'll start the rapid fire round. And interesting small cap company Krishna Defence coming out with its order. When how's the chart suggesting? What key levels we should be watching out for?
Yeah, first of all, good afternoon to everyone. So defense stocks, they have given the triangle breakout today now, and the Krishna Defence is also, after the consolidation for a very good decent time, it is also giving the breakout on the higher side. And the level around the 1,200 level, which was acting as a reaction from past couple of days, 1,280 level, it is on the edge of breakout. So once we see the follow-up sign over there, so there can be a further extension of the upside momentum up to the 1,360 level, and the stock will maintain a positive tone as far as it is above the 1,250.
Kapil, take out the chart for car trade. Last 3 to 4 months, the stock has been on a tear. A good time to book a little bit of profits off the table, or do you think it's good to stay a hold rating, at least for this counter?
The stock has formed a very good base and it is moving on the higher side. So I believe that there can be the further extension on the higher side. Right now, the stock is trading at a 2,700 level. Mild profit booking can be booked at this particular point because of after the strong upside momentum. But remaining quantity can be hold for the 2,900 level.
Right, another stock trend, brokerages are turning bullish, little bit of short covering also at play. How do you see this counter playing out? Will we see a sustained move in the coming 3-4 sessions?
I see that means this particular stock, after the very strong declining momentum in the base formation, it is the very first time the breakout is happening, and many of the times the first time breakout is a deceptive as well, because we see some shots of a bull trap formation as well. So the first time breakout, I will let it go, and on the retracement, once the stock is around the 2870 level, at that time if I am finding the bullish pressure or buying momentum, then I will take a trade, but not this breakout.
Right, and how are the volumes looking like for Eternal? Is there any kind of signs of a breakout coming in this counter, or do you think there's still some more time left to be in the consolidation range?
From past couple of months, this stock particularly facing the resistance around the 265 level, and right now also it is hovering around that particular point only. To make the positive view on the Eternal, the stock has to move above the 265 level. So far, the stock is into the sideways to positive trend.
Right, that's the end of the rapid fire round. Over to you, Hiral. What are the Google trending stocks suggesting?
Thank you so much, Sharad, for that. Yesterday you had interesting names that had come in for the likes of Bharat Forge that had made it to the list. You had a couple of Vedanta group of companies that were also there today. Let's see what's happening. There you go. Vedanta Power continues to be there. Vedanta and Vedanta Aluminium, all the three after the demerger are trending. Yes Bank is very interesting. 4.5% up move coming in on that one. And a Dixon Technologies, again a 4.5% on that one as well. A couple, Yes Bank and Dixon Tech. Any view on the charts?
Yes,
Apologies, but we're not able to hear you well. Have some audio glitch with couple as we speak. We'll try going back to him, but you have all the three demerged entities to some extent in terms of Vedanta, which are trending as well on Google. But moving on, Pine Labs, interesting one to watch out for. Let's pull up that one on the screens. In fact, they did have their investor day yesterday. The stock seeing gains of 2.5%. Citi has maintained a buy. They have a target price of 235. They've given a growth guidance of almost 21 to 23% on a year-on-year basis, and what they've said is that this growth will be coming in mainly by online payments business as well as the prepaid business, and you're talking about affordability as well. They're seeing a substantial operating leverage going ahead, and the guidance is of a steady headcount despite product development initiatives. The prepaid breakage is not material to the company's revenue and EBITDA, and they're expecting an 18.5% top line CAGR over FY26 to 28, and the adjusted EBITDA margins are expected to expand to almost 26% or 30% if you have to look at the next two financial years versus what we saw of 21% in FY26. So that's with regards to where Citi goes. But another segment of business that is under pressure today, real estate. Let's pull up the real estate sector or the realty sector today, and let's also look at the 5-day chart, because that will tell you the kind of surge that had come in already there today. Lodha, DLF, Prestige, Godrej Properties, Oberoi, Raymond. Majority of your Mumbai-based real estate players are the ones which are trading under pressure today. The sector itself is down. In fact, and this is because BMC has halted water supply to construction sites, and this is on the back of a delayed monsoon and falling lake levels, which is tightening the situation. If you see the sector in the last 1 week, 7% is the kind of surge, and today you're seeing that downtick that is coming in there. My colleague Ridhima Bhatnagar spoke to a couple of developers in Bombay to understand the kind of impact it could have going ahead. Ridhima, what are you picking up from the real estate players that you've spoken to offline?
So indeed, due to a BMC stopping the water to the construction sites, there has been a crisis situation, and this is because of the delayed monsoon, and the water stock in Mumbai lakes has fallen to 10.35% as of June 29 as per a BMC circular. Now, the real estate companies are supposed to be impacted mainly in Mumbai region, Lodha developers, Oberoi Realty and Godrej Properties, to name a few, and they say that the impact will be seen if this crisis continues over 15 days. So, and they expect the construction cost to rise by 5 to 10%, whereas because of which the EBITDA impact of 4 to 5% is what the developers are saying, as they may have to rely on the alternative methods for which are at higher cost for the water. Now, the realty developers, they expect a short-term impact, and it might be manageable if the monsoon picks up, but a prolonged water shortage could impact the project timeline, the deliveries, and the cost and margins. Now, for background, real estate sector has already been facing challenges this year round. Now, it started with the labor shortage that had happened due to the election migration that happened, that had impacted, and also with the Middle East crisis, the rise in tile and the cement prices had seen an impact on real estate sector.
Got it, Ridhima. All right. Thank you so much for getting us this update, because what is important to understand is the kind of impact it could have if this crisis prolongs, the impact in terms of margins, because your construction costs could go up as well. But we'll quickly slip into a short break. On the other side, Sanjay Shah, Chairman and MD at Prudent Corporate Advisory Services, will be joining us to focus on the capital market play as the sentiment improves. Please stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Welcome back to Trending Stocks, and now we are joined in by the management of Prudent Corp, Sanjay Shah, the Chairman Managing Director at the company. Good afternoon, sir. It's always a pleasure to have you. And now it seems like the Middle East war concerns are coming off and the capital market theme is picking up. How do you see this phase, and how has the journey been, for the investors? What uncertainty was there in, say, March and April, and now how does it stand?
No, I think you are absolutely bang on, because if you look at in last one and a half, 2 year, retail has absolutely remained committed to the India story. And the biggest concern was the geopolitical risk and the market volatility. So if you look at, I think the investors are not making money before a few days. However, if you look at last 4-5 days of recovery, now 1 year SIP return in mid and small cap has been close to 7-8%. I'm telling you the SIP, the index return. So I think with this recovery and the negative news are behind, my belief is that retail will become more and more stronger. And to be very frank, we have not seen huge amount of pain as far as retail is concerned. So if you look at, I think industry picked out at SIP book of about, let's say the SIP book was roughly about 31,000 crore in December. And now we have just stayed below 31,000 crore. So I think it was a consolidation period of last 4-5 months. In this phase, my number has probably grown significantly better, because our SIP book was 1,188 crore in December. Now we are 1,205 crore. So what I just wanted to communicate is that there are two set of investors, one who invests directly without any assistance, and another set of investors who has the assistance of MFD or the regular plan. So lot of pain is not visible in the regular plan, but in case of direct plan, some amount of pain was there, but now I think it will get receded.
So, Sanjay, good afternoon. This is Hiral here. You're saying pain will be receded. So, from December lows to now, the way books are moving, from the way markets are, what's happening in the markets, equity, you talk about debt side of it. If the pain is getting over, what is it looking like for a Prudent Corporate Advisory Services from a business perspective? Because not only your company, industry across was seeing a very different sentiment all this while.
I'll just give you one data point, because at the end of the day, we represent the retail and our earning is linked to the average AUM. If you look at last year, we added about 14-15% the AUM, because last year my AUM was 1,09,000 crore. I ended March at 1,19,000 crore. So last full year, my AUM growth was about 15%, wherein the mark to market was hardly negligible. It was a 2.5%. In the current year, from 1,19,000 crore in 31st March, now I'm already at 1,40,000 crore. So my growth in AUM is about 15%, wherein about 12% came by way of mark to market and about 3% by way of net sales. And I'm assuming my net sales will continue to be about 12-13% the full year. And if the mark to market supports well, I think this year has to be reasonably well.
Right. Sanjay sir, apart from this, looking at the industries, there were some yield pressures also were coming in. Has that bottomed out also now?
Yeah, so yield pressure has came. So there are two things which has came as a change. One was rationalization of TER structure, wherein what they did is that our structure was inclusive of GST. They removed the GST and kept it outside the cost. So that was one change, which is probably for the large play, it was neutral. And there was another impact of about 5 basis points because of exit load. So on my entire book, there is a pressure of about 1.5 basis point on the yield, which has been visible in the month of April. Now I think it should get stabilized now. So for the full year, our guidance is that my yield should be in the range of 18 and 90 basis point.
Sir, thank you very much for taking out your time and giving the entire capital market sentiment, especially over the developments which we have seen over the last 1 week. It's always a pleasure to have you at NDTV Profit. Now we are running out of time and towards the end of the show for Trending Stocks. That's it from me, Hiral, and the entire team who have put together this wonderful show. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
The last week builds on positive momentum as benchmarks edge higher, with Nifty holding firm above 24,000. Defence and PSU banks lead the gains. Auto and realty, meanwhile, on the back foot. And oil prices extend their losing streak as markets bet on a US-Iran deal reopening the Strait of Hormuz. Expectations of stronger supply and return of Iranian barrels have pushed crude towards 3-month lows. Sellers could offer up to 14.89 crore shares as sources tell NDTV Profit that NSE is filing its DRHP today. Valuation could reach nearly 5 lakh crore. And PM Modi is going to be meeting US President Trump for bilateral talks on the sidelines of the G7 summit in France today. The focus is set to be on regional security, tariff and trade, as well as energy concerns. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities and news and updates as well on the top buzzers at this hour. But first things first, let's take a very quick look at the markets. When you talk about the Nifty as well as Sensex, they seem to have given up some of those earlier gains. Not quite close to the day's high as we speak, but when you talk about the entire sectoral picture as well, that is very sharply tilted in the favor of green. So you do have PSU banks, IT, metal, bank, energy, consumption, all of those sectors in good shape right now. What's not doing so well is realty on the back foot, auto, pharma and FMCG also holding on to a little bit of losses as well. Let's also talk about some of the stocks that are in focus right now. So IDBI Bank, on the back of the divestment being on track, seems to be gaining about 18% as well. So that's one counter that's buzzing away in trade. Schneider on the back of positive brokerage commentary as well. That stock is also doing quite well for itself, but from within the Nifty 50 pack as well. Something like a Trent, Eternal, Tech Mahindra, BEL, in great shape. What's not doing so well from within the Nifty 50 pack as well is something like a Tata Motors, PV, Cipla, and some of your auto counters on the back foot just a tad bit right now. But that said and done, let's quickly talk about the entire world of commodities in terms of the key updates coming in there as well. So when you talk about oil prices, they're extending losses, and let's talk to you about why that is happening. So you do have the US-Iran deal that has raised some of those supply expectations, and some of that supply has really started coming back, on the back of which you do have that loss really coming through as far as oil prices are concerned. When you talk about the Strait of Hormuz reopening, that's also something that you're keeping on your radar as well, on the back of which you do have that resultant movement really coming through when it comes to oil prices, and on the flip side for gold as well. But let's also get chatting with Viren Vakil, commodity consultant at Paradigm Commodity Advisors, joining us on the show right now. Thank you so much for taking time out, and a very good afternoon. First things first, wanted to try and understand why it is not a good afternoon for oil prices as well, and when do you think it's going to be, given that one of the biggest escalations, the biggest war premium that we've seen in recent times, it's completely unwinding, and how?
Quite dangerous are moved from Africa towards UAE. So I think
right, no, absolutely. And you know, we'll try and patch that line right now, Mr. Vakil. Before we get to you with all of those insights, let's also talk a little bit more in greater detail when it comes to some of these factors, right? Because like I mentioned, you do have oil prices that have seen quite the decline coming in. So you're looking at the longest losing streak in about 10 months when you talk about oil prices. And when you talk about some of the factors as well, bunch of factors that in fact make it to our list. So something like the reduced fears of prolonged supply shortages, also something that you're looking at. You do have traders pricing in increased oil flows as well. And in terms of some of the factors to really watch out for, you do have the timeline for the Hormuz traffic normalization that is very much in the spotlight. But we'll get you some of those insights a little later. Before we do that, let's talk about a source-based story as well. So talks for the 13th bipartite settlement remain stalled despite government's push to expedite negotiations. Piyush, what are your sources indicating on this front?
Yeah, that is right. We are hearing from our sources that despite the government pushing the IBA to fast-pace the 13 bipartite settlement talks, 2 months on, the IBA has not even formed a negotiating committee to settle the 13 bipartite settlement with the bank unions. Now, bank unions have an opinion that in the 12th bipartite settlement, it was agreed by both the IBA and the unions that going ahead, bankers will have a 5-day work week. This demand till date has not been met, and there's a lot of pushback from public sector bank employees on this particular front. Apart from that, unions also cite and bankers cite that there is a very big pay disparity in terms of the PLI scheme for different bankers, the senior ones and the ones in the mid to junior level. Now, in the 12th bipartite settlement, around 19% hike was agreed, and this time around, the government has set a deadline for November 2027 for these talks to be done, and unions and bankers are asking around 15 to 20% sort of a hike in their annual pay. Now, we understand that unlike central public sector utilities or PSU companies, banks don't really depend on the pay commission. Their wages are set by these bipartite agreements, and the 13 BPS like we referred is the deadline has been set at November 2027.
No, absolutely, and thank you so much, Piyush, for joining us with that update also coming in. So that's a source space story for you right there. But in terms of what else we're tracking at this hour, of course, you do have PM Modi, who's set for a key bilateral meeting with US President Trump on the sidelines of the G7 summit, their first face-to-face interaction in over a year. In fact, Modi is holding some of those talks with leaders from Canada, the UK and the UAE as India really steps up its global diplomatic outreach, and the meeting comes against the backdrop of some of those concerns over attacks on Indian crew vessels as well in the Gulf of Oman and growing focus on regional security. So in terms of what makes it to the agenda, you do have trade and strategy that could really dominate it, and other than that, Gulf security concerns, like I mentioned, very important to be watching out for. But it's time for a very quick break. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead.
Welcome back. Thank you so much for staying tuned in. Well, it's time now to put the spotlight yet again on oil prices as well as gold prices and get you some more insights as promised. In fact, Birren Vakil is joining back on the phone right now to help us out with some more details. Mr. Vakil, I wanted to try and understand first things first, like how we were discussing oil prices, right? Given that the war premium has really unraveled, what do you see going forward as well, and what are the kind of price levels that you're then expecting here?
There is a huge tailwind from the Hormuz unlocking. So I think there is enough oil barrel released by Western countries, USA, EIA, as well as the choke-up cargoes, around 3,000 plus ships. They are also pre-positioned to travel. So I think we may see crude towards 65, 70, below 70 in near futures, maybe 2 to 3 weeks.
No, absolutely. And I just wanted to get some more clarity in terms of what's the lowest that you see prices also falling to, because this is a very big headwind that you're looking at when it comes to prices, given that a lot of the supply is ramping up right now.
Yes, on ground there is a lot of supply in the form of crude storage tanks, and as well as because of some technology advancement in recent years, I think production would come in much faster. And Gulf as a region is also deprived of energy revenue. So I think we may see a little bit aggressive inflow of crude oil in going forward, maybe next quarter or so.
Absolutely. And very quickly before we move on to go on, any price levels that you then have in mind when it comes to Brent, right? The lowest sort of price level that you're penciling in at this point?
Looks like mean reversion at play. So somewhere around 55, 60 we can expect by third quarter or latest by fourth quarter.
No, absolutely. And that's a big sort of slide that you're penciling in, almost agreeing with President Trump when he said that prices would fall like a rock, as much as a rock, etc. And let's also try and talk about gold prices as well going forward. What are the key triggers that you're seeing there? And more importantly, what are the kind of price levels that you have in mind when it comes to gold prices?
I think with crude is falling faster, central bank may put on a hold, especially Fed. If they don't hike rates, market will also get another relief rally in interest markets. And there is a lot of risk-on appetite afterwards recent AI rally. So for gold, I think it will also get boost, and roughly speaking, 4,800 to 4,900, maybe 5,000 could be in horizon for 3 to 4 month time frame.
No, absolutely. And I just wanted to quickly put all of this into context for our viewers as well, right? If somebody has been waiting for fresh buys and waiting for the dust to settle in, do you think that this is time to buy in right now when it comes to new investors?
For timing, I'm very poor on timing. But as far as prices are concerned, it looks like a good bargain.
No, absolutely. And, Mr. Vakil, I think right now that is the case for everybody, right? When you talk about the kind of uncertainty that is on the table, it's not definitely not a market that you can time right now. But in terms of some of the factors to watch, anything else that really makes it to your radar? You've talked about central bank buying and that being a key factor to watch out for. Other than that, of course, the safe haven demand, that goes without saying. But any other factors that make it to your radar?
For me, key trigger is inflation. Because of exponential rise in M2 money supply, I think gold has rediscovered its old appeal of an inflation hedge.
That makes a lot of sense in terms of how you should be looking at it as well. Just wanted to very quickly try and understand what you think about the dollar weakness as well. If it sustains, do you think that that's going to be a key tailwind for gold prices as well going forward?
I think Japan is on aggressive monetary tightening. Recently hiked rate to 1%. It is almost 40-year high rates. So I think some carry trade unwinding is likely in dollar-yen pair. So it could pressure on dollar because there is also another problem in US, that is burgeoning fiscal deficit.
No, absolutely. That's quite the high coming in as far as central bank rates are concerned, especially Japan, like you just highlighted, Mr. Vakil. Thank you so much for taking time out and joining us as well and helping us try and understand that entire perspective when it comes to oil prices as well as gold. and the way forward for it as well. Let's also talk about a bunch of other details to keep an eye on right now in terms of some of the key triggers and the factors to watch. Like Mr. Vakil highlighted, you do have the safe haven demand that is remaining broadly supportive at this point as well, and you do have US-Iran deal that is boosting some of that sentiment. Also something to watch out for, but like I mentioned, Marico is something that you should be keeping on your radar. It's cut parachute coconut oil prices by nearly 17% in the month of June as copra cost ease after a sharp correction. Ridhima Bhatnagar joining in with all of those important details.
So parachute coconut oil prices have reduced by 16.7% in June. Now a lot of products are seeing a price hike, but indeed Marico has reduced the prices. Now 1 liter of parachute coconut oil will cost you 450 rupees, down from 540 rupees. A decrease of 90 rupees is being seen. This is as per the distributors. Now the main reason behind this is the fall in the copra prices. Now copra prices have fallen by 20% quarter on quarter. Remember that they have at 100% surge in FY26, Q2 FY26, after which they have been reducing the prices. And now how important is parachute segment for Marico? Around 32% of the revenue for Marico comes from parachute oil, and the EBITDA margins of around 19 to 20%. Now additionally, they have also increased the prices in their value-added hair segments. So jasmine oil price has increased from 45 to 50 rupees, up by about 11.1%. 5 rupee increase is seen in the 90 ml pack. Now this is mainly due to the paraffin costs which have risen. This is as it's linked to the crude oil, that's why the price has increased. And if you talk about this particular segment, the value added segment, the revenue is about 13% and the EBITDA of around 19 to over 20% in this segment. We reached out to Marico. We did not get a response for these price corrections, but this is something, a welcome move as far as parachute coconut oil is concerned.
Absolutely, and impacts all of us. Thank you so much, Ridhima, for getting us that detail as well. But that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Coverage and long-term savings. LIC नवजीवन श्री सेविंग्स का नया तरीका.
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volumes. But firstly, let's look at how the market has been performing. In fact, Nifty has been gaining now for the fourth consecutive session, and in the last 4 sessions, we have gained nearly 900 points in trade. It's cruising somewhat above the 24,000 level, and some gains that we are seeing when it comes to the Nifty Bank Index as well. Nifty Bank Index is up over 57,500. level currently. If you look at the sectoral indices, is the Nifty Real Estate Index, which has been down in trade. This is largely because of the water shortage in Mumbai, which could impact the operations for many Mumbai-based real estate companies, followed by Nifty Auto, which is also down around 0.7%. On the gaining side, we have defense, consumer durables, and Nifty PSU Bank Index, which are up anywhere between 1.4 to 3% in trade. So that's what we are looking at when it comes to the major sectoral indices. But when it comes to the Nifty Small Cap, yet another strong day of gains, up around 1% in trade. But which are the key stocks here, Mahima, that have been buzzing?
Right, so with regards to some specific small cap names, you have certain names that are doing fairly well, something like a Euro India Fresh, which is up, locked in upper circuit 20%. There's Igashi Motors, which is also seeing gains of about 15%. Blue Spring Enterprises has seen a significant gain since the 2,000 crore order win by its subsidiary, up 15% as well. You have something like a Tarson's product, which is also up 13.5%. Chemplast, which is also seeing gains of about 12%. Kirloskar Industries also seeing gains of about 12%. Ratnavir Precisions, Welspun Specialty, EMS Limited are some of the other names that are doing fairly well. But on the flip side, you have some counters which are under pressure. You have something like a Dishman Carbogen, which is down by about 4%. You have STEL Holdings, which is also down by about 6%, and SH Kelkar, which is also down by about 4%. So that's with regards to where all of these names go. But let's start with the first small cap stock. We're going to talk to the management of Sangvi Movers. Let's try to pull the stock up to kind of take this conversation ahead, because a lot is planned for FY27 as far as this company goes. We're joined by Rishi Sangvi, who's the managing director of Sangvi Movers, joining us now. Rishi, a very good afternoon to you, and thank you so much for taking out the time. Mahima this side. My first question to you is with regards to Middle East. There of course was disruption in the last 1.5 quarter because of this entire Middle East crisis. Just want to get a sense if because now that we are have reached a peace deal, just want to get a sense as to how much of disruption has happened, how much of it in terms of costing is going to be recovered in the first 2 quarters, and going forward, what is the plan with regards to where your Middle East business goes?
Hi Mahima, and good afternoon. Thanks for having me on your show. So given the current situation in West Asia, we are still extremely bullish on the Middle East because our market entry into the Middle East is more structural. There is a tremendous demand for cranes in the Kingdom of Saudi Arabia, supported by the Vision 2030, the FIFA World Cup, World Expo, and several international events that will take place in the country. So there is a long runway for the next 10 years in terms of infrastructure and oil and gas demand for cranes. And we are still bullish on our initial hypothesis to enter the market. Through the conflict in West Asia, we have also opened a new market in Qatar and enter the Ras Laffan gas field. So for us, we are at a 80% plus utilization on our cranes, 4% yield, and we have deployed 440 crores or will deploy 440 crores across last year and this year. All our equipment are going from port to cranes. So while there has been minimum disruption in demand, as we are in a long lead infrastructure cycle, we are seeing early signs of a little slowdown due to the disruptions in the supply chain. However, since the peace deal has reached, we believe that this will normalize in 2 to 3 months. The management is confident that we will be both cash flow and EBITDA positive at a cumulative level since incorporation within the first 2 quarters of this financial year. And this is reflected in our strategy to further deploy capex this year. As I mentioned, 440 cumulatively in 2 years. But this year we will deploy approximately 200 crores in KSA.
Could you just give us some sense of, given the fact that at least for the first quarter there was some impact, so what could be the impact on the margins or the EBITDA front because of the Middle East war that we had seen for Sangvi Movers, just specifically in the first quarter? Any number on that front if you could share?
So at a consolidated basis, the impact is negligible as the business in Saudi Arabia is still in a scale-up mode. What would have been impacted is how quickly we would have gotten into cumulative break-even as far as EBITDA and cash flow is concerned. And that has probably shifted by a couple of weeks, not more.
And the 400 crore that you're planning to deploy, what is the kind of incremental revenue that investors should expect? What is the kind of market share that you aim to gain in this new market?
So of the 400, 200 has been deployed and 200 will come, 240 will come this year. This capex is being deployed at a monthly yield of 4% with a projected utilization of 80%. So to that impact, this year we would see upwards of about 100 crores, 120 crores of top line coming from the Kingdom of Saudi Arabia.
What is going to be the breakup like in terms of your domestic sales versus whatever you're doing in terms of outside India? And 2 years down the line, what will that mix look like?
So right now, the majority of our revenue still comes domestically, and it's more than 90%. But going forward 2 years, we see a significant shift in the revenue contribution coming from Kingdom of Saudi Arabia and Qatar and Botswana as we continue to deploy capex.
Okay, is there a number in place as to how that mix will look like?
I think directionally it would be in double digits, around 20-25%.
And then do you expect margins to improve? And if yes, what is the kind of margin picture that you would see 2 or 3 years down the line?
So our EBITDA margin in the crane rental business in India is upwards of 50%. In Saudi Arabia, it's between 43 to 45%. This is, of course, we expect to scale up this margin and bring it closer to our Indian business margin based on our competitive ability to operate at a competitive cost structure in India. So we believe that margins in Saudi Arabia in the long term will stabilize around 47.5 to 48%.
Okay, so then blended margins could be anywhere between that 48 to 49 odd percent, if I'm not wrong.
For the crane rental business, yes.
Okay, all right, okay. With regards to your order book visibility, if I'm not wrong, 4,000 crore is already in terms of inquiry pipeline. What is your conversion ratio look like? And how much of it in FY27 are you expecting to convert?
Absolutely. So our secured order book, which is executable entirely in FY 26-27, is about 1,053 crores as of 14th May 2026. Now our inquiry pipeline is about 4 times that, and we expect to CAGR our top line at around between 30 to 40% this year. So this is where we believe we will end the year this financial year.
I believe recently you have also entered the African market. What is the kind of growth that you are envisaging when it comes to this continent?
So the African market was opportunistic. We followed our customer. Our cranes are being used to build a 6 into 150 megawatt thermal power plant in Botswana. Now that we are present in the southern part of the African continent, we are investigating the markets nearby, specifically South Africa, Mozambique, Zambia, etc. And we are looking to see how we can expand in that region. We have done this successfully in the Middle East. For example, we started in Saudi Arabia, and today we are also in Qatar. So we will use the same playbook in Africa to develop adjacent markets in the region.
Okay.
And also, if you could share some guidance for FY27, what the company is looking at on the revenue front, on the EBITDA front, growth numbers, anything that you could share?
Sure, Shamit. So, last year was a historical year in terms of our revenue and EBITDA and profit as well. This year, we are looking to CAGR that at around between 30 to 40%. We are, traditionally, we were a crane rental company that used to operate domestically. Now we have built multiple segments and geographies. So we are, as you mentioned, we are in Africa, we are in Middle East. For the crane rental business, we have also diversified our revenue by getting into engineering and construction for renewables. So last year we closed our order book around 450 crores with a bottom line of 40 crores. So that's a high ROCE, low EBITDA business. At a console level, the EBITDA will continue to remain healthy for the crane rental business around 50%. And on the EPC business or the engineering construction business for renewables, it will be around anywhere between 12 to 15%.
All right, okay, Rishi, thank you so much for taking out the time and helping us answer all those questions so candidly. Looking forward to speaking to you once your Q1 numbers are also out. But with that, viewers, it's time to slip into a very short break, but we'll be talking about more small cap buzzers on the other side, so do stay tuned.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
को भी संवार रहा है, तो वहीं डिजिटल टेक्नोलॉजी की दुनिया में भी हमारा देश छाया हुआ है। आज भारत काशी विश्वनाथ धाम के पुनर्निर्माण के साथ ही देश में 30,000 से ज्यादा पंचायत भवन भी बनवा रहा है।
In the last 12 years, a very strong foundation for this cultural thought and national identity has been built. And now, the government is moving forward to build a grand and modern future on this strong foundation. This is an India that holds on to its thousands of years of ancient culture while also touching the heights of modern science and technology. This is the resolve of a new and self-reliant India.
Oh no. It's not possible to buy a new home.
Vinny, it's really hot in here, right?
Yes, extremely.
Papa, it's not easy to plan for a new home.
Vinny, what's the best plan for long-term savings?
LIC Protection Plus plan.
LIC and savings?
Yes, you can invest in insurance as well as funds and adjust the sum assured as per your goals too. Wow. LIC Protection Plus plan. Future insured, growth assured.
Welcome back. You're watching Small Cap Buzzers here at NDTV Profit. It's time to take a look at the F&O space and what the setup is indicating. And we have Jasmeet joining by to give us a perspective on what the setup is, of course, looking like. Jasmeet?
Well, thank you for that. We did see a flat start to the overall day today, and then we also have a positive bias in the overall market today. We do see trend buzzing in today's trade, getting about 5%. We see recovery coming in the trend. Further, we also see further eternal gaining about 2%. Now, in terms of the top loser, we have stocks like Bajaj Finserv and Kotak Bank. The overall banking sector names we can see are seeing a downtick. Our Axis Bank is down about 0.5%. Now, when you look at the overall long build-up story, we do note that the overall F&O space looks attractive today. The trend is about 5%, while we look at Yes Bank is getting about 4%. Trend do makes a note on the terms of recovery, which is seeing after the fall, which we have noted. Now, when you look at the overall short covering, we have stocks like KFintech gaining about 3% and Dixon Tech also after the JV announced yesterday gaining about 4%. Now, in terms of overall stock long unwinding, we also have stocks like DLF and Prestige, which have seeing a downtick on the back of that water supply issue with the news came up in the morning, and the overall real estate pack is under pressure. Now, when you look at the overall short build-up, we have stocks again. We have Lodha, a real estate stock down about 2%, then you have SRF also down about 2.4%. So, all in all, these are the stocks that has to be on the radar on the back of the F&O space.
Right, Jasmeet, thank you so much for getting us those details with regards to where the F&O setup goes. But the other name that we're putting spotlight on is EMS. Let's try to pull the stock up. In fact, in the last 5 days, it's up 13%. And it's been buzzing since the last order win that it received. Today also is up 7%. However, 6 months, it did see a downtick of around 24%. So, recovering significantly from its low points, and 1 year also it's down by about 44%. Plus, volumes also looking very strong coming in on this one. So that's with regards to where EMS goes. It's basically a company, EPC company, and we have Jasmeet joining by to give us more details on what's worked, what's not worked.
Well, Vima, thank you for that. Before we get into the overall stock details, let's quickly understand what does the company do. Well, the company operates as an EPS supply chain where they basically work across the water and water treatment, and company also works across sewage treatment and sewage development and infrastructure. Now, when you look at the overall stock performance, the stock is seeing a strong up moves in today's trade, up about 7%, but over the long term, the stock has had a negative bias. Well, we look at the 6 month performance, the stock is over 24%, and over the last 1 year, the stock has tumbled nearly 44%. Well, the reason behind this is the weak Q4 and the weak FY26 that we saw in the company. Well, if you look at the recent order win, if we get on the FY26 details, we do see the company has won an order, L1 lowest bidder for the UP overall Lal Yojana, where they have gained really order worth was 102 crore, and this order is expected to be completed in next 24 odd months. Now, in terms of the Q4 performance, we did note that the overall Q4 was delayed on the back of the government orders, which impacted the top line growth for the company, and also overall conversion impacted. Now, when you look at the other key details, on the back of the overall West Bengal election, the company also saw a few disruptions where the overall projects in the West Bengal halted for the company, impacting the overall Q4. Now, in terms of the key numbers, we note that FY26 saw a revenue downtick of nearly 24% and the revenue came in at roughly 730 odd crore versus 961 crore in the previous year. Now, in terms of overall EBITDA, even that saw a similar impact. What as the revenue, even the cost remained elevated. So the EBITDA is down about 44%, while the margins dropped considerably from 26% to 19%. While in terms of net profit, that nearly halved to 91 odd crores from 181 odd crores. But now it's a wait and watch after the elections are done. How will the Q1 pan out for the company going ahead? Though the overall order book pipelines look strong for the company.
All right, okay, Jasmeet, thank you so much for getting us those details on EMS Limited. Stock up almost 8% as we speak. But with that, viewers, we're completely out of time on this edition of Small Cap Buzzers. But if you have got stock-related questions, then do stay tuned because Ask Profit comes up next.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, No hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective.
Hello and welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachharjani, and this is a show where we get all your stock related queries answered. For viewers who are tuning in, you can give us or send us your query on the WhatsApp number that's flashing on the screen up there, and also give us a call with all your stock related questions. Without further ado, we'll start taking all your stock related questions, and to answer them we are joined by Tapan Doshi, research analyst at ctapan.in, and Sachin Janardhan, independent market expert, joining us now. Welcome to both of you and a very good afternoon to the both of you. I'll start by taking the first question that is coming in from our viewer who says that he's a regular viewer. Thank you so much for that. Dexter is writing in from Kerala. He says he's been allotted 350 shares of Paradeep Phosphate since the IPO at a price of 42. Wants to know if he can continue to hold this counter. He's sitting on profits of over 30,000 rupees. Tapan, what would you recommend?
Well, here, no, if you see the profitability of this company has been decent over the time. Again, but the only thing is the fertilizer demand, we have to see how it will be from here. Again, no, if you see crop nutrition demand is improving, dependence on the government policies and subsidy, receivable days are also much more. So here, I think, on a rise, I think he can get out from this stock. I think the process looks dim here, little bit.
One that we have is coming in, and this is from Mahesh, who's asking about Eureka Forbes. He's got around 40 shares at the levels of 646. He wants to know whether he can continue to hold this one or not. Sachin, I'll come to you on this one. What are the charts indicating for Eureka Forbes?
Overall, the stock is actually in a downtrend and making a lower high, lower low pattern. So currently the resistance is around 470 and 490 levels. he should exit from the stock.
That we have is on Union Bank. This is from Maheshwar, who's writing us from Hyderabad. He's bought it at the levels of 50 rupees, he's saying. So he's sitting on significant profits, though he's not mentioned the quantity. But he wants to now know whether to hold or sell. Sachin, do you think charts are constructive enough to continue to hold to see further profits?
So this is actually disclaimer. This is one of the favorite stock of mine, and the trend is up on all the time frames, daily, weekly, and monthly time frames. So we are looking out. This stock can reach again 200 levels and 205 levels. So he can hold. There is no problem.
Okay, all right. The next one that we have is on Vedanta. I mean, we're getting a lot of questions on the newly demerged listed entries of Vedanta, and this one is on Vedanta Aluminium, as well as in fact all of these. And MM Kapoor from Lucknow wants to know that he's been allocated shares of all of these demerged listed entities, and what should he do next? What should be his course of action? Tapan, your view on this one?
So out of these 5 entities, no, I think the weakest is Vedanta Iron and Steel. However, if he wants to, I think Vedanta Aluminium and Vedanta looks good. Vedanta Power maybe go up slowly and gradually. We have to see the next quarter. And I think the last one is Vedanta Oil. That is also, I'm not too much sure. But I'm positive on two stock, Vedanta and Vedanta Aluminium.
Okay, the next one that we have is on Keynes Tech. This is from our viewer who's holding it since the levels of 3060. And he's holding 26 shares, wants to know if at the current market price averaging out makes sense or not. Sachin, your view on the charts for Keynes Tech?
No, I will refrain from basically averaging, because the stock is in a downtrend and making a lower high, lower low pattern. If right now he is in a profit, he should book the profits and exit the stock.
The next one is from Ishwar, who's writing us from Kolkata. From a long-term perspective, he wants to know if it's a good idea to invest in an auto and pharma or hospital sector. Tapan, both of these sectors have been doing very well. Plus, pharma has rallied quite a bit. Do you think it makes sense to enter in any of the counters in this space? And if any particular name that you like?
So I think both the sector is good. Auto, I think demand will be picking up as now the deal is already signed on the geopolitical crisis level, and now oil is going down. So if you want to buy now, I think M&M is a good level to enter for long term, and also TVS Motor. I think these two stocks you can go for auto. And regarding pharma, yes, I'm very much bullish on that. I think weak currency also helping pharma, and overall export is also going. There I will go for Lupin and Cipla.
Okay, all right. I think we've got our caller who's waiting by. Mohan is calling us from Mysore. Mohan, a very good afternoon to you. Go ahead, ask your question.
Very good afternoon. I just want to buy, can I buy Sirma SES technology for long-term perspective?
Okay, Mohan, got your question. Tapan, do you think Sirma SDS is the right pick in the EMS space right now?
It's a good stock, only the valuation is on a higher side. If you see over EMS outsourcing accelerating again, next year revenue growth looks strong, capacity expansion is there. The only thing is we have to see the working capital cycle, how it is spending on. But yes, I'm positive on this, but it should be in SIP manner, do not buy in one go.
The next one that we have is on Bank of Maharashtra. Divya is holding 300 shares at the levels of 79 rupees. She wants to know as to when can she exit, because she's sitting on profits now. Sachin, yet another counter that has been traders' favorite. Do you think it's still a good hold?
Again, disclaimer, this is one of my favorite stock. Yeah. And even I am holding this stock from 20 levels basically. So overall, the trend is good, structure is good. A small hurdle of around 96 and 97 levels are there. If that is through, then we can see 150 and 200 as well. So I think holding is a good strategy for this stock.
The next one that we have is on Bandhan Bank. Yet again a short-term query, and I'm sure that Sachin, this should also be on your radar, because this is also very recently broken its long-term resistance. Our viewer wants a view from a 6 months perspective. If this is a good entry point, what would you recommend?
So actually the stock is in a uptrend on a daily basis, but on a weekly and monthly basis, actually the stock is in a downtrend. So exiting the stock right now will be a good strategy.
All right, the next one that we have is a question that we have on Zydus Life Sciences, and this is from Sriram Raghuraman, who's writing us from Chennai. He's holding 30 shares at the levels of 360 per share, and he wants to know whether he can continue to hold this for the next 3 months or not. Sachin, your view again?
So on all the 3 time frames, daily, weekly and monthly, the trend is very much strong. Structure is also good. He can hold, there is no problem.
The next one that we have is on tech stocks. Our viewer Narsima Reddy from Hyderabad wants to know as to if he wants to invest in any tech stocks right now, which one would that be? Tapan, first thing, would you recommend that one? Because I think yesterday, if I'm not wrong, when we were speaking to a technical analyst, Gautam, he said that now IT seems to be bottoming out. And do you think technically also it's the right time to enter, considering that valuations have become quite comfortable?
Well, honestly, for the long term, if I want to say for next year, still I am not bullish on IT because a lot many other sectors are doing well. So focusing on that, but I think the margin will be an issue. Still, the revenue guidance are not up to the mark. Then also, if he wants to venture, I think Coforge is the only one stock, and maybe Persistent. These are the two. I feel that they are much better placed than other stocks.
All right, okay. So that's the view coming in on the IT space. But with that, viewers, it's time to step into a short break. But don't go anywhere. We'll be taking up more questions on the other side.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Welcome back. You're watching Ask Profit the afternoon edition. It's time for a rapid fire round. Sachin as well as Tapan, you both know the drill. Try to keep your answers as short as possible. The first one that we have is from Varun Beverages. Our viewer Ishwar from Kolkata is bought at the levels of 453. From a long-term perspective, continue to hold, book profits. Tapan?
Sell on rice.
Okay, the next one that we have is on LNT. Our viewer is bought at the levels of 3,200. Sell, hold, accumulate more. Sachin?
Hold.
Okay, the next one that we have is on Central Bank. What is the next target for this one on the charts? Our viewer is having 500 shares at the levels of 34 rupees. Sachin?
Exit.
The next one that we have is coming in from Siva, who is writing us from Amravati. He's asking about HAL. He's bought it at the levels of 5050. He says that he's sitting on a huge loss. He can wait for another 6 months. But Sachin, do you think he can continue to hold to see some recovery?
So below 4100 exit, till then hold.
Okay, the next one is on Glenmark. Sagar from Mumbai wants to know if it makes sense to enter right now from a long-term perspective. Tapan?
Buy on dips.
The next one is on GMDC. Our viewer Pramod from Bengaluru has bought 125 shares at the levels of 635. A 3 to 5 year view on this one, Tapan?
Hold.
The next one is on Dixon Tech. Our viewer Ramesh from Bengaluru is holding 5 shares at the levels of 1192. Wants to know if he can continue to hold or book profits. Sachin?
Book profit.
The next one is from Gautam, who's writing us from USA, asking about KPIT Tech. He's holding 1500 shares at the levels of 552. From a 2 year perspective, 1 to 2 year perspective, can he continue to hold, Tapan?
No, sell on rice.
Okay, the next one that we have is from Ram, who's writing us from Hyderabad, asking about Canara Bank. He's bought it at the levels of 136. He says his target is 140. Is it possible this month, Sachin?
140 is doable, yes.
Okay, the next one is on Cupid. 1500 shares bought at the levels of 96. Venkatramani from Bengaluru wants to know if she can continue to hold, maybe buy more for the next 12 months. Sachin, on the charts?
Hold.
The next one is from Professor Thomas George. He says if he wants to enter into one of the recycling companies from a long-term perspective, which one would that be? Any view on this, Tapan?
No, currently I don't feel any stock is there.
Okay, the next one is from Niva, who's writing us from Chennai. She's asking about Ratan India Enterprises. She's got 160 shares at the levels of 72. Continue to hold this from a long-term perspective. Any view on this, Tapan?
Yeah, hold.
The next one is on Ola Electric. Our viewer CK Matthew has bought 300 shares at the levels of 83. Should I hold, sell it off? What should be the next course of action, Sachin?
Exit.
The next one is from Sumana, who's writing us from Dubai, asking about Lloyd's Engineering from a short-term perspective. She's already holding 1,000 stocks at the shares at the levels of 83 rupees. Continue to hold, Sachin?
Lloyd's, which one?
Lloyd's Engineering. It's currently trading at 87. Her buying price is 83.
Hold.
Alright, okay, that brings us to the end of this rapid fire round. Sachin as well as Tapan, thank you so much for taking out the time and helping us answer all those stock related queries. Viewers, completely out of time on this edition of Ask Profit, but do stay tuned. India Market Close comes up next.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. on Editor's Cut. Our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. It's a little bit of a range-bound session today. You have gains of just about 0.2%. We're holding above 24,000. Remember that this is a very critical resistance level that was taken out today. It was tested yesterday and we failed to hold on to that mark at the end of trade, even though there was a little bit of a recovery. Now today, pull up the intraday chart and you'll see what I'm talking about. It's pretty range bound. Yesterday, you had a 125 point range, and from the bottom to the top, it's not a very wide range today either. It's actually not very significant, and we've failed to hold on to those higher gains. In fact, at this moment, you're heading a little lower. So pull up the heat map for the Nifty 50 and see what's moving in trade today. And it is more or less even Stevens between the gainers and the losers, and you will notice a few names that stand out with regard to those that are moving on the downside as well as on the upside. Trent is doing okay. There are a couple of brokerage notes that have come through. Things are looking slightly better. We'll come to that in just a bit, but the top gainer on the Nifty 50 followed by Hindalco, a little bit of a bounce back. Remember that the metal pack has been under a tad bit of pressure, and this may be some amount of buying that is coming in from those lower levels. Eternal doing okay, BEL, Tata Steel. So the metal pack recovering some of its lost mojo. Now, on the bottom end of the spectrum, you have Tata Motors PV, Investor Day coming through, and there are concerns with regard to Jaguar Land Rover and the near-term outlook for this particular counter. You also saw BMW Group that came through with a revised estimate for the current year, where it said that it's revising downwards its forecast for its EBIT margin performance, etc. So it does not necessarily reflect well for the sector as a whole and for premium car makers globally, of which Jaguar Land Rover is one. It doesn't look like a very good scenario. Cipla is losing about 1.8%, Bajaj Finserv, ONGC and Eicher Motors. ONGC is a talking point from the perspective of crude, which has cooled off quite considerably. It currently trades at below $80 to the barrel, so that's a significant talking point. Let's also pull up the broader markets and see how they're doing, because if anything, you have a similar scenario that has played out. In fact, it's practically a mirror of what is happening with the benchmark Nifty 50. We've lost quite a bit of ground from the high point of the day for the mid-cap index, but the small-cap index holding out. And that is why likely you will see a decent breadth, right? So you've seen a little bit of a closing from the widest point of the day, but you still have advances that are pipping declines at this point, though the gap is significantly narrower than it has been at the start of trade today. So pull up the sectoral indices just to close things out, and then we'll take you through the key talking points today. You have India Defence, that is the top gainer in trade today. The PSU banking pack is looking okay, up about 1.6%. Metal has come back, and I'd be curious to look at the intraday. We'll come to that in just a bit. IT is up about 0.7%. Consumption is okay. And on the losing end, you have auto that's underperforming. A large part of this will likely be on account of Tata Motors PV, which is losing considerable amount of ground, and realty. This is another talking point actually, because you will have heard earlier today, we spoke about this. The municipal corporation in Mumbai has announced measures to protect the water reserves in the city, which have slipped to critical levels. 10% is where it stands right now, and as a result of which the use of water for construction activity has been restricted. So pull up the constituents of the realty index, and you will see that those that are based in Mumbai are the ones that are losing ground. So you have Lodha, you have Godrej Properties that's losing ground, you have Oberoi Realty that's losing ground as well. Raymond down about 1/3% or thereabouts. DLF is down about 1.2% as well. Pull up the intraday for the metal index as well, because it's rebounded today up about 0.8%, and it's a pretty sharp rebound from the low point of the day. 0.8% higher. Hindalco now trading with gains, so that's certainly something to watch out for. What are the key talking points today? The Nifty gaining now for a fourth consecutive session. Of course, narrow gains, but now those gains are taking us above that 24,000 mark, gains of nearly 900 points in 4 sessions. The market's immediate focus remains on the 24,000 to 24,100 zone. Remember yesterday's session and today's session, what I said at the start is that the range has been pretty narrow. This is a pretty significant or critical resistance area. A decisive breakout above this range could trigger the next leg of the rally towards 24,500. Now 23,900 to 23,800 is the immediate support that you should watch out for, and 23,650 to 23,600 is the immediate support. As beyond that as well is a stronger support. Now Nifty Bank has outperformed the benchmark largely in the recent past. Gains are now for a 5th session in a row. The resistance is pegged at 57,600 to 800, and that is the immediate hurdle for this banking index. Above 57,800, the target could extend to 58,500. The support for this index is pegged at 56,800 to 56,700. We've got Nirav Ashar joining us on the program. Nirav, good afternoon, and thanks so much for taking the time. What is your perspective broadly? And before we get into individual names and sectors, the mood is positive. The macro setup is already looking significantly better. The rupee has recovered from those 97 levels, heading towards 94. So a lot of factors are playing in favor of the Nifty 50, certainly, and for the equity markets in India. What is your perspective?
Good afternoon and thank you for the invite. Definitely agree with you because the sentiment has improved vastly, and we have seen, of course, as we pointed out earlier also, that the crude oil continues to be the sore point which is impacting the markets, because we are dependent on crude oil imports to a very large extent, and with the correction in the crude oil prices, definitely it augurs well for the economy, because we've seen a sharp correction in the crude oil prices. After that, we've seen the volatility index come down. We've seen the 10-year benchmark bond yield stabilize. The volatility index has come down. So we've seen a positive impact of that on the currency as well. So I think all this augurs well, and a lot of sectors have started showing signs of improvement. We've seen a lot of sectors which are dependent on crude sensitive sectors do well in trade, which includes the oil marketing companies or the auto sector, auto ancillaries. We have tires, paints, textiles, etc. So overall, I think it's a positive impact, but now I think the markets will consolidate a bit, be in a wait and watch mode, and then move forward.
Specifically, so you've named a number of sectors, but in your pecking order, Nirav, individual stocks that you find are attractive at this moment based on something that you've come across fundamentally. For example, yesterday we had an exclusive story on Dixon Tech with regard to the Vivo joint venture, and it's a stock that is gained about 2.5-3% in trade yesterday. It's up about 4.5% in trade today. So something like that you're looking at that is positive.
Well, I think it's a kind of a revival story as far as Dixon is concerned, but still I think the valuations are still on the higher side, so they are looking stretched as far as these EMS sector companies are concerned. So would like to stay away from that, but I think there are sectors which are looking very, very compelling. So I think in the current trend, of course, we have power companies which are likely to do very well. The entire power ecosystem is buzzing quite well. We have a strong demand ahead of us as far as the power sector is concerned. And there's a strong visibility up to 2035. So I think stocks like GE Vernova TND or Hitachi Energy or Siemens Energy are likely to do quite well. Apart from this, there are a lot of stocks which could benefit from the entire ecosystem. Case in point could be companies like Apar Industries. So I think there is an entire ecosystem which is likely to benefit out of this. Apart from this, we also feel that if we were to consider the metal space, steel is doing quite well, but then there are companies like Graphite India or HEG or John Cockerell which are likely to do well because of the derived demand.
Okay, I just want to show you two contrasting stocks from the same stable, Trent and Tata Motor PV. And it's really those two charts side by side as a study in contrast. Trent is our stock of the day. It has posted sharp recoveries from low. Tata Motors PV has taken a big dive in the afternoon session because of updates coming from BMW, etc. But I'm going to go across to Mahima first on Trent. Mahima, Trent is stock of the day. What has been working for the company today?
Right, so I mean, if you take a look at the stock performance, right, Tamana, it has recovered quite a bit from its lows that we saw just 3-4 months ago. It's recovered almost 40% from its 52-week low, but still it's around 45% away from its peak that we saw probably a year ago. But with regards to what's been working, I think the commentary coming in was very positive when the annual report came in. The company has targeted to achieve and become 10x bigger in terms of revenue in the distant future. Of course, they've not given the timeline to this. Plus, they're doing significant expansion when it comes to the stores for both Zudio as well as Westside. Zudio, they're ramping up quite a bit even in terms of old stores. And the company wants to expand the current footprint of over 17.7 million square feet to a lot more going forward. Now, in terms of expansion plans and the key commentary coming in from the management indicates that the emphasis right now is on a sustainable store level profitability, but at the same time invest in select market opportunities. They want to strategize capital allocation for enhancing capacity as well as capability and expand international footprint across portfolio of brands both offline as well as online in this promising market. And they've also said that demand is also something that they've seen improvement in, and that's what is going to push the top line growth in FY27 as well. In terms of Q4 highlights, we saw as to how it was a strong beat versus estimate, especially margins where there was an operating leverage play out. Plus aggressive store expansion has also helped in terms of the top line growth. They did announce a bonus as well as a fundraise. So there was a major corporate action also that came in. In terms of where the valuations go, now this is an interesting one because we've never seen Trent below that 100 times PE. But, if you take a look at the 5-year average, that's at around 179 times. Currently, it's trading at 94 times, 1 year forward at 72 times, and 2 year forward at 58 times, which has never been the case for something like a Trent. So that's also one of the reasons as to why we're seeing an uptick in the counter coming in. Lastly, in terms of where analyst recommendations stand, the highest recommendation that we have is from UBS with a target price of around 3633, but around 20 buy calls right now, 5 hold calls and 2 sell calls is what we're seeing. The return potential, average return potential upside is just 4%, but highest target by UBS, like I said, is around 3,633. So that's, with regards to everything that you need to know about Trent and what's been working.
Okay, Amar Dev Singh joining in with us this afternoon. He's Senior Vice President Research at Angel One. Amar, thank you so much. I'm going to start with your take on Trent, and then we'll come to the indices, etc. Because Trent in focus right now. How much more to go on the charts?
Yeah, thank you for having me. So if you look at Trent, see what we've seen in Trent is that Trent had corrected significantly from almost its all-time highs of 5,500, then it came down towards almost 2,000 odd levels, and now it has pulled back. And today has been a sharp day for Trent because after a lot of consolidation. So the closing is going to be something which is going to be very important. And also what we are seeing is that if you look at the volumes over the last few days, volumes have been significantly higher even 2 days prior. And technically, if I look at the charts, clearly on the intermediate term trend, we've seen some bullish momentum built up in the stock, and the stock has a potential to rally towards the 3,200, 3,250 level. That's the immediate zone of resistance for the stock, because what we are seeing is on the longer term charts is moved from oversold territory, and on the shorter term charts it's broken out of key zone. So it's for it to remain consistently in the bullish phase, it needs to sustain above the 3,000 levels, and the next level to watch out for is 3,200, 3,250. And yes, it has made a very strong base. So the recent lows which the stock had made, that is unlikely to be tested in a hurry.
Okay, all right. Nirav, what's the view on Trent? Because while things might be looking up, the question always goes back to the valuations and whether or not there is margin of safety, one, and two, whether there's upside potential from this point on, and whether the growth justifies that valuation.
Well, there's no doubt that the valuation is on the expensive side, but the management has reiterated that they want to grow 10 times in the next 10 years. So I think a lot of thrust will be on the expansion going forward, and the company is working towards Zubiofication of the entire portfolio. We have around 75% of the portfolio which is centered around Zubio. So the margins will also move in that direction. And I think it's going to be a tall order. It's not going to be easy to achieve the kind of growth rates, but I think in the last quarter has given some hope to the markets.
But what is your call on Trent?
I think we remain bullish, at least in the near term. But I think post results, the scenario might change.
But are you advising a hold or a fresh entry?
Not a fresh entry at this point of time. It's a hold.
Got it. Oh, okay. All right. So you saw that split screen. In fact, I'd like to pull that up again. It's a tale of two stocks, both from the same stable, but heading in opposite directions. Tata Motors PV at the low point of the day, down about 8%, the worst performer, the benchmark Nifty 50. And that's because of multiple reasons. Of course, it's investor day and the prospects for Jaguar Land Rover don't necessarily look very rosy at this point. Hiral joining in to tell you about that, as well as possibly a further negative, Hiral, in the form of what BMW Group has said about the outlook.
Absolutely. So it started off actually with BMW, Alex. They've gone ahead and slashed 2026 automotive guidance by more than half. And that's the bigger story there. What they've said is that aggressive downgrade is what is reflecting acute deterioration in the premium auto market. Now, the automotive EBIT margin has been slashed down to 1 to 3% from a 4 to 6% earlier. And the automotive ROC, that's the return on capital employed, has been lowered to 1 to 5% from an expectation of 6 to 10% earlier. Now, if you talk about the pre-tax group profits, they are expected to show a significant decrease, and they've defined it as a drop of up to over 15%. And the downgrade is coming in versus the earlier forecast where they were expecting a moderate downgrade. So overall, yes, this is one of the major factors. Now, how does it impact India? It's a direct revenue hit coming in terms of a lot of auto ancillaries as well. For example, you have a SAMIL where 5% of the consolidated top line for this company comes from BMW. And if you talk about the Chinese automotive market, the core engine of BMW's earning deterioration contributes almost 11% from that front. So it's a double-sided margin compression that we are expected to see. Secondly, if you talk about Bharat Forge as well, now they're key suppliers of critical forged components to European players. So there could be exposure coming in there. Likewise, with regards to endurance technologies as well. Now, in terms of Tata Motors PV, it's a structured, macro headwind that you're talking about. For Force Motors, you're looking at an exclusive powertrain manufacturing partner when it comes to BMW in India. And lastly, when you talk about Tata Tech as well, they have a strategic relationship with BMW Tech Works in India. It's a JV. So all of these companies are the ones which will get impacted to some extent on the back of the downtick coming in by BMW on their guidance. Now, specifically when you talk about Tata Motors as well, one, we spoke about the BMW guidance. Now, secondly, the competition is what is worsening in China, is what BMW has indicated. And as we know for JLR, 16% of the sales come in from China. In fact, in terms of the investor day as well, their EBIT margin guidance is coming at 4%, which is lower than what the street was estimating. And they've said that OCF break-even, that will come in terms of FY27 instead of the operating cash flow, while the free cash flow is something that they would be watching out for. In fact, the free cash flow break-even by FY27 is going to look difficult at a 4% margin guidance. This is what the analysts were expecting. So, double whammy right now when you talk about a Tata Motors PV, mainly on a BMW cutting guidance and what they've said in terms of JLR.
And what's happening with the Chinese demand. Thank you for that, Hiral. That's fairly comprehensive. My sense is that you're not going to see that impact only on a Tata Motors PV beyond a point, but there's a direct impact about JLR as well. Nirav, we talked in detail about Trent. What's the take on Tata Motors passenger vehicle company?
Well, I think it's going to be a challenging time considering the fact that the EBIT guidance has been lowered. And it's at 4%, and basically with the cash flow being under constraint, definitely in the near term we are going to face a struggle as far as the company is concerned, as well as the auto ancillary makers.
And Amar, what about you? How are you looking at Tata Motors PV? Any opportunity there on the charts as you're seeing that dip?
Yeah, I would say that, one thing is very clear that the upside seems to be kept for the stock. So that is very clear on the chart. So it seems that it isn't going to breach the 400 level in the near future. But on the downside, it has got good support coming around the 340, 350 zone. So more of a trading play can be looked at this stock, because higher side seems to be capped at the current moments.
Okay. Let me go across now to Sumit Sarkar, who's joining us for that segment that you look forward to on this show. What's heard on the street? Sumit, you've had quite a few hits recently. on Hard on the Street. What's on your plate today?
Well, the first stock is actually Jana Small Finance Bank. Now, the buzz on the street is that there could be a block deal very soon in this counter. Dealers indicate that TPG could likely look to sell its stake in Jana Small Finance Bank. So keep an eye out for that name. Corona Remedies, there was a 7% equity that changed hand in trades today. Chris Capital is said to be one of the sellers in trade, and dealers are also indicating that HDFC Mutual Fund was one of the buyers in this block deal in trade today. For Vedanta Aluminium, the stock has been down in trade since the merger, since the listing post the merger that was announced. And this was largely because of the MSCI-related selling. But right now, dealers are indicating that large prominent HNIs have shown interest at lower levels in buying this counter. The stock was down around 5%, has recovered since then. So keep an eye out for Vedanta Aluminium in trade. For SBI, there are buy flows on institutional desks. Delivery volumes are expected to be on the higher side. A large FI once was a seller here, and that selling is largely over, is what dealers are indicating for SBI. And lastly, for Jaiswal Neco, there are buy flows on the large HNI and PMS desk. Dealers are expecting a positive news flow very soon in this counter.
Okay, Jaiswal Neco also in focus. But Amar, I want to come to you on some of the picks that you're seeing today among the crude sensitives. We've seen Interglobe, for example, doing fairly well through the day. Is that something where you see more traction coming in? Would you be looking at any of the paint companies, any of the OMCs?
Looking at Interglobe, Interglobe definitely the lower crude oil prices have helped, and the stock seems to be on the upside. But I would say that entry at the current levels is definitely not advised, because the stock has rallied by almost 20% from the recent close of 4,200. Currently, it's around the 4,900 level. Here, we could witness some sort of profit booking in the stock. So I would say rather stay away from the stock at the current levels. Those who are long, they can look at booking profits. Looking at the other stocks, BPCL also, we are seeing some sort of profit booking coming in, because for BPCL to witness any significant rally, it needs to sustain above the 320, 325 level. It's inching around 320 odd levels. So I would say these are levels where the stock with these stocks could meet with some sort of profit booking. So you need to be careful at entry at the current levels.
If you were to play, Nirav, something specifically from the crude sensitives, then how do you go about it? Because seemingly the direction is positive from India's perspective. We're already below that $80 per barrel mark, and there's a whole range of stocks that could have an impact, right? If you look at tire companies, if you look at FMCG companies because of packaging costs, you look at Interglobe Aviation and the aviation companies, what would you play?
Well, there are a whole host of sectors which could benefit from this. I'll give you the example of cement companies. In the case of cement companies, we have the power and fuel cost, which is a very important component as far as the cost structure is concerned. We've seen how Ultratech Cement got impacted because the price of packaging material went up, how the petcoke prices shot up. So I think the cement companies are also likely to be positively impacted by this development. So this is something which needs to be taken into account. Apart from this, I think one can also look at a select tire companies which could be beneficiaries. Although we have seen that rubber prices have been inching upwards, but still one could have a look at companies like CEAT or JK Tire, which are looking quite exciting.
Okay. Apollo Tyres in focus today, but there is so much more that's moving, and among them what's exciting is what's happening to mid-level banks as well. Look at a UCO Bank, look at an IDBI. You're seeing a lot of banks also moving about, not just in the bank Nifty. And there could be a variety of reasons for it, but these are largely public sector banks. And I'm not sure why they're in focus, but look at an IDBI, look at a UCO, look at a central bank, and all of them firing off today. Nirav, are you finding anything interesting in this place? In this space, IDBI Bank stands out for an 18% uptick.
Well, I think IDBI Bank has got something to do with NSE, if I'm not mistaken. There's an 18% up move over there. UCO Bank, Central Bank have given a strong up move. But qualitatively, I would like to look at a Canara Bank, Bank of Baroda, in particular Bank of Maharashtra and Union Bank of India.
IDBI Bank, maybe because of NSE. Let's pull up LIC as well and see if there's any action there. We've been reporting since this morning that the NSE DRHP is expected shortly. All eyes are on that mega IPO. It's likely to be the largest one in India so far. LIC also 1.5% up. A little more than that actually. I want to check the BSE stock as well, because really that's the only listed player so far. It loses that premium of being the only listed player once NSE comes on board, of course. 4% down on that stock. But the other space that has seen a lot of action is real estate, and specifically Mumbai-based real estate companies. All of their stocks are down today, and here's why. It's because the Mumbai civic body has halted water supply to construction sites as a delayed monsoon and falling lake reservoir levels tighten the situation in the financial capital. Realty names like Lodha Developers, Oberoi Realty, Godrej Properties will be in focus, with the move raising concerns over costs and their project timelines. Ridhima has been speaking to people in the industry, getting a sense of how Mumbai players are looking at this. Ridhima, what are you learning?
So BMC has stopped water supply to construction sites amid this crisis, and this moves follow the delayed monsoon and the lower water levels in Mumbai lakes. Now Mumbai water lakes reservoir has reached to 10.35% as per BMC circular which they had issued on June 16th. Now the real estate stocks are likely to get impacted by this. Your stocks in focus include Lodha Developers, Oberoi Realty, Godrej Properties, Sri Lotus Developers, to name a few. Now real estate developers say that the impact will be seen if this issue of water cut goes beyond 15 days. They say that the construction cost might rise by 5 to 10%, and they may have to resort to other alternative ways to get more water, which will impact their costs. And they also say that the EBITDA impact could be of 4 to 5%, and they say that short-term impact will be manageable if monsoon hits early, but a prolonged water shortage could impact project timeline, costs and the margins. Now we see that real estate sector has been facing pressure since the war began. Firstly, they were also facing issue of the migration of labor during the election period, which had caused project timeline issues, and then with the rise of cement price and tile prices, it had faced impact on the input costs. Now let's see how this situation pans up and when the monsoons actually arrive in Mumbai.
All right, thanks so much, Ridhima, for that. By the way, I was just taking a look at IDBI Bank's stake in NSE, and at this juncture, seemingly they do not have stake in NSE. They had a residual stake of less than 1% in September of 2020, which they exited. So, Nirav, it's not the stake in NSE that is causing this up move. Perhaps, if anything, there might be something to do with divestment, but we'll have to get that checked. So specifically on the regulatory move from yesterday, though, that had to do with non-banking financial companies and the ECLGS scheme, which is the credit-linked guarantee scheme. There was a move to reduce the risk weights to zero on 75% of the outstanding. Is that an incremental positive? And from that perspective, would you be buying into any of these NBFCs?
Well, I think as far as the NBFCs are concerned, I think this could be a positive move going forward. And I think overall the reduction in the 10-year benchmark bond yield definitely is going to augur well for them in bringing down the cost of funds and helping improve the NIM profile going forward.
Okay, thanks for that, Nirav. We'll take a very short break. We're coming right back with more news and updates. Stay tuned.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's...
Okay, about 20 minutes or to go for markets to close, and look at what's happening right now. It's going to be an interesting evening. Look at that big spike in the Nifty, about 0.5% up, after staying extremely range bound for the last several hours. And so what's happening this evening after market close? A couple of things to watch out for. That Prime Minister Modi and Trump meet is crucial. You're going to hear from the Fed chair, the new Fed chair, Kevin Walsh. The policy will be out tonight as well. All of these need to be kept a close eye on. But talking about the geopolitical event and that big meeting, Prime Minister Modi and US President Donald Trump will see interacting at the G7 summit in Evian, France. This is the first meeting between the two leaders in 16 months. The two leaders are scheduled to hold a bilateral meeting today at the sidelines of the summit. My colleague Vishnu Shom is joining us from Evian in France. He will be covering that meeting, and he'll be telling us what's on the agenda.
Well, in just a couple of hours from now, the big India focus as far as G7 is concerned, a meeting between Prime Minister Narendra Modi and the US President Donald Trump. It's a meeting which comes after a year. It comes at a time when both India and America are looking to get the trade deal between the two countries operationalized. There's apparently very little that needs to be done to get things underway. That's important because these have been negotiations which have gone on for a couple of years. The United States has made it very clear that they want to fix the equation with India. The US Secretary of State Marco Rubio was in India recently. The camaraderie between Donald Trump and Prime Minister Modi is well known. Even yesterday, there was the element of cordiality between the two leaders. But the 40-45 minute meeting today is important, and many people would want to know whether the issue of mariners, the death of 3 Indian sailors recently in the Strait of Hormuz after their ship was attacked by US forces, is something that will come up. It certainly had very strong reactions back home. The Prime Minister yesterday, to a broader gathering, had spoken about the importance of safety of international mariners in international waterways. So that, of course, is an India concern as well. But there are many other aspects of the relationship that both sides would like to look at. Besides the trade deal, there's the defense equation between both sides. There's the entire issue of visas as well. And so I think that meeting is going to be absolutely critical. It's also going to be essentially the last part of the Prime Minister's meetings over here at the G7. He's been meeting several other leaders for bilateral meeting. The German leader, the UAE leader, the meeting with the Canadian Prime Minister, where India and Canada appear to have fixed a troubled bilateral relationship to a large extent. But what will happen between Modi and Trump, we'll find out in the next couple of hours.
Okay, all right. Thanks so much, Vishnu, for that. And we'll keep coming back to you for updates over the course of the evening, of course. Now, take a look at the equity markets and specifically the benchmark Nifty 50. You will notice that we're trading at very close to the high point of the day, 24,085. Remember, the high point of the day is above that 24,100 mark at 24,108. That 100 level is actually a decisive resistance that needs to be taken out for an up move to go beyond that point. And the broader market's also looking sanguine at this point, looking okay. You have the mid-cap index is gaining about 0.5%, 0.8% for the small-cap index, and you're seeing that spike across the board, in fact, at this juncture. Joining us on this leg of the show is Shivangi Sarda, analyst equity derivatives and technical at Motilal Oswal, as well as Deven Choksi, a managing director of DR Choksi Finserv Private Limited. Both of you, thank you so much for taking the time. Just specifically on the technicals first, and Deven Bhai, I'll come to you for a couple of stocks in particular that stand out today, but I want to get the technicals out of the way. We're seeing a late run today, and the range has been pretty narrow, as it was in yesterday's trade. But Shivangi, what are you looking at in terms of direction?
Very good afternoon, Alex. Thank you for having me. We've seen that the indices have kind of moved in a very lackluster way in most part of the day, but slow and steady, there has been a good amount of buying that is visible. Now, there is some unwinding which can be seen at higher zones of the call writers, which is actually adding to the momentum in the index. But overall, we're looking at a positive take for the index and buy on decline to continue over here with the next levels of round about 24,400 odd marks for Nifty with a support zone of 23,900 zones. Of course, we've seen Bank Nifty also outperform, and the adding to the private heavyweight banking names are also the financial and the NBFC stocks, which are adding flavor to the index, and we are expecting a good amount of up move here as well. Of course, this has been the major heavy lifters in this recent rally. So Bank Nifty would be a buy on decline as well, with the next targets of around about 58,000 immediately and then 58,500 odd levels with a support of 57,250 zone.
Got it. All right. A number of pockets of strength in today's market. At the benchmark level, you may not be seeing the biggest move, but take a look at the defense pack. And this group of stocks is doing incredibly well in trade today. The defense index as a whole is gaining about 3.7% as I look at the screen right now. Paras Defense is roaring away with gains of about 18% or thereabouts. MTAR Tech is up at about 8%. Data Patterns, BDL, Garden Reach, the whole pack up over 4%. Cyan DLM, the one stock that is in that index that's losing about 0.7%. And consumer durables also as a pack doing well. The AC manufacturers, specifically Blue Star, as well as Voltas, doing well in trade today. And of course, the EMS players in the form of Dixon Tech looking good as well. Deven Bhai, so from the cohort of stocks that I've spoken about, the defense pack and the AC manufacturers, are you liking anything from here?
Well, Alex, I think most of the companies are definitely having a very strong tailwind because of the visibility of execution of large-sized orders that they have been receiving it. And nothing surprising though about it, market has properly fully factored them into the outcome as well. So from a perspective of looking at 1 year forward earnings from most of the defense companies, including some of the EMS companies which are catering to the larger brands, I believe that more or less everything is in price. And today, once again, I think these defense companies, 7 except couple of them, are reasonably quoting at a valuation which is probably justified in this market. Unless market gives some meaningful correction at the lower levels, chasing them and probably I think just riding the momentum is not something which we like. We would like to buy something at a corrected levels.
Defense pack is looking okay. Will you give the entire pack a miss right now, or are there still some opportunities that you might consider?
No, I think some of the companies definitely remained very, very tempting. Also, say for example, HL.
Okay.
I think it looks quite convincing. I think at current levels, they have got a visibility of order. They have missed the execution in the last quarter, but there is a risk I think which you carry for every single defense company. Here, at least the company is slightly corrected valuation. So at least you are relatively better off in case of they miss the execution targets.
Shivangi, what do you say about the charts though? Because quite a few of these stocks are seeing pretty healthy up moves today. Most of them trading at the high point even as I speak to you right now.
Absolutely. Defense has been very good, has seen a lot of good momentum right now, and a lot of catch-up rally can be seen in most of the defense counters. Of course, HAL has been one stock which is quite positive. And in fact, this is one of the portfolio stocks as well, but immediate basis, it's showing a lot of momentum as well. This could be considered as one of the BTST. And we're looking at the next targets of HAL of around about 4,600 immediately. Next up on my radar is BDL, which has also seen a lot of price volume surge here and should be kept on radar. This has actually recouped most of the losses of the last 3 weeks, and we're expecting a good comeback move here.
BDL is the second stock that is on the radar for the technical moves that it's currently showing. Let's put the spotlight though on a different stock, and it's from the banking pack. And the PSU banking pack, of course, is absolutely buzzing, but we're talking about Bandhan Bank, and we're putting the spotlight on this one. It's witnessing improved traction with pretty decent numbers in the fourth quarter, and some of those issues pertaining to MSME lending are getting cleared up. Sharad joining in to tell you about why this is a stock you should pay attention to and why the turnaround may be well underway. Sharad?
Well, yes, Alex, this turnaround is something which we already started seeing from the stock prices from December onwards. Already the stock is up 62% from there, but there are some key triggers to it. The Q3, Q4 numbers were pretty strong. The slippages and the SMA pools, they have actually declined. There has been improvement in the yields, reduction in some sort of costing, a little bit of change in the business model also. And remember, the MFI and the unsecured loan is challenging the EE book. That has normalized, and the share in the secured lending, that has improved to almost 58%. So operational numbers are definitely there, and the perception for the stock is also changing for the positive. Recently development was selling housing finance NPAs as well. That is also a good trigger for the stock. Remember that there is a lower future credit cost support comes in as you reduce your NPAs, and also the better ROA numbers come in. The stock, of course, had taken a big beating last year, and that's why the valuations also turned attractive. Management outlook and guidance also, a loan book guidance of 14 to 15%, and NIMs are likely to improve by 10 to 20 basis points going ahead. Credit cost and return on asset target are also pretty much decent. Looking at the valuations, it is still cheaper than its 5-year average price to book ratio as well, if you compare that with Karur Vyasa, RBL and IDFC First Bank. So there might be some more scope of up move going ahead as well. But of course, positionally, the stock has given returns of more than 60% over the last 6 months.
It's an important point, right? Pull up the year-to-date chart for Bandhan Bank, and you will notice that the low that was hit around the 15th of January seems like a bad dream, because the stock is up as much as 47% from that point. Devin bhai, do you look at this bank, and if so, do you think that the issues that it was facing on the asset quality side with regard to the MFI book, etc., maybe in the rearview mirror now, particularly based on the collection efficiency that they've started showing recently?
Yes, absolutely. I think few corrective steps that they've taken. One of them definitely is that they are bundling the entire non-performing asset portfolio of about 300 crores and retail lending portfolio of about 300 crores, and they're selling it out to ARCs. So in a way, they are basically freeing up their capital. So that's a positive side. Second thing, from pure unsecured lending business to a secured lending business, the corrective phase is already entered into in the sense that they already moved from unsecured to the secured side of the activity. And that is possibly resulting into some amount of conviction that this is not going to be one of an MFI story. It is going to be more of a structural growth story that is likely to be seen going forward as well. And that's where probably I think the market has seen the upside in this stock. Long way to go, if you ask me. I think if at all you want to consider them along with any other private sector bank. But yes, I think at least the corrective course has been taken. That's a good sign.
Speaking of stocks that have done incredibly well in the year so far, let's pull up BSE, pull up the intraday chart first, because the stock is under tremendous pressure today. It's down about 4%. But for the year so far, and 2026 has been an incredible year because it's gains of over 50% for this particular counter. Devenbhai, seemingly the trigger today is the imminent introduction or release of the DRHP of the National Stock Exchange. And the pressure of that peer coming into the play, money being taken off the table for a stock that has outperformed. But would you look at dips as opportunities to enter the stock?
Not so early. If I think the dip is coming at current levels, probably I think it has to be a meaningful dip. I don't think that BSE is going to go down in a hurry. That is for sure. The exchange definitely is a business which is more liked by the investors who want to see the annuity portfolio in their annuity stocks in their portfolios. So certainly BSE, NSE, MCX kind of exchanges definitely would find the position in those long-term sovereign funds or maybe insurance funds, the pension funds portfolio, where they reflect the higher degree of annuity income which they produce because of the very nature of the business. In my viewpoint, even if NSE comes, and NSE is likely to get listed on BSE first to begin with, so obviously the volume tailwind on BSE would be definitely providing support to the stock at lower level. Unless I think this is not holding and coming down, that would be a good opportunity to buy afresh into the portfolio.
All right, so that's a view on BSE trading just shy of 4,000 at this stage, down about 4%. Now, from a global standpoint, one of the key events to look forward to later tonight is the outcome of the latest meeting of the Federal Reserve in the United States. It's important not from the perspective of the expectation of a change in rates, because there's widely expected to be no change, but more so because of the address by the new Fed chair, Kevin Warsh. Let's head across to Hiral to find out what's lined up today. Hiral?
Absolutely. It's going to be an interesting one to watch out for because, yes, everyone knows that rates probably will be on hold. That's the expectation. But the focus is going to shift to the speech tonality as well. Now, Fed Chair Kevin Warsh, this is going to be his first FOMC meet and the first press conference from an incoming chair perspective. Let's look at the key expectations. They're likely to keep the policy rates on hold, as we said, and this is going to be the fourth consecutive meet where the policy rates will be on hold. The rates we are expecting is in that 3.5 to 3.75%, and what is interesting is that it is going to be a unanimous support. That is what is on the cards. Now, the committee will also likely drop its dovish or cutting bias. That is what is indicated so far. Now, let's quickly first understand what are the challenges that are being faced by Warsh as he's come in. First up, there is pressure from the White House in regards to where lowering rates goes. So he has to somewhere figure out how to meet with those expectations. Secondly, you're looking at higher inflation, which is resulting from the Middle Eastern crisis as well. And there is a two-speed economy that you're looking at, wherein there is strong AI activity, which is contrasting with the much weaker other part of the economy in the US. So that's the two-pronged or two-speed economy that you're looking at. Moving from there on, if you have to look at the key monitorables, one, the markets will be assessing whether the Fed's language is signaling a shift in its policy outlook or not. Secondly, the forecast updates in terms of the SEP. Now, whether Warsh will actually participate in the dot plot, that is going to be interesting. If there is any potential shift away from the forward guidance, that will be one of the key monitorables for us to watch out for. And whether Warsh is leaning towards a dovish tone in the press conference. Lastly, if there is any change in terms of the committee or what they're considering on its communication side of it, that is going to be the key monitorable as well. Very lastly, Kevin Warsh's debut communication strategy, what is that going to look like? First up, shift in tonality on the cards. So removing the easing bias is what you're looking at. Less forward guidance is number two. Third, his stance in terms of where inflation goes. future rate hikes, AI and productivity, and balance sheet management. And lastly, markets are expecting him to signal transition towards greater data flexibility. So all of this is on the cards, but the question is, everyone's going to be wanting to hear his speech and in terms of the press conference.
Okay, all right, that's well put, Hiral. Thanks so much for that. And we'll bring you updates, of course, first thing tomorrow morning, because this is going to be an outcome that comes through later tonight. Let's draw your attention back to the equity markets here in India, and I want to look at the broader end of the spectrum to see what's really moving. And there are few big movers, both on the losing end as well as on the gaining side. BSE, of course, we've already talked about, but a couple of other stocks that have gained in the recent past are losing ground. Fact, for one, fertilizers and chemicals, Travancore losing about 3% or thereabouts, Colgate Palmolive losing ground about 3% or so. You have Macrotech developers from the realty pack and a few other realty companies also losing ground. UCO Bank, IDBI Bank, and that entire public sector banking pack are some of the biggest gainers today. Schneider Electric continues to gain ground. In fact, this is a bit of a trend that seems to be forming. So in fact, this last stock, I would like to ask what the technical view is from Shivangi. Shivangi, Schneider Electric has been gaining for a few sessions in a row. If you managed to get it earlier, would you hold on to it? Would you get into it right now to ride that rally?
Yes, Alex, looking at this structure, in fact, we've seen quite a lot of move recently. Overall, this stock has been one which has held on and it has shown, slow and gradual up move. Overall, if you look at the technical chart setup, I'm looking at, some upside potential left. But of course, volumes have been little shallow. So overall, one has to be careful while trading this one. I would recommend a strict stop loss while trading in this one, and we could look at a base of 1220 odd levels. The next resistances are placed at 1300 immediately and then 1350.
Let's draw your attention to the IT index, and the IT index actually gaining ground in trade today, about 0.8% higher. It's building on the gains from yesterday, where HCL Tech, remember, was the top gainer for the Nifty 50. AI becoming core to Indian IT growth seemingly, with firms scaling investments and partnerships, but monetization remains a key challenge. Jasmeet joining in to tell you about more details here. Jasmeet, of course, that is the talk of the town with this Sarvam deal that HCL Tech led the acquisition of over 10% stake, and we spoke with both Sarvam as well as HCL Tech. But what are you picking up about the sector as a whole?
Well, Alex, thank you for that. I feel this is more of a AI catch-up than AI race. If you look at the current AI position of the IT companies, here's what all they're doing. While we see the overall pivot of AI moving from it's just being a pivot to actually being implied to the production, which is something which will be watched out going ahead. Further, AI is becoming a key talk of the town in terms of the strategies. The companies are aligning AI according to the overall company strategies and changing a lot of things based on the AI. Well, companies are looking at a two-way benefit from this particular acquisition, particular overall AI move. One is the internal benefits, what will help them increase the efficiency working using AI in their day-to-day work tools, also putting out the AI for the enterprise adoption as well. Now, in terms of the overall focus shifting, as I said, from the pivot to the enterprise-wise, and to see how the development happens. Now, in terms of why am I calling it AI catch-up and not a AI race, is because overall Nifty IT after the Anthropic released its tool in the Feb 30th, Feb 29th, we see the overall IT tumbling nearly 24%. On the other hand, Nasdaq 100, the tech giant, the tech stocks of the overall US, is seeing catching up and gained about 18%. So we do note that some people calling out the AI bubble, but India is still far away from the AI bubble altogether. Now, well, here are the few things that Indian IT companies are doing to catch up the AI race. The first one is the overall acquisition. If you look at the past data, IT companies have increased the acquisition in 2026 altogether, and most of them, almost 14 out of 16 of them, are in the AI space itself. Now, we look at TCS, it recently acquired Coastal Cloud for like 6,000 odd crore, and the overall positioning it was in terms of the Salesforce adopting the AI enterprises. Well, second one was TCS in List Engage, again used for the AI automation aspect. Well, we also have Encora, which was Coforge acquired Encora for like the biggest deal of the year for 22,000 odd crore. Even this was on the AI front itself to increase the AI span, and the company remains constructive towards acquiring more entities and doing that inorganic growth in the AI space. So what we have seen the trend here is the companies which cannot develop the AI in-house, they're acquiring entities to have that catch up. Now, well, we also have the second aspect of it, that's a partnership. Now, IT companies are also partnering with various AI companies out there to catch up the overall AI race. Now, there's something TCS with Anthropic, which is being talk of the town. Then we also have Infosys with Anthropic. And lastly, we have Persistent, which is doing with AWS to increase the overall software space. So all in all, it's a wait and watch how we have seen the tools increase from pivot to be the production part. But the revenue from the AI is yet to come and yet to show how this can be an overall uptick for IT companies.
I'll be keen to watch that as well. Thanks so much, Jasmeet, for getting us those details. By the way, you were speaking to HCL Tech yesterday. $650 million or thereabouts was the AI revenue in FY26, and they anticipate that that's going to grow on in the years to come at CAGR of about 30%. So that's pretty decent. Just about a couple of minutes to go. Let's pull up the benchmark Nifty 50 and see where it's heading right now. The intraday chart should give you a perspective of that. We're still holding above 24,000. That was par for the course, really. And we've come off the high point of the day, but it's been a pretty narrow band. Pull up the intraday chart for the Nifty 50 and you will see that we've seen a spike towards the end of the session, but from the bottom to the top, it's actually a pretty narrow band. In fact, if anything, I'll have to go back and check, but I think it might be a narrower band than yesterday. Pull up the broader markets and the gains are similar for the mid-cap index towards the end of the session. You see a pretty substantial up move, but gains of just about 0.5% or so. The small cap index has been the index with gains throughout the session today, and really that is reflective of the strength that you've seen in the broader markets in the recent past, and that continues from where we bounced from the lows at the end of March and the gains that you saw in April and May as well. So the small cap index likely ending with gains of about 0.75%. Pull up the advanced decline ratio, because this is going to give you a sense of how the breadth is moved through the day. And we do end with a gap between the advances and declines, but you will see that at the start of the session, you had a wider gap between the advances and declines. That's actually closed towards the end of the session. Just a minute or so to go. So pull up the heat map for the Nifty 50 and see where we're closing out. At the top of the screen, you will see Trent, and it's been a pretty good day for this particular counter because we're closing at very close to the high point of the day. BEL and the rest of the defense pack is having a field day today. BEL gaining about 3.5%, but Paras Defense leads the pack with gains of 18% or thereabouts. We'll come to that in a bit. Hindalco and the metal pack rebounding from a couple of days of being drubbed, actually. SBI Life, Eternal, as well as Tata Steel from the metal pack also doing okay. HDFC Life, but no real big heavyweights moving the ground. Of course, TCS is gaining about 1% or so. HDFC Bank just about flat. ICICI Bank as well, 0.2%. Reliance Industries will hover around the midpoint here, just about 0.3% higher, so not really moving the needle too much in trade today. What is losing ground is Tata Motors today, and really this is a story of Jaguar Land Rover and the prospects not looking particularly good for premium vehicles in the global setup, and that is reflective in the stock price movement in trade today as well. 8% or thereabouts on the lower end, just about a minute, and we're in fact closing out on the market with gains of just about 1/3% or 1/4% for the Nifty 50. So you'll take that at this juncture. From an international or global standpoint, what you will look for today is the outcome of the FOMC meeting and the first broadcast of a message by the new Fed chair, Kevin Walsh. The direction that he takes is going to be important to watch, and of course the expectation that he's going to do away with the dot plot, which so far has given you an indication of where the Fed's moves on interest rates will take you. That's something that's going to be very interesting to watch out for. It's been a decent day of trade, but that brings us to the end of this edition of India Market Close. From the team that put this show together, thank you so much for watching. Stay tuned. This is NDTV Profit.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this.
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have really fared today. So viewers, the street builds on the positive momentum as benchmarks edge higher, with Nifty holding firm above 24,000 levels. Nifty and Sensex both have ended at day's high levels, and broader markets have mirrored the gains as well. And with small caps, leading the gains on the back of value buying. And talking about the sectors, so most of the sectors have ended the day in green, with PSU banks, metals leading the gains, and auto and realty were on the back foot. Talking about the defense stocks, so they were in focus after the government announced that India's defense production rose to a record 1.78 lakh crores in FY26. Defense exports have also touched an all-time high of 38,424 crores, reinforcing the sector's long-term growth story. Now, the update highlighted the rising role of private companies, with their share in total defense production reaching 24%. And the milestone further strengthens confidence in India's defense manufacturing and export ambitions. Meanwhile, shares of air conditioners and cooling appliances makers, they've moved higher after a delayed monsoon and even patchy rainfall. They have raised expectations of stronger summer demand, and investors are betting that prolonged heat conditions could really support the sales of cooling products, boosting sentiment towards companies such as Voltas, Blue Star and Crompton. But the weather-driven demand outlook kept the sector in focus. And talking about some key buzzers, first up we have IDBI Bank that has remained in focus after extending its winning streak for a fourth straight session, and the stock has climbed to its highest level in 3 months, with trading volume surging to multiple times its recent average. And sentiment has received a boost after the government has reiterated that its divestment plan for the bank remain on track, and the sharp move also marked IDBI Bank's biggest single-day gain since January 2025 as investors continued to track developments around the strategic sale process. Next counter that was buzzing away in trade was Dixon Technologies, which has extended its advance for a fourth consecutive session as investors cheered reports that the government is likely to approve its joint venture with Vivo. So the stock has gained around 12% over the last 4 trading sessions and also climbed to its highest level in 6 months. And the potential approval is seen as a key milestone for Dixon's expanding electronics manufacturing ambitions, and also could further strengthen its position in India's fast-growing smartphone ecosystem. Next counter to look at is Apollo Tyres, which has continued its strong run, advancing for a fourth straight session and also climbing to its highest level in 2 months. And the stock has surged 15% over the last 4 trading days, with sentiment getting a boost from the sharp decline in crude oil prices. Now, lower crude costs are positive for our tyre makers as they can help ease raw material pressures and also support margin expansion. And with oil, hitting a 3-month low, investors have turned more constructive on the sector. Next counter to look at is Infosys, which has announced a collaboration with Walmart and also to reimagine its IT operations through an AI-accelerated transformation program. Now, this partnership will focus on enhancing operational efficiency, improving system resilience, and even enabling greater business agility over the long term. And the move also highlights growing enterprise demand for AI-driven technology solutions as companies look to modernize operations and even improve performance in an increasingly digital environment. Next counter to look at is Wipro, which has strengthened its artificial intelligence push with the launch of a new AI center of excellence dedicated to Claude models. So the center, inaugurated at Wipro's new innovation hub in Bengaluru, will focus on accelerating enterprise AI adoption, building specialized talent, and even developing industry-specific use cases. So the initiative underscores Wipro's ambition to expand its AI capabilities and also support clients in scaling AI-driven transformation. US General Insurance Corporation of India is in focus after the government announced an offer for sale of 3.5 crore equity shares. So the sale represents a 2% stake in the company and also is aimed at non-retail investors. Market participants will be watching the response to the offer as the government continues its divestment and also stake monetization efforts. Meanwhile, TCS has announced a multi-year strategic partnership with the Tottenham Hotspur Football Club, which is under which it will serve as the club's digital transformation partner, and the collaboration will focus on enhancing fan engagement, modernizing club operations, and even strengthening the broader digital ecosystem. So the deal further expands TCS global sports technology portfolio and even highlights its expertise in delivering digital innovation at scale. Next counter to look at is Ravindra Energy, which has deployed 45 heavy-duty electric trucks for Ultratech Cement, marking a significant step towards zero-emission long-haul transportation. And the fleet will be used to move clinker across North India, helping reduce carbon emissions in the cement supply chain. And the deployment also highlights growing adoption of clean mobility solutions in industrial logistics. And US banking stocks have dominated the trading activity, with Yes Bank rallying nearly 7% to hit a fresh 52-week high, with IDBI Bank surging as much as 12% on heavy volumes. And, the share move comes amid strong investor interest in select financial stocks, with both the counters witnessing significant trading activity. And the rally also highlights renewed momentum banking shares as investors continue to track the earnings visibility, ownership developments, and even sectoral growth prospects. And because the International Energy Agency says that the global oil market is set to recover gradually following the reopening of the Strait of Hormuz before moving into a significant supply surplus in 2027. Now, the assessment comes after the US and Iran have reached an agreement to end their conflict, paving the way for the resumption of oil flows through the critical waterway. Now, the IEA has said that the disruption had temporarily shut in more than 14 million barrels per day of Middle East oil output. And because China has released its next 5-year plan for implementing an employment-first strategy with a strong focus on maintaining job market stability and even preventing large-scale unemployment risks. So the plan is, to support employment in labor-intensive industries such as manufacturing, textiles, trade, and even construction, while also expanding job opportunities across services including elderly care, childcare, tourism, and also hospitality. And the United Nations World Food Programme has welcomed an $800 million funding commitment from the United States, providing a major boost to global hunger relief efforts. Now, the funding comes after earlier cuts in U.S. contributions and also will help the agency pre-position food supplies, expand cash assistance programs, and even maintain critical supply chains in crisis-hit regions. So the WFP says that the support comes at a time when global hunger levels remain elevated. And the European Central Bank has received encouraging signs that wage pressures across the Eurozone are easing. Latest data shows negotiated wage growth continues to slow, supporting the ECB's view that the recent energy-driven inflation spike has not triggered a new wave of pay demands. And the trend could really help policymakers avoid more aggressive interest rate actions if inflation risks remain contained. In fact, viewers, a new report by the Council on Energy, Environment and Water has raised concerns over India's energy security, saying that the country's strategic oil reserves covered just 9 to 10 days of net crude imports. So that compares with more than 200 days of cover maintained by countries such as Japan and South Korea. So the report also highlights India's dependence on a handful of supply nations for crude, LNG and coal, leaving it exposed to global supply disruptions. And it also calls for a faster energy transition and stronger domestic supply chains to improve the long-term resilience. Viewers, UK house prices have recorded their strongest annual growth in over a year, rising 3.8% in April after showing no growth in March. So the increase comes after property market activity has adjusted to changes in stamp duty rules introduced last year. Meanwhile, rental inflation has continued to moderate, with private rents rising at their slowest pace since early 2022. And talking about some national news now, viewers, Mumbai has announced tougher water conservation measures as reservoir levels fall to critical levels following a delayed monsoon. Now, the Brihan Mumbai Municipal Corporation, that is the BMC, has imposed a 20% cut in water supply to commercial and industrial users, while the existing 10% citywide cut will continue. So authorities have also halted new construction water connections, disconnected supplies to swimming pools, and directed major industries to use treated sewage water for operations. And viewers, authorities in Uttar Pradesh's Sambhal has carried out a bulldozer drive near Bhagirath Tirth to remove alleged encroachments and also illegal structures. And officials have said that the action was part of an ongoing exercise to clear unauthorized constructions and even ensure compliance with land and civic regulations in the area. And meanwhile, viewers, RJD workers have staged protests across Bihar on Wednesday, and they've targeted the NDA government over what the party called failed policies and deteriorating governments. So the demonstrations have focused on issues including rising crime, inflation and unemployment. Party leaders and workers have gathered at multiple locations across the state, seeking greater accountability from the government on public welfare and even law and order concerns as well. Viewers, security preparations have been intensified ahead of the Amarnath Yatra, which is set to begin on July 3. And authorities are conducting extensive search and sanitization operations at the Bhagwati Nagar base camp, and using advanced detection equipment. Metal detectors and also sniffer dogs are present there, and specialized central team along with CRPF personnel is also reviewing the security arrangements, with over 4 lakh devotees already registered. So the government is focused on ensuring a safe and smooth pilgrimage. Viewers, the tensions in the Middle East have remained elevated after a series of Israeli drone strikes and also air raids in southern Lebanon have left at least 4 people dead and even several others injured. And the attacks come even as diplomatic efforts continue to preserve a fragile ceasefire between Israel and Hezbollah. Now, the latest violence has raised fresh questions over the durability of the truce, with both sides continuing to accuse each other of the violations. Meanwhile, Prime Minister Modi is set for a key bilateral meeting with US President Donald Trump on the sidelines of G7 summit, their first face-to-face interaction in over a year. So PM Modi is also holding talks with leaders from Canada, UK and the UAE as India steps up its global diplomatic outreach. And the meeting comes against the backdrop of concerns over attacks on Indian crude vessels in the Gulf of Oman and even growing focus on regional security. And Prime Minister Modi and Canadian Prime Minister Mark Carney have held key bilateral talks on the sidelines of G7 summit, signaling further progress in rebuilding ties between the two countries. And the leaders have welcomed the positive momentum in relations and even announced new initiatives across trade, energy, security and defense, and also strategic cooperation. So a major outcome was the decision to begin the negotiations on a general security of information agreement, which is seen as a foundational step towards deeper defense and intelligence collaboration. And the US Federal Reserve is expected to keep interest rates unchanged at its latest policy meeting, marking the 4th straight hold. And markets are now focused on the new chair, Kevin Warsh's first press conference today, which could signal a shift in Fed's communication style. So investors will watch closely for any change in forward guidance, including whether the central bank moves away from its dovish bias and also adopt a more data-dependent approach. Moving to some sports news now, viewers. Real Madrid have reportedly completed the signing of Portuguese midfielder Bernardo Silva on a free transfer after the expiry of his contract with Manchester City. And the 31-year-old has signed a 2-year deal with an option to extend further, adding experience and also versatility to Real Madrid's midfield. And Silva's arrival is seen as a key part of the club's rebuild as they look to bounce back from a disappointing season. And the FIFA World Cup 2026 has delivered another day of memorable moments, and with Messi inspiring Argentina to a commanding win, while Kylian Mbappe and also Erling starred for their respective nations. And Austria has also marked its return to the World Cup stage in style with a convincing victory over Jordan. And as the group stage gathers pace, football's biggest stars are already making their mark on the tournament. And here's Lionel Messi has added another chapter to his legendary career with a record-breaking display in Argentina's FIFA World Cup opener against Algeria. So the Argentine captain has scored a stunning hat-trick in a 3-0 win, so becoming the oldest player to secure a World Cup hat-trick and even equaling, it's Miroslav all-time World Cup goals record of 16. So the match also marked Messi's 200th international appearance and even a historic 6th World Cup participation. Here's the trailer of Alpha, the first female-led film in YRF's spy universe, has finally dropped, showcasing a high-octane face-off between Alia Bhatt, Sharvari Wagh and Bobby Deol. Now, packed with action, and also emotional drama, the film sees Alia and also Sharvari team up, against a formidable adversary played by Bobby Deol and directed by Shiv Raval. Alpha is set to expand the YRF spy universe with a fresh female-led narrative. Viewers, Hollywood stars Tom Holland and Zendaya have reportedly confirmed that they are now married. putting an end to months of speculation surrounding their relationship. And the couple, who first met while filming Spider-Man: Homecoming and have long been one of Hollywood's most popular pairs, news of their marriage has sparked excitement among fans worldwide, with the duo continuing to keep much of their personal life away from the public eye. And viewers, as we wrap, putting the spotlight back on more context on an important meeting, Prime Minister Narendra Modi and US President Donald Trump was seen interacting at the G7 summit in Evian, France. And this is the first meeting between the two leaders in 16 months. So the two leaders are also scheduled to hold bilateral meeting today on the sidelines of the summit. And we have our colleague Vishnu Som joining us from France to tell us what's really on the agenda.
Well, in just a couple of hours from now, the big India focus as far as G7 is concerned, a meeting between Prime Minister Narendra Modi and the US President Donald Trump. It's a meeting which comes after a year. It comes at a time when both India and America are looking to get the trade deal between the two countries operationalized. There's apparently very little that needs to be done to get things underway. That's important because these have been negotiations which have gone on for a couple of years. The United States has made it very clear that they want to fix the equation with India. The US Secretary of State Marco Rubio was in India recently. The camaraderie between Donald Trump and Prime Minister Modi is well known. Even yesterday, there was the element of cordiality between the two leaders. But the 40-45 minute meeting today is important, and many people would want to know whether the issue of mariners, the death of 3 Indian sailors recently in the Strait of Hormuz after their ship was attacked by US forces, is something that will come up. It certainly had very strong reactions back home. The Prime Minister yesterday, to a broader gathering, had spoken about the importance of safety of international mariners in international waterways. So that, of course, is an India concern as well. But there are many other aspects of the relationship that both sides would like to look at. Besides the trade deal, there's the defense equation between both sides. There's the entire issue of visas as well. And so I think that meeting is going to be absolutely critical. It's also going to be essentially the last part of the Prime Minister's meetings over here at the G7. He's been meeting several other leaders for bilateral meeting, the German leader, the UAE leader, the meeting with the Canadian Prime Minister, where India and Canada appear to have fixed a troubled bilateral relationship to a large extent. But what will happen between Modi and Trump, we'll find out in the next couple of hours.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Oil prices continue to slide amid hopes for peace and opening of Strait of Hormuz. Crude hovering below $80 a barrel at 3-month lows. But Iran disputes the claim, says it can charge fees for maritime services. As the deal is scheduled to be signed on Friday on the peace deal between US and Iran, Israel continues to strike Lebanon. Israeli action in Lebanon could really trigger more Iranian retaliation. Iran wars Israel over Lebanon. Market ends higher for the fourth session. Nifty nears high point of the day. Holds above 24,000 ahead of the US FOMC outcome expected tonight. Rupee also ends higher for the fourth straight day. Closes at 94 rupees 53 paise against the dollar. India's defense production hits an all-time high of 1.78 lakh crore rupees. In 2025-26, Defense Minister says India's defense production hits all-time high of 1.78 lakh crores in 2025-26. In an exclusive conversation with NDTV Profit, Co-Ford CEO Subhir Singh says company aims to hit $5 billion of revenues by FY30. Prime Minister Narendra Modi will be meeting the US President Donald Trump for bilateral talks on the sidelines of the G7 summit in France today. The focus is set to be on regional security, tariff and trade and energy concerns. Messi magic continues with hat-trick in Argentina's 3-0 win at FIFA World Cup 2026, adds another major milestone in Messi's career. Hello and welcome. You've tuned into Profit 360. I'm Nisha Podar. Straight to the top story of the day. All eyes are now on 19th of June, with the US, Iran and Israel expected to sign the peace deal. But cracks are already visible. Israel remains firm on its position, continuing the strikes in southern Lebanon. Now, Iran alleges that Israel has violated the understanding 84 times since the MOU announcement. And US President Donald Trump has also hit out at the Israeli Prime Minister Benjamin Netanyahu, accusing him of jeopardizing the deal. Netanyahu, however, has made it clear that the deal or no deal, Iran will never be allowed to go nuclear. Amid these tensions, as well as the reopening of Strait of Hormuz, NDTV's Aditya Raj Kaul spoke to Israeli ambassador to India on this particular aspect. Listen in.
We are pretty much in sync when it comes to the strategic goals. The question is, what are the considerations and what are the obstacles to get to these goals? And I think Israel and the United States might have different perspectives because they have different constraints. Okay, there is the whole question of energy prices. There's the whole question of the approach of different countries that are also threatened by Iran, that are putting pressure on the United States. There are different considerations. So from time to time, because of these considerations, you can have gaps when it comes to the tactical moves.
Right. From India's perspective, remember that the Strait of Hormuz opening and our crude supplies are extremely critical. On this particular point, my colleague Vishal Vivek spoke to the top maritime security expert, Jacob Larson, on whether the Strait of Hormuz can really reopen and what it will really take to restore safe passage through one of the world's most critical shipping routes. Listen in.
Now, Jacob, your association BIMCO has advised that ideally the marine traffic would be directed by neutral body like United Nations. But does that look practical at the moment? Because United Nations to have a say in the matter, that looks like a tall order, to be honest.
Yeah, it is difficult, the current situation, no doubt about that. The UN's International Maritime Organization has been tasked with looking into a concept for evacuating seafarers on board the ships. So they are looking into how this could be done, and whether they will have the mandate and the necessary resources to actually undertake the planning, that remains to be seen. But if the political will is there, then obviously it can be done. Perhaps, if accepted by the warring parties, even India could play a role here. I don't think now is the time to limit the options. It's more to look into potential solutions and then ask and see what is possible.
All right, amidst all this talk and the expectation of Strait of Hormuz to be freely open, oil prices, they hit 3-month lows as the investors really assess the implications of a possible US-Iran peace deal. Brent is now trading near the $79 per barrel range. Below 80 is a good news, while WTI hovers lower around the $76 mark. Now, the easing of geopolitical risk in the Middle East has really helped cool concerns around the supply disruptions and also traffic through the Strait of Hormuz. However, the markets really continue to watch for further details on the agreement and its impact on global oil flows. So that was all about the crude impact, and that really has an impact on the Indian markets as well. So on to the equities, and the markets ended higher for the fourth straight session, with the Nifty really gaining over 0.4%, aided by strength in select heavyweights that was really coming in for Nifty 50, even as the global uncertainties really persisted. In fact, trend surged more than 7% in trade to really emerge as the top Nifty gainer, while Bharat Electronics added over 3%. In fact, the broader markets really outperformed the benchmark indices today, with the Nifty mid-cap 150 rising nearly 0.5%, and the small cap 250 advancing almost 0.7%. IDBI Bank that jumped over 16%, and UCO Bank gained more than 7% in the mid-cap pack as well, while Schneider Electric, Infrastructure and Data Patterns led the small cap. Sectorally, the defense stocks stole the show, with Nifty Defense Index really soaring nearly 4%, led by sharp gains in Paras Defense and also MTAR Technologies. So that was the picture of the overall markets really coming in. All right, going forward to a corporate voice really coming in. Coforge at its Investor Day highlighted $5 billion of revenues vision by FY30 and $2.4 billion by FY26. In fact, my colleague Puneet spoke exclusively to Sudhir Singh, the CEO and Executive Director of Coforge at its headquarters, and he said that they remain on track to hit their vision by FY20. Listen in.
As you go across this vision that you set for the company going into the next 4 to 5 years, you've given a big target or big vision or goal of $5 billion in terms of revenue. Talk us through that a little bit. You're currently at $2.4 billion, and an ambitious target at a time where there's a lot of disruption in the IT industry. What gives you that confidence?
Well, it's for starters, it's not terribly ambitious. All that we're saying is that we will continue the growth rate that we've been on for the last 9 years. This is just an extension of the growth rate that we've carved out for a decade. We aren't talking about going over and above and beyond it. We're just talking of maintaining it, though we'd be disappointed if we can't figure out a way at some point in time of pivoting that line upwards and accelerating the growth. So at this point in time, all we said yesterday was we have a run rate of $2.5 billion. All that we said yesterday was if all we do over the next 4 years is one acquisition of about $500 million and just maintain the rate that we've been on, we should, by FY30, be a $5 billion organization on an ongoing basis. So that's the contention. The confidence comes from the order book that's locked in. The confidence comes from an execution track record that's been second to none. The confidence comes from the fact that we aren't just talking about AI. Everything that we talk about when we say execution, getting things done, did get translated. And you did hear it yesterday in the investor call as well.
Yeah. You've never failed an acquisition. And you spoke about the 5 acquisitions that you've had. As we go through, of course, the beautiful campus, talk us through where does that confidence come from as well? Because that's a strategy that you expect to continue going forward as well.
Well, it's a mix of strategy and tactics both. There are 2 things that I marked out our approach towards acquisitions, and both of those approaches have been very contrarian. Number 1, when it comes to acquiring an asset, as we said yesterday, the contrarian approach comes from the fact that we never acquire a firm that is also being very actively solicited or assessed by any other organization. What that allows us to do is to do a very detailed due diligence, in person meet all the key clients, insist on meeting every member of the client services or the sales team. So that approach has worked for us, as you rightly said, over the last 5 acquisitions over the last nearly 10 years.
All right, on that particular note, we'll slip into a short breather on Profit 360. Come back for more news developments of the day.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Welcome back. Now, Prime Minister Narendra Modi and US President Donald Trump were seen interacting at the G7 summit in Evian, France. And this is the first meeting between the two world leaders in 16 months. Now, the two leaders are scheduled to hold a bilateral meeting today on the sidelines of this particular summit. And we have our colleague Vishnu Shom joining us straight from France to really tell us what's on the agenda and what's going to be the key points to watch out for. Vishnu.
Well, in just a couple of hours from now, the big India focus as far as G7 is concerned, a meeting between Prime Minister Narendra Modi and the US President Donald Trump. It's a meeting which comes after a year. It comes at a time when both India and America are looking to get the trade deal between the two countries operationalized. There's apparently very little that needs to be done to get things underway. That's important because these have been negotiations which have gone on for a couple of years. The United States has made it very clear that they want to fix the equation with India. The US Secretary of State Marco Rubio was in India recently. The camaraderie between Donald Trump and Prime Minister Modi is well known. Even yesterday, there was the element of cordiality between the two leaders. But the 40-45 minute meeting today is important, and many people would want to know whether the issue of mariners, the death of 3 Indian sailors recently in the Strait of Hormuz after their ship was attacked by US forces, is something that will come up. It certainly had very strong reactions back home. The Prime Minister yesterday, to a broader gathering, had spoken about the importance of safety of international mariners in international waterways. So that, of course, is an India concern as well. But there are many other aspects of the relationship that both sides would like to look at. Besides the trade deal, there's the defense equation between both sides. There's the entire issue of visas as well. And so I think that meeting is going to be absolutely critical. It's also going to be essentially the last part of the Prime Minister's meetings over here at the G7. He's been meeting several other leaders for bilateral meetings, the German leader, the UAE leader.
It's another con job. They made up the word affordability, but we're bringing prices down a lot, and they're coming down fast. And with the settlement, so worthwhile, with the settlement where you're not going to have a nuclear weapon, and then we bring them down on top of that. And I think oil prices might get lower than where they were before the war. So I'm going to see you at 4 o'clock, and we'll discuss that a little bit, and we'll discuss other things. But we've had a great meeting. It's been a great summit, and France has done a fantastic job. President Macron has been he's really done a great job. It's been very well received. Everybody here has been, I don't know if they've been happy. Some are not doing so well, but some are doing very well. But they've done a beautiful job. Thank you very much, everybody.
Thank you, President. The MOU has been reported. It includes.
Have I read it?
Well, it's been reported that it includes a $300 billion reconstruction fund funded by Gulf allies. That's false?
It's false. People, you can invest if you want. I mean, what am I going to do? Say nobody's ever allowed to invest? No, we're not investing. We're not putting up 10 cents. And people can decide to do that, but that's up to them. I mean, do you want me to say nobody's ever allowed to invest in a country? I'll say it with Egypt. Nobody's allowed to invest in Egypt. Am I supposed to say that?
I'm asking whether...
We are not investing in it, and we do not have a fund.
Are you asking Gulf countries?
No, I'm not. I'm not. If they do it, fine. But I would say they won't be doing it for a while until they find out the behavior. It's a behavior thing. But we are not investing. That's a false story that got picked up incorrectly from a statement that was pretty well made, I think. Maybe a little bit... could have been a little more accurate, frankly, but it's a story. We are not investing 10 cents. Don't forget, there's never been anybody that's been so tough on Iran. This should have been done by Clinton and Barack Hussein Obama. It should have been done by Biden. It should have been done by Bush. It could have been done by a lot of people. This has been going on for 47 years. They've ripped you off for 47 years, and I'm the only one that did anything about it. They never shot missiles at anybody. We wiped out their Navy. We wiped out their military. We wiped out their Air Force. They have no anti-aircraft. They have no radar. You know, the reason oil stayed low is because we were taking ships out every night that you didn't even know about. 2 days ago, 3 days ago, a month ago, we took out 22 ships. We averaged from 15 to 25 ships a night. Nobody knew that. Our Navy did a great job. Nobody knew what was happening. That's why oil didn't go to $300 a barrel. It went to 125, 115. Now it's at 72, 73. I heard it's lower than that now. I haven't seen it in the last couple of hours. No, we were very tough, and we took out a man named Soleimani. Remember that? You know, you think this would have happened if you were alive? The evil genius? He was an evil genius. People forget that. I took out Soleimani in my first term. Without that, you don't have the situation that we're in today where we dominated. We wiped out their military, and because we did that, and then we put up the blockade, which was totally effective. Not one ship got by, Steve.
Is the text of the agreement now final, or are you still...
No, it's not final. It's a memorandum of understanding, and if I don't like it, we'll go back to shooting at them, dropping bombs on their head.
When do you expect the wording?
If I don't like it, if they don't behave, we'll go right back to dropping bombs right smack in the middle of their head. Okay? Because they've misbehaved for 47 years. All right?
Does it include...
But nobody could have made this deal. I mean, the JCPOA done by Obama, he handed him $1.7 billion in cash, gave him hundreds of millions of dollars, gave him billions and billions of dollars, but he gave him $1.7 billion in cash, green cash from banks, into a Boeing 757 and flew it into Iran. And they stood at the plane. I have pictures of it, like, oh my God, look at this money he's giving us. He tried to bribe his way out. I didn't do that. Nobody mentions that. $1.7 billion and hundreds of millions of dollars. They tried to bribe their way out of it. And you know what the Iranians did? They laughed at Obama and they said he's a stupid son of a bitch. Okay, thank you very much, everybody.
That's US President Donald Trump on the sidelines of the G7 summit and taking the questions from the media, from the press on this Iran deal and what's next. And he clearly stated a few important points. He said that the deal is in the process and that's what they're working on. But he also categorically said that if there are any violations, they will not shy away from really taking action on that particular front, and also vehemently refuting any $300 billion funding of Iran as part of this particular deal, peace deal with Iran. That's what he really mentioned. So that he had categorically stated, refuted earlier as well, and now again refuting it vehemently. All right, FIFA fever is on. The defending champions have sent an early warning to the rest of the world there. Argentina opened their World Cup campaign with a commanding 3-0 win over Algeria. And once again, it was a Messi show once again, and the 38-year-old really produced a stunning hat-trick, equaling the all-time men's World Cup scoring record and becoming the first player ever to feature in 6 World Cups. Now, 20 years after his first World Cup goal, well, Messi is still writing football history and proving that he is in fact the GOAT. So all of us are really cheering that, but completely out of time on this edition of Profit 360. Keep it with NDTV Profit. Thank you so much.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300 300 300।
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, and in this show I'm going to get you interesting mid caps and small caps where they have come up with good stories, and also interestingly the recently listed companies at times. Of course, there's a little bit of hint to that as well, but I'll give you some more hints. Try to guess it. The company manufactures diesel generator sets. Hardly 3 to 4 players are there in the listed space. It was recently listed on April 2nd, 2026. I'm sure you must be guessing it by now. Mutual funds have interestingly a 15% stake in the company, and from the IPO price, the stock is up 23%. The company in focus is Powerica. Yes, this is the company which we'll talk about. And if you could understand why are we calling this company, and of course the first and foremost reason is of course on their Q4 numbers, the demand generation which is happening, and also how the client confidence is playing out. The FY27 guidance, we'll be looking out for both the DG, that is your diesel generator set business, and the wind power business. Of course, the revenue contribution is on the lower side. Will the margin mix change? Because both of these businesses are different, order flows are different, and the opportunities in the data center, that's something to look out for, especially in the power segment. And also the wind business portfolio, because there were some recent government changes also coming in. Will that impact this company or not? Further expansion plans, especially with their extra land in Khopoli, we would like to know what happens next. They already have 3 manufacturing setups, and of course the momentum in EV infra, defense, this new age sectors where a lot of bullishness is coming in the markets. And of course, to decode that, we'll have the management of the company, Ritesh Agrawal and Pradeep Om Prakash. But let's understand what does the company do. Let's get into the details about it. Of course, it's a recently listed company, but it's an integrated power solutions provider, and remember, this is just a recent listing on the month of April. Also, it makes diesel generator sets for primary as well as standby appliances. And on the other hand, the wind business, if we talk about it, it's an IPP as well as EPC services. They do a very smaller portion of businesses on the allied services. 3 important locations are also there where they are manufacturing, and an extra land is there in Khopoli, Maharashtra as well. Diesel generator business model is of course powered by Cummins engine. That's a pretty big name, and also it's you could say it's pure end-to-end solutions for medium speed and large generators are also there. Of course, they have a tie-up with Hyundai also, and that's a very big actually tie-up, and they have a bigger names also, and I'll tell you those names also in a while. Apart from this, manufacturing services for Schneider Electric's Prisma panels, that's also where the company is having its diesel generator business model. But look at the strategic tie-ups. There are very big names over here, which you can see we have discussed. GE Vernova is there, Vestas Wind Technology is there. So definitely the company is making some bigger moves. The FY26 revenue breakup, diesel is still the majority one, almost 83% of it. Compare that with 17% when it comes to the wind energy business. Apart from this revenue breakup business, the margin profile is pretty different. Diesel generator stands at 9%. Wind power, on the other hand, is at 31%. But let's try to get into the details why it may work for the company. My thesis, it's a strong sectoral tailwinds which are happening. New age industries need power. Companies there. It has turned net cash after the debt reduction in IPO, and that's a good sign for a company to follow. The third important reason is a stronger balance sheet which comes in after this. Also, importantly, there are 2 other reasons I would like to point out. That there's a good participation coming from institutions. Both DIs and FIs have invested in the company, and valuations are still attractive compared to its peers. But what may not work, medium-term impact might be there on the supply chain issues. There are rising prices, so those impact will definitely be there. Competition coming from the larger established players. They have tie-ups, but nevertheless, there is still a competition coming in. Wind power business is seasonal as well, so there will be lumpiness going ahead. But let's try to judge the company on the KYC rating parameters. We have the usual flows, the income statement, balance sheet, cash flow, return ratios, and also और details में अगर बात करें, then we also have your shareholding and street cred. But remember, take things with a pinch of salt. It's just been 1.5 months since the company has been listed. Valuations, I'll give you a very interesting analysis, especially with Cummins India and one more peer. Try to guess that, and outlook also about how things pan out for the industry as a whole and for the company. Let's start with income statement and let's see what's happening in the income statement. Largely, the numbers are single digit for operational profits as well as revenue. We need to give it a little bit more time to judge the company. This was there in its unlisted history, which was there, but definitely PAT up move has happened. Margins has been a decent set of a jump coming up in terms of the fourth quarter number, but it's too early to judge the company. Let's give in 3-4 quarters. So right now I'm going to give this a neutral rating, even though the margin slight downtick has come in, but they have maintained it at that 13% odd margins. Also, let's talk about balance sheet. What has happened? Balance sheet, one thing I have liked is, of course, this is the old number on the borrowings at 558 crores. This is expected to go down. Company has turned net cash also. This is because of the IPO proceeds where they have reduced the debt. The overall cash balance is pretty decent, 961 odd crore rupees. Of some expansion can happen, but right now it's a very strong balance sheet. And that's why I've given this a strong thumbs up. We spoke about income statement, balance sheet. Let's talk about cash flow and see what has changed here. Largely, there's been a significant jump coming in from the cash flow from the operation. The conversions have improved and even the net cash flows have improved. But let's give it a little bit of time to understand how this business model plays out. As of now, what we had discussed on the RHP and the Q4 numbers, it's been a neutral rating. Return ratios, pretty much interesting. Company is doing a little bit of expansion. So the numbers which we are seeing on the higher side, be it the ROC or the ROE numbers, they are reducing as well. So, but will this change on the business model? We need to give it a little bit of more time and then try to understand. But prima facie, it looks like there is a good reduction coming in the return ratios. There is a pressure. So I'm going to give this a thumbs down. Let's talk about the shareholding. And I had mentioned earlier that we just have for 1 quarter the entire shareholding, but what I liked was the FIs and DIs. That is where they are holding the majority of almost 20% chunk in that, and a very small retail float is there. So I'm going to give this a thumbs up when it comes to the shareholding. But let's try to understand street cred, what has happened. The company सिर्फ 2 अप्रैल को ही आई है आईपीओ में, तो सिर्फ आईपीओ और आईपीओ की लिस्टिंग से हम बात कर सकते हैं. लिस्टिंग वाज ल्यूकवार्म, 7% डिस्काउंट, सो दैट इज व्हाई द कंपनी हैज गिवन गुड रिटर्न फॉर द आईपीओ folks as well as people who have entered after the IPO for just a short period of time. I'm going to give this, based on just this, a good thumbs up when it comes to the numbers. Valuations, let's try to understand. Cummins India and Kirloskar Oil, these are somewhat the competitors, but they do have tie-ups as well, especially for Cummins India, that the trailing P is at 67 times and 45 times for its peers. But look at the valuations for the company, that's only 23 times right now. So the valuations are quite attractive right now also. That's why we are seeing a good DI and FI participation, and post IPO also there is a buying. So I'm going to give this a strong thumbs up as well. Let's talk about outlook. The last rating for our analysis, a double-digit growth target in FY27 in terms of business. Second important point, a healthy demand commentary coming in from all the business. A little bit of hiccups definitely there in the first quarter. This is because of the supply chain pressure which the management has mentioned. But apart from this, the collaborations and alliances with established industry players, that is where they are getting the credentials, and the electrification, renewables, EV ecosystem and data center growth. These are the new areas where a lot of demand is coming. So that is why I'm feeling that the long-term story is strong. Outlook I'm giving neutral because some medium-term impact would be there. But come over, I'll try to explain you the entire KYC ratings for the company. Where does it actually stand? Largely, the balance sheet has shown a good strength, return ratios a little bit of pressure. But if you look at it, overall shareholding and valuations are really strong. I've given this a thumbs up. And also the street cred post its IPO, the stock has sustained and done well. Outlook is also neutral. So overall, the KYC rating for Powereka stands at 5.5 out of 8. It's largely in line or a slightly better numbers at our average KYC show. Now we are joined in with the management of Powereka, Ritesh Agarwal, the group CFO, and Pradeep Om Prakash Gupta, the whole-time director. Good afternoon, gentlemen. I'll start with Pradeep ji. Pradeep ji, the first question definitely I want to ask is the FY27 guidance. The numbers were pretty decent, and this is the first time you are coming in KYC as well. So we wanted a little bit of broad view on how the outlook and the business growth guidance looks like for FY27. Pradeep ji.
Yeah, Ritesh, can you take over? So, thank you, Sharad and NDTV for having us here. So our growth
when we see from a guidance, our growth continue to be led by our generator set business, which remains the larger part of our portfolio and is benefiting from the increasing demands from the sectors like data centers, manufacturing, infrastructure, and the real estate, along with the critical backup power applications as needed in various sectors. At the same time, we also expect that the wind power business to grow faster than as compared to the other existing business of a genset, supported by the capacity addition as well as a growing renewable energy ecosystem across. Over the next 2-3 years, while the generator set business will remain dominant contributor, we also expect that the renewable sector will grow faster, as well as the medium speed large generator business, so that will have a further traction.
Right, and Ritesh, another question for you would be the margins. How does the margins actually come up, for both of these businesses, and on a blended margin front, what you are expecting, in the coming years?
Sure. So margin generally led, so from a generator set business, so it is generally, as we reported, 9% this year. And last year it was 8.35% in terms of a generator business FY25. So we see that the margin leverage, which is been coming out with the investment that we have already done. There are certain investment, as I mentioned, our data center business is growing, and that is further the data center has taken up the larger chunk, and that's that has been seen a promising. So Powerica, from the as a first mover earlier, we have invested back into the people as well as the processes in terms of a data center. So that has been taken up. So now we are getting that fruits out of the tree that we have planted earlier. So that's where we see the margin will get better over the period.
Right. Right. Apart from these numbers, how does this data center business actually work out, Pradeep ji? What are the company's plans going ahead? Because this is a very important segment. बहुत power लगता है इस धंधे में. Just wanted to understand, how is Powerica placed?
So data center business, if we see, it's a significantly promising business. Per se, as we talked about cloud computing, we talked about various additions that we are working, and especially the AI-led data center, which is going to come up significantly. Further, this year we have seen in the budget, the announcement was that the tax holiday for data center until 2047. So that gives a further fuel. If you go back to our industry report, which was published along with the prospectus, which talks about the data center CAGR is about 20% over 5 years from 26 to 30. That is a pre-budget. And now we all talked about that with the tax benefit and many other initiative that has been seen. So we see that data center growth will be more than what is given in the industry report.
Right, Ritesh ji, that's pretty interesting. But I have a query for Pradeep ji. He has been a little bit of silent right now. Pradeep ji, if you can hear me, just give me a signal. I just wanted to understand, there are 3 important manufacturing facilities and there seems to be an extra land in Khopoli. What are the utilization levels looking like, and are you looking to expand going ahead? This question is for Pradeep.
Yeah, so basically the first 2 factories of Silvassa and Bangalore, we are using it for completely for our Cummins business, and the Khopoli factory, we are using it for our allied business, which we have for the Schneider and different end use. And we have 24 acres of that surplus land, and we have applied for the expansions in the Khopoli factory. And definitely very soon we will be adding the sheds in the Khopoli.
And of course, if you look at it, there is a good momentum coming in the EV infra, the defense space as well. Just wanted to understand, Pradeep ji, this is from you only, for these new industries or the new sunrise industries, how is the demand trends or the client confidence looking like, and how is the execution you're going to do coming ahead in the next 6 to 12 months?
So here we are making the acoustic panels, and as well as the control panels, we are making it for the Schneider. So that's a very just startup basically business, and we have made the patents in that, and it's a very about 30-40 crores of the business which we have started, and it's going to grow at a rate of 25 to 30% per annum basis.
Right, that's pretty much interesting. Ritesh ji, I have a question for you, because Q1 is something which a lot of companies are going to get impacted. Let's face it, that's the fact, be it your company or the industry. Are you looking at, like a kind of, you could say a major hit coming in your margins right now, or you'll offset it with some different strategy for the company?
So I wouldn't say that we are not impacted because of the geopolitical issues which was there. Just to give you a perspective that there is a price rise in terms of a commodity. So we work in the business where it is led and it is being defined through the commodities, which is including steel, copper, aluminum, if you talk three major. And all three has been impacted since November. The price rise has been there, whether it is a steel, copper, as well as from an aluminum side. And even during the geopolitical tension, this has been increased sharply. So when we see on the margin side, and from an order book side, so we always have an order book of about 6 months or so. So while you fulfill and the price rise happens, maybe say quarterly. So now you fulfill the demand which you already have. Though we speak and we work on the margin pass on to the customer, it takes about 3 to 5 months time.
Perfect. That's an interesting take. Pradeep ji, one last question on the wind business. How is that outlook looking like?
So that's basically that with the current geopolitical situation, the energy security has become very, very important for the country. And earlier there used to be just the addition of basically the capacities in the country, but now the country needs the building up of the energy ecosystem. So basically the demand is coming from the data center, green hydrogen, you can say the EV, industrial electrification, urban infrastructure. And from the supply side, you know that we have to achieve by 2030 500 gigawatt of the green power. So the wind and solar need to be added by almost 50 to 60 gigawatt every year. And for that, we have to strengthen the transmission line, energy storage, battery storage, pump storage, and supply chain we have to strengthen. So currently we have about 330 megawatt of operational asset, 50 megawatt. Recently we have added the capacity in the month of March 2026. An additional 50 megawatt is under construction, which is going to be added, you can say, by December 26. So frankly speaking, on an average, whatever we have added, we are going to have the ambitious plan for adding the renewable power in our portfolio by adding almost 30% to 35% year-on-year basis. And we will be doubling the capacities almost by 2030. We have a very ambitious plan because the eco energy system which is there in the country, we want to take the opportunity.
Right, Pradeep sir. So we understood the entire process for the wind setup. We are out of time, but the conversation was pretty interesting with the management of Powerika. It's always a pleasure to have you, Ritesh ji and Pradeep ji, with us at NDTV Profit, and best of luck.
Thank you.
So that's the management of Powerika we're talking about, and a little bit bullishness coming in, especially from the wind business. And there are some new age sectors also where the company is going. Valuations are cheap as compared to the other peers. So it'll be pretty interesting to watch a company like Powerika. So for interesting stories like this, stay tuned to NDTV Profit, and yes, keep watching KYC.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's happening.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. If you use a credit card, then chances are that you've gotten a message from your service provider asking whether you want to increase your limit. That is, if you've been paying your credit card bills on time. The question is, should you utilize that? And should you increase your limit whenever the option presents itself? And what determines the limit that you get in the first place? We're going to talk about that at the start today. Nasir Salim, the Managing Director of Flexi Capital, joining me today to talk about that. Nasir, important because a lot of people don't really understand how credit cards work and the nuances to it. So let me get that first question out of the way in the first place, which is, how is your credit limit decided?
Hi, Alex. Great to be back on your show. So again, a great topic. Clearly everyone seems to be using their card limits to the fullest. So a very important, pertinent question there. I think what really determines the credit card limit is, it's a combination, Alex, of one's income, credit score, repayment history, and existing, leverage or debt rather that they've that they're sitting on. I think banks are essentially assessing how reliable you are with money before deciding how much credit to be extended to a particular investor. So I think in simple terms, Alex, it's your limit that reflects how much the bank trusts your financial behavior.
Yep.
So it's a combination of all of those put together.
Yeah, and to a certain extent, it is your credit worthiness which is determined by, or rather which is reflected in your credit score as well, which could have a bearing on the initial limit that you are given. But subsequent to that, based on your spending patterns, you could be offered an increase in the limit by the bank. How often can that take place, Nasir?
So clearly there is no particular formula, Alex. It should not automatically accept every credit limit increase. I mean, a client, every time you get an increase in the limit, there is no set pattern. However, if a user is disciplined and he pays his dues in full every month, a higher limit can, the bank can offer you higher limits. However, if one tends to spend more when you have, access to more credit, it can become a big problem. So, the key is to accept the limit, but not increase the lifestyle along with it. I mean, that is broad, point that I would like to at least talk about.
So Nasir, the other thing is, right, you can have multiple cards and of course, you'd be judged based on the utilization. We'll come to that in just a bit. But hypothetically, I could have one card with a 2 lakh rupee limit, and then I could go and apply for another card, and they look at my credit score and give me another 2 lakhs. So effectively, spread over 2 cards, I have a 4 lakh limit. So how does that work? Would a credit bureau that judges your credit worthiness look at how much you have in overall credit?
Absolutely. I think that's a very, very important point again. So, Alex, when we look at the overall credit score, it's a reflection of all your credit lines available. So it could be from multiple cards. It could be from card, provider A, B, and C. And also what's really important is, what we have to understand is a higher credit limit also improves one's credit score because it reduces credit utilization ratio, which is basically a function of the amount of spending that one does, and also gives you more flexibility as a user. But broadly, from a credit score perspective, it's all linked to your credit score, multiple platforms that you use your credit line. It gives all banks the aggregate score, which is reflective on the credit score, which broadly in India we use something called CIBIL, which is the Credit Information Bureau of India Limited, which shows up all the credit scores collectively of all platforms that you've used in terms of credit cards.
Now, how much of your credit card limit should you be using on an ongoing basis? Because I've heard 30-35% is what a lot of people suggest is the upper limit of what you should be utilizing, because when you cross that 50, 60, 70% mark, then that is viewed negatively by the credit bureau.
Yes, absolutely, Alex. I think it's good. It's a good discipline. It is generally recommended that you keep your usage below 30%. But again, there's no set formula here. But what we've been reading and we've been seeing is that a good usage below 30% is a decent percentage to be used of your total credit limit, and ideally even lower for best impact on your credit score. I think the idea is very simple. Use your credit card regularly, but never come close to exhausting its limit.
Yeah, okay, that's a good point. The other question is, a lot of people tend to utilize this and say, look, so I have a 5 lakh credit limit. I can use this as an emergency fund as well, because ultimately you can go and swipe your credit card even at a hospital, right? So you can use that in an emergency. Of course, ideally you should have a medical insurance that gives you a cashless facility, but if you don't have access to that and you're swiping maybe in an emergency, then that is available to you. What are the pros and cons of utilizing your credit card like that?
So clearly, Alex, a credit card can serve as a short-term emergency backup when needed. I think that fits in the overall plan really well. However, it should not replace a proper emergency corpus, which we've been talking about on your shows, because of the high interest costs associated with it. So the point is that if you've used it as an emergency, as long as you have your other emergency funds available to clear off the dues as and when it comes up, is a good is something which it can aid to this entire emergency backup liquidity option. And however, you must note, and all our viewers must know, that it is a safety net, not a financial plan, right? And that is what underscores the main difference between a credit line for emergency fund is against a financial plan.
Nasir, going back to my first question, which is, if you do get that limit increase, should you take it every time? Because a lot of banks and cards offer you the ability to curb your spending to a certain limit. You can set your internal limit. So why not take that additional limit? It's positive.
If you're disciplined and if you pay your dues in full every month, Alex, a higher limit can help all customers and clients. I don't see any challenges there. However, if you tend to spend more when you have access to more credit, it can become a big problem, right? So again, it's very, very simple. The key is to accept the limit, but not increase your lifestyle along with it. So you can have those limits. There is, again, you don't need to necessarily, there is no negative around it. Because as I said to you, it's very, very, self-discipline, an approach that needs to be adopted when you're looking at those increase in limits.
Absolutely.
From banks.
Okay, so that's the crux of the conversation. Nasir, thanks so much for joining me today and for having this conversation with us. A pleasure having you.
Thank you. Thank you always.
All right, so there you go. If you get that message for a higher credit limit, then if you've been
a discipline, as Nasir says, and if you've been using less than 30% of your overall limit, then why not go ahead and take it? As long as you ensure that you're not crossing that mark on an ongoing basis. Of course, remember that just one instance of crossing that 30% limit is not really going to cause too much of a problem down the line. And of course, you could do that for large purchases, etc. It's more of an ongoing utilization of your credit card that you need to pay attention to. I hope that helped you out. Let us know what you think about this conversation. We have to step into a very quick break, but do stay tuned. We've got more on the other side.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertising. and hoardings.
Bro, where's the hook?
Cross-platform, digital-first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Welcome back. Now, if you look at the mutual fund data over the last few months, there's one trend that's actually positive. More mutual fund investors are gravitating towards the diversified schemes. Now, this is primarily flexi-cap, but also in the multi-cap category. Is this a good idea, particularly at a time when market watchers are looking at the broader markets and saying that the return potential in the broader markets is actually higher at this stage, purely based on the expectation that some of these smaller companies will earn more than their larger counterparts? I'm joined today by Mandar Bagal, who is the Executive Director and Principal Officer as well as Fund Manager at Wealth Managers India Private Limited. He's a mutual fund distributor. Mandar, thanks so much for taking the time. And you have a platform where you look at multiple data points to suggest first category and then scheme. So let's discuss this. Why is it that diversified might actually be the way to go in this kind of market?
Yeah, thank you, Alex. And actually, the large cap portion of the market is significantly larger in that sense. So if one looks at BSE 500 or NSE 500, roughly 70% of the allocation in those 500 stocks goes to large cap as a segment, and actually 20% goes into mid cap and only 10% goes to small cap segment. So basically, even if one looks at very well diversified index like BSE 500 or NSE 500, the allocation to large caps is significant, that is 70% approximately. So mid and small caps are not well represented even in that segment. So in general, actually what is happening at this point of time, because the way large cap indices are structured, the weightage of banking and financials, IT and oil and gas, and to some extent telecom. So these four sectors constitute significant portion of large cap index. And actually there are no mid and small cap companies almost in banking. Then even on the telecom side and even in the oil and gas side, there are few mid and small caps in IT, but again these three dominant sectors lack mid and small cap companies on that side. And at this point of time, the large cap space offer very reasonable valuations. And if one looks at historical data, large cap are trading as represented by Nifty 50 index. The price earning ratio of Nifty 50 is closer to long period average, if not slightly below at this point of time, while valuations on the mid and small cap side is slightly above their historical average. So there is a valuation divergence at this point of time, But what one has to look at is the growth opportunity which is there. So mid and small caps offer a significantly better growth opportunity as compared to large caps, and that is the reason why one can justify the slightly higher valuations on the mid and small cap side.
If you look at the data, and ultimately the one way to look at this is to think about what has underperformed, and then you will likely, because of the cyclical nature of the way that markets move, you will take a contrarian bet. But I don't actually want to use the word bet. You actually make an informed decision based on that, right? So Mandar, what is the data pointing to right now? If you look at the 3-year performance, or you look at the 5-year performance, slightly longer, one would think that the flexi cap category, purely because of the bent towards large cap, will have a different sort of a reading when you look at the results or the returns, right?
Right. So if one looks at flexi cap as a category, last 3 years the average return has been 12.5%. And if one looks at multi cap as a category, the average return has been in the region of again 13%. So multi cap as a category has slightly outperformed the flexi cap category in this period. And actually, if one looks at large cap as a category, the performance is slightly below. It is roughly 10% average return.
Okay. Interesting. So you're saying multi-cap is actually outperformed, and this is because of the mandatory allocation towards mid-cap and small-cap. But is this on a rolling basis? Is this point-to-point? What is the data that you've looked at?
Yeah, this is a point-to-point return, Alex. Okay. And actually, if one looks at how the markets behave, so sometimes large caps perform better, and sometimes mid and small cap perform better. So this will be this is a current phenomenon. And if one looks back 2025, actually the small cap segment significantly underperformed for the calendar year, and while actually the mid caps perform better as compared to both large caps and small caps.
No, absolutely right. But if you only look at the month of April, Mandar, then at the benchmark level itself, you're talking about a 13% increase in the mid cap and 17% increase in the small cap, as a result of which multi-cap would have gotten that alpha and that kick because of the mandated exposure towards mid cap and small cap. So therefore, when you look at the data and you look at these categories, what is the kind of advice that you're giving your clients right now as far as incremental investment is concerned?
So at Scriptbox, actually, we believe in long-term investing, and we want to simplify investing for larger set of investors. And there we use our insights based on data and data-backed research to recommend categories and schemes for the client. And in that sense, actually, the categories like FlexiCap, multi-cap, they form core portion of our recommendation, while actually FlexiCap offer greater flexibility to fund manager, but multi-cap as a category gives balance to the allocation by giving compulsory 25% allocation each minimum to large caps, mid caps and small cap.
Okay. And if you look at the allocation right now in multi-cap funds across the board, what is the bent that they have? Because 75% has to be put in, as you've described, large cap, mid cap and small cap, but 25% is open for the fund manager to choose. And so depending on where they see the opportunity, they can actually go into the broader markets, or in order to stay liquid and to have a protection of the downside, they can go towards large cap. So what is the orientation right now?
So currently the fund managers are tilting their allocation to mid and small cap segment, and they are allocating slightly more than normal to mid and small cap. So considering the recent performance and expected growth opportunities which exist in broader market, fund managers are allocating more to mid and small cap segment of the market as compared to large caps at this point of time.
And now finally, Mandar, for incremental investment, why is it better to go towards a multi-cap or a flexi-cap strategy as opposed to a single mid-cap strategy or small cap strategy?
So actually flexi cap and multi cap, so both categories offer some exposure to large caps, and large cap provide much needed stability to the portfolio, whereas mid and small cap end is more volatile. Of course, the growth opportunities are better at the mid and small cap end, but they tend to be more volatile. And generally, the problem is with the investors' behavior. Because of the volatility, most of the investors will actually exit that category while looking at the not so good experience because of the volatility. So actually, large cap provides stability, and that gives good reason for long-term investors or for the retail investors to stay invested in a flexi cap or multi-cap type of strategy over a longer period and get the benefit of compounding of returns.
What has rolling returns told you about multi-cap versus flexi-cap though?
So actually, the multi-cap as a category is relatively new. So most of the funds have been launched in the year 2021 onwards, and out of 30 multi-cap schemes, only 9 schemes are having more than 5 years of track record. So it's a relatively new category, and actually the rolling return data is not that
deep
for long, which is there for the multi-cap as a category. But going by the construct, actually it should be a good risk return profile as compared to standalone mid-cap or small cap fund.
Yeah, that's a good point actually, because a lot of people did choose to have the flexi cap category when that split took place. A lot of fund managers and fund houses chose to gravitate towards flexi cap rather than multi-cap, and multi-cap was opened later. So hopefully in the next 1 to 2 years, we'll have 6 years of data in which we can look at 3-year rolling. But Mandar, it's been an absolute pleasure. Thanks so much for taking the time. Pleasure speaking with you.
Same here. Thank you.
That brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in. Do stay tuned. This is NDTV Profit.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Well, welcome back to NDTV Profit. Now, we are in Greater Noida, and to get some more perspective about the IT industry, we're now being joined by none other than Sudhir Singh. He is the MD and CEO of the company. Mr. Singh, thanks so much for joining in. It's a pleasure to have you here.
My pleasure. It's good to be here.
You held the Investor Day yesterday, and it was one of the most important ones. And firstly, thanks so much for inviting us in this huge campus, 25 acres here in Greater Noida. I've had the chance to look around, and it's a beautiful facility. We'll talk a little bit more about it, also show our viewers a bit. But as you go across this vision that you set for the company going into the next 4 to 5 years, you've given a big target or big vision or goal of $5 billion in terms of revenue. Talk us through that a little bit. You're currently at $2.4 billion and an ambitious target at a time where there's a lot of disruption in the IT industry. What gives you that confidence?
Well, it's for starters, it's not terribly ambitious. All that we're saying is that we will continue the growth rate that we've been on for the last 9 years. This is just an extension of the growth rate that we've carved out for a decade. We aren't talking about going over and above and beyond it. We're just talking of maintaining it, though we'd be disappointed if we can't figure out a way at some point in time of pivoting that line upwards and accelerating the growth. So at this point in time, all we said yesterday was we have a run rate of $2.5 billion. All that we said yesterday was if all we do over the next 4 years is one acquisition of about $500 million and just maintain the rate that we've been on, we should by FY30 be a $5 billion organization on an ongoing basis. So that's the contention. The confidence comes from the order book that's locked in. The confidence comes from an execution track record that's been second to none. The confidence comes from the fact that we aren't just talking about AI. Everything that we talk about when we say execution, getting things done, did get translated. And you did hear it yesterday in the investor call as well.
Yeah. The one thing, and because, I wanted to show our viewers also what you've developed as well. So it's a good time to get into the golf cart, just show viewers about the campus, just show what the strength is about. And as we go across, because there's a very important conversation that you also spoke about yesterday, and that was about how the company has been acquisition friendly. You've never failed an acquisition. And you spoke about the 5 acquisitions that you had. As we go through, of course, the beautiful campus, talk us through where does that confidence come from as well? Because that's a strategy that you expect to continue going forward as well.
Well, it's a mix of strategy and tactics both. There are 2 things that I've marked out our approach towards acquisitions. And both of those approaches have been very contrarian. Number 1, when it comes to acquiring an asset, as we said yesterday, the contrarian approach comes from the fact that we never acquire a firm that is also being very actively solicited or assessed by any other organization. What that allows us to do is to do a very detailed due diligence, in-person meet all the key clients, insist on meeting every member of the client services or the sales team. So that approach has worked for us, as you rightly said, over the last 5 acquisitions over the last nearly 10 years. The second thing that's marked us out has been our approach, again, a contrarian approach when it comes to acquisitions, to the way in which we do drive the integration. The integration does not rest on the leader or the top 2 leaders of the organizations that we acquire to make it successful. We insist, once we consummate an acquisition, we insist that the number 1 and the number 2 leader of the organization do step away and that our leaders run.
And that's a big
so that's
change
where it
that you
comes
do.
from.
I also just want to talk about the surrounding as well, because you spoke about how this garden is very close to you as part of the 25-acre campus as well. If you can show a little bit of the garden too, because you spoke about, and I think the CFO spoke about, they have a gym, you have a pool here as well, but this garden is very close to you. What is about the space that you like the most?
Well, we call it the secret garden, and as the cart moves around, you'll get a sense of this. This is the garden where you will see a Navgrah, as per Vastu, that's been created. This is the place where actually, when I joined about a decade back, the founder of the firm used to sit, and we used to have reading sessions somewhere around here.
Yes, correct.
As we continue along this route, to the left, you will find the place where, and I suspect that's one of the very few places across Delhi, where we do grow tulips. And it's a, I said this yesterday, if you want to understand the capabilities of an organization, you can invite management teams, they can walk into a room, they'll walk you through it. But if you want to understand the soul of an organization, you do need to come back to where they're anchored. For us, all of us, all 45,000 of us across the world, the soul, the center point is this 25-acre campus. We've always maintained that we believe it's the finest technology campus in all of North India. You rightly said. You talked about a cricket field that's coming up right now. There's a tulip garden. If you were here 4 months back, you would have seen to the left. Swimming pools, auditoriums, amphitheaters, a guest house for employees. I think we do it all.
Do it all. I also, before, because I want to ask you a lot more about acquisitions as well, but this cricket field also, because you have sports also is something that's very close to your heart as well. You make a lot of sports analogies also when you're speaking to investors, speaking to shareholders as well. Why is it so crucial for you to emphasize this with impact, and also, because of what is visible in this campus as well as we go across this huge field? What is that expectation, those learnings from sports that you want to apply in business then that employees can be helped with?
I think there are a few things that you're right. I use sporting analogies. I use analogies from the army because that's where my father used to work. And we fundamentally talk about what makes us different. We say it's execution. And we always say that execution is the simple art of getting things done. It is not the intricate art of coming back with excuses around why you could not get things done. It's the goal that matters, and I think sports teaches you that, right? At the end of the day, if you had a fantastic cricket match and if you've lost, there's no point sitting around and commending each other on a loss. So a lot of it comes from that, and a lot of it also comes, as you would have seen yesterday, from the initiative that we've started, which is public libraries, which again is unique to us.
The thing about acquisitions, and as you highlighted that, on day one, you have that change, and it's not just the previous organization that continues as a change, but you have been successful in that. You've also guided that you want to do one more. Is there any space that you're looking at right now? Because you've spoken about healthcare as a vertical that you want to grow. But is there any space, or is there a particular acquisition that you're looking at, or is it that there's an acquisition in the near term, but you don't have a particular asset in mind right now?
We don't have any asset that's cooking. We don't have any irons in the fire at this point in time. And we're honestly, given the very significant organic growth that we see ahead of us, not really desperate or hungry for an acquisition. Also, to the first part of your question, there are no white spaces that we believe that are left. Healthcare for us is growing well. It's almost $175 million business. We suspect healthcare, even in the absence of an acquisition, is likely to go and do roaringly well on an ongoing basis. We will keep looking out for assets as long as we find an asset that is not being very actively solicited. The valuation is reasonable, and the management team understands that we would like to step in and run it on a go-forward basis. We'll go for it.
Let's also step out because I want to show around the campus a little bit as well. Because the other aspect that has been with you is the fact that, about how AI has completely reimagined the process for you.
That's right.
The engineering has completely been transformed by the company. You are saying that it is now a very different way that you look at when you're approaching a particular project because AI has reimagined that. Could you just explain to us what has happened in the last 12 to 18 months since the agentic AI come in and how has it differentiated? How has it changed completely the way you look at new deals, the way you're approaching deals now?
Sure. So for us, and this is a question that comes up very often, is AI deflationary? Is it a tailwind? And so on and so forth. We maintained, and I suspect we've been somewhat contrarian there, saying that from a Coforge vantage, from a Coforge perspective, AI is a tailwind and a very clear tailwind. Specifically to AI engineering that you're talking about, what we presented yesterday, what Ram from our team talked about in terms of AI engineering was that the way we approached engineering, even 6 months back, versus how we approach it today, and that's what we presented to investors, has changed radically. 6 months back, engineering from our vantage was AI assisted, right? We had programmers, we had the equivalent of co-pilots, and that's where the momentum was coming from. When Ram presented yesterday in the investor meet, he talked about the fact that it's now AI-led.
Yes.
And to your immediate question, once again, the example that he gave was the largest legacy modernization program that we're running today. The entire process of the ingestion pipeline, the entire process of the knowledge assessment, knowledge management pipeline, and the entire forward engineering in that live example was being done by 25 agents spread across these three specific stacks, right? So broadly, sum and substance from being AI assisted, it is now AI-led. And it is becoming a very significant near-term opportunity from our vantage.
I also do want to talk about, travel as a big vertical, right? Because you are getting almost 25% of your revenue from both travel as well as the transportation segment as well. Now, this segment actually got impacted quite a bit because of the war. But you have been maintaining that this is actually made you a stronger version of yourself because the way you have approached these deals, because you have context. I think that was the major word used by Erica yesterday, who has the vertical also. So how are you looking at this vertical in the near to medium term? Because do you feel that there's a lot of emphasis on that big vertical there? Do you want to de-risk a little bit? Or do you want to use that as a strength and move forward?
Oh no, we feel extremely bullish about it. And we feel very bullish about it because anything that could have gone wrong with the travel industry over the last 12 months has gone wrong, and yet we continue to do very well, right? If you look at the travel industry, there's been massive amount of disruptions. If you look at the travel industry, there's been significant amount of cost pressure with the cost of fuel having gone down. And yet Coforge has continued to do extremely well. And the reason for that is threefold as we see it. One, there's a long-term secular tailwind because airports are getting fundamentally reimagined as retail malls, right? So what used to be a physical space is increasingly becoming, yes, a physical space, but also a space through which you can generate more revenues with the injection of technology. The second is the significant amount of work that's been done around personalization using AI. And that's all being dictated by the one order, one offer framework that IATA has come up with and we presented yesterday. It's all being underlaid by the NDC standards that have been created for the organization. And the third big thing that's really started bubbling up over the last 12 months, in addition to these two, and which is why travel has been so resilient and we feel so confident about it, is the larger push post the advent of agentic AI, with the customer increasingly for hotels, for airports, for airlines, is a machine, right? It used to be an individual, but now the travel booking, the search bars are disappearing. Travel bookings are being done by agents. Agents are talking to agents. And the expansion that's happened, especially on the tech side, because of that third change, again, has been significant. So travel is not an area we want to de-risk. Travel is an area that we think is going to be an area of sustained, robust, and long-term growth.
And that's a very important point you make, right? Because the way today an individual is planning a holiday has completely changed. He'll go to these models, he'll try to put in the prompts that he wants, the places he wants to visit, the kind of vacation he wants. So how has that actually changed the way for your clients? And what is the demand that they have from you now? Because as you rightly mentioned, I am not, the way I would book a holiday has completely changed, and I'm talking to another agent, and that agent is talking to your customer who might be in the travel and hospitality business. So what has changed for that customer, and what is the demand from you now?
So the demand from us as a services provider is that the teams that we put up need to be deeply embedded in the travel domain. You can't have folks who've been trained for a week who land up there. When you look at us, the teams that go out there are going out there from Coforge, which is a firm that is working with 60 airlines right now. We are a firm that has its own travel product, which helps with revenue accounting for 30 airlines across the world. We have done 20 PSS migrations, which are the most complex things that you can do. The big ask coming in from airlines, the big ask coming in from airports, the big ask coming in from hotels and casinos is give us the ontology, give us the knowledge management brain, which underlies the technology process that you come up with. And you can't do that unless you have folks who understand the NDC standards, unless there are folks who actually done multiple PSS migrations in one order, one offer frameworks.
You explained about PSS. So just for the benefit for viewers, that is essentially the neurology of any particular airline, so that they also, understand their customer better. So when you mentioned that there have been 20 of those that you've done already, is it that there has been bigger benefits for your clients and hence they keep coming back to you?
PSS is the passenger service system. PSS is really the core around which you would plan, or you used to plan the entire passenger journey, right? You used to. Increasingly, it's machines. Increasingly, it is agentic AI that is coming in and disintermediating that framework itself. But at the end of it, a PSS migration really needs you to have not just smart engineers, but domain-enabled and deeply domain-embedded engineers. The 20 PSS migrations we've done, the bunch of folks who've actually been part of those migrations, when they walk into the 21st or the 22nd or the 23rd, the entire time that it takes for them to come up to speed, to contribute, and to start leveraging all the AI agentic frameworks that we have collapses significantly.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Economy, business, world, technology. Noise filtered, numbers decoded.
I think the one important point yesterday in the speech that you also made at the start of the Investor Day was emphatically something that we spoke about on acquisitions, that you never failed in acquisitions, but also guiding to the street that there is a lot of preparedness with AI as well as amongst other factors.
Right.
Now, to address the elephant in the room, there's always a comparison between you and you're one of the closest peers in the mid-cap space. Do you feel that the market is not currently capturing what you've been trying to present as the vision that you go into the next 4 years, and hence this is going to be one of the bigger moments in terms of the company's history as you look at the Investor Day 2026, maybe 2-3 years down the line? That will be a big change that people should have watched out for. Is that your opinion?
We're very grateful to the market. We're very grateful to our clients for everything that we've achieved over the last 9 years. I don't think there's a sense of despair or regret at all. Just any which way we slice our performance and what we've been rewarded for. We do at the same time believe, and what we were trying to present yesterday, is that at a time when the industry seems to be on the defensive, at a time where the prevalent narrative is all around AI being deflationary, there are immediate demand pools which we are addressing. Immediately, as of today, and we talked about 6 of them yesterday, right? We talked about the fact that there is immediate pressing requirement for setting up cloud modernization AI frameworks, for helping with model hosting, gave examples of that, for MLOps, etc. So that's one demand pool. We talked about 5 more, setting up data pipelines for AI. We talked about security and the opportunity that's come up for AI risk remediation. We talked about engineering, which is the conversation you and I had. So the point that we wanted to leave everyone with was, we understand when the frontier models talk about the fact that they have a big runway for growth. We understand when a Snowflake or a Databricks talks about expanding their pie. What we don't understand is the defensiveness that has crept in. There are immediate emerging demand pools. Some of them are just expansion of the existing service lines, which are the ones I talked about now. And some of them are newer demand pools, advisory that is coming up. Agentic solutions embedded in workflows that are coming up, which offer us also a significant runway for growth.
The other thing that, and if you can give us some perspective on, is that you have these three key verticals, right? Banking, insurance, as well as what travel tourism, of course, that we spoke about.
Right.
You want to go into healthcare, you want to look at life sciences, as well as the payer and provider group as well. I think you had some success already in the provider side, looking at improving the payer side as well. My question to you then, if you are newer to a vertical,
that's right,
how are you looking to capture that? And has AI actually made it a little more, not easier, but that advantage at this point of time to enter and break even? And the next question also, because you are a bigger player in the travel tourism space. So how easy it is for some other IT company, IT service company to come in and have that context, as you mentioned?
So there's nothing that stops anyone, irrespective of scale, from getting into an area. We've always believed, and we've said this for 9 years, that for a tech services provider to be a true business solution creator, the industry expertise is an absolute prerequisite. When we approach healthcare, as we're approaching, hopefully at some point in time, the high-tech space, the approach hasn't changed from everything that we've learned from and delivered in the past. I mean, if I take you back, when we started with insurance, we didn't start with all of insurance. We just focused on specialty insurance. When we started with travel, we didn't start with all of travel. We just focused on airlines and airports. That's it. The approach with healthcare has been very similar. We are focused on payers. We are focused on life sciences. We have built already a pool of what we believe is an exceptional industry SME pool that understands the processes L1 to L5. And the approach from here on is just going to be making sure that we take emerging technologies and we start creating solutions at the intersect of those processes and the technology. So not a different approach, the same approach. It's an approach that's worked for us. It's been tested in the past.
Well, Mr. Singh, thank you so much for joining us today. It's been an absolute pleasure to be here over the last day and a half. There's so much that about the company that you learn once you get to the ground as well, but about you as well. I know you mentioned about yourself and then you put us again into the answer. So what I do, thank you for your time today right here on NDTV Profit. We wish you the best and always look forward to our next conversation.
It's been a pleasure. Please do visit us again.
Well, most certainly, sir. Thank you so much.
Thank you. Thanks a lot.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest...
Good evening. Welcome to our special show, Deals and Diplomacy at the G7, here on NDTV Profit. I'm Vikram Oza. Now, while the spotlight is on the G7 summit in Evian in France, tonight that focus is firmly on the all-important meeting that is about to take place between Prime Minister Narendra Modi and American President Donald Trump. Yes, that meeting is happening at a moment when economics and geopolitics are becoming increasingly inseparable. So now the two leaders are meeting. There are expectations that are rising around the first tranche of that long-awaited India-US trade deal. Remember, the timing is quite crucial. In a first, the US Trade Representative, Jameson Greer, he's heading to India. This is going to happen on the 23rd of June. And he's going to give what is being touted as the final touch to the trade deal between India and the United States. This is important. It's the first instance when the US trade chief is expected to visit India since the negotiations for a trade deal actually began. This happened in February last year. So now the Modi-Trump meeting is an important one. It is taking place just ahead of that arrival, but it is also a difficult one because the questions still stand over tariffs, especially after Section 301 of American law, which has really put a spanner in the works. There are issues around market access, around strategic alignment, and those are the issues that need to be ironed out. But the economic backdrop is as significant as the diplomatic one. Remember, the deaths of Indian sailors during the Hormuz crisis is fresh. There is, after all, only a fragile Iran peace deal as well that we are talking about, and that has just about eased fears over global oil supplies. And this even as it exposes new regional fault lines in the Middle East. As we know, Israel is not happy with the peace deal, and Netanyahu is refusing to be bound by it. So in fact, the G7 summit revealing how dramatically global power equations are shifting. As Trump is recalibrating America's relationships with allies and adversaries alike, India is navigating opportunities in trade across the US, of course, also Europe, the United Kingdom, and Japan. And interestingly, chiefs of the world's leading frontier AI companies, we talk about the likes of OpenAI, Anthropic, Google, all of them are in attendance in the G7 summit in France this week. The likes of Sam Altman, Dario Amodei, Google DeepMind's Demis Hassabis, they're all there with nearly a dozen other tech leaders. So it reflects the growing geopolitical influence of AI infrastructure and policy, also AI sovereignty. Which is why tonight, as we watch the Trump-Modi meet unfold, We are decoding the deals, the diplomacy, and of course, the new world order that's emerging from the summit. And for that, we have distinguished guests joining us on the show. So let me introduce you to them. Here on the show, we have former diplomat, Ambassador Prabhu Dayal with us. He comes with decades of experience navigating India's foreign policy and strategic relationships. With him is Professor Dr. Kivrat Jangid. He's the director of the Jindal Center for Israel Studies. Deep expertise on the geopolitics of West Asia. Great to have you both and welcome. It is possibly going to be a momentous occasion, the Trump-Modi meet at the G7 summit in France. Ambassador Dayal, how much significance are you associating with it? The central question is India and the United States. Both of them have been working towards that first phase trade agreement for months now. So as the Prime Minister prepares to meet Mr. Trump, how much will this meeting help to hit that ball into the net, if I were to make a football analogy in FIFA season? Ambassador.
Well, you put the significance of this meeting in a very correct manner. And when you said that this is the all-important meeting, a lot hinges on this meeting. India's relations with the United States have taken a downward slide. And this is for a number of reasons. There have been the Trump tariffs which came, though they were later pulled out because of the Supreme Court decision. But nonetheless, he has reimposed some kind of tariff and has shown an inclination to keep putting India under pressure in regard to trade matters. This doesn't suit us because the US is, of course, our biggest trading partner and our largest export destination. Then there are problems relating to US policies on immigration, which have affected Indians very, very adversely. Then, of course, everything has been further downslided because, as you mentioned, the recent incident took place where 3 Indian sailors were shot by the Americans. And this has created a public outcry in India. This matter has been taken up by the External Affairs Minister himself with the US Secretary of State. But the US response has been far from satisfactory. In fact, they put the blame on the ship which was carrying the 3 sailors by saying that the ship ignored warnings by the US side and that further this was carrying Iranian oil.
Yes.
India has denied anything of this sort, that it was carrying Iranian oil. But nonetheless, there has been a big slump in the bilateral relationship. And therefore, this meeting between Prime Minister Modi and President Trump becomes very significant. The personal chemistry at the moment doesn't seem to have the sort of warmth as it did during their last meeting, which took place 16 months ago in February 2025 in Washington. The very significant absence of that warmth has been discussed extensively in the media. You know, for instance, there were no hugs and pats on the back as there were in the case of Prime Minister Modi's meeting with President Macron. So there are certain concerns about how the relationship can be put back on track, but it is surely something that would suit both sides because both India and the United States want a healthy bilateral relationship.
Yes.
And this is so for a number of reasons. The China factor, for one, the Indo-Pacific by and large.
Yes.
Then, of course, the present geopolitical situation in the Middle East. And, of course, the changing global scenario. For all these reasons, a good bilateral relationship between India and the United States, including, of course, not just the trade partnership, but a defense-oriented relationship where the two countries would strengthen their bilateral defense-related aspects, including production and supplies.
Very importantly, Ambassador, you pointed out that the warmth, though it's limited, it is quite apparent that both countries need each other at this time. Professor Jangid, do weigh in on this. President Trump, he has often approached diplomacy differently, very differently from his predecessors. What do you think he wants from India at this stage of his presidency?
Thank you. I think it's very obvious from him that he wants an upper hand. He doesn't want to do a deal keeping in mind China. He wants to deal with India on equal terms, which means that India will have to have, in a way, some amount of bargaining, not successful. And I think more than the personal optics, I think sometimes we devote too much to it. But let's understand, even if there is no hug in this visit, the post-Iran experience of Trump is I think going to make him much more malleable, much more respectful to other middle powers like India. I think one of the things that he did realize is the importance of these kind of countries in the Iran war. So I do think that he may not appear as rowdy and as pushy as he was, let's say, a year back. And I think now, India is also a tough negotiator when it comes to trade deals. Let's understand that India is a very, mixed economic world where you have highly underdeveloped industries and you have very highly developed sectors. So because it's a very heterogeneous economy and a partly developed and partly highly underdeveloped economy, India has to really look after each and every sector before it signs the deal. Look at the FTAs, the FTAs that India signed with other countries in the last 2 years or 3 years. It took India years to have that sort of a confidence and do a trade deal. So I think time consumed by this bargaining is actually a good sign that both are very cautious. At the end of the day, the deal will not be all what India wishes for. The deal will be more to the liking of Donald Trump because, of course, he holds more leverage when it comes to trade with India.
You think President Trump has more leverage as this time? Let's see if Irina agrees. Irina Zakman is also joining us. She's president of Scarab Rising Inc., a geopolitical analyst, and she joins us on the phone line from New York. Irina, you're watching this from the sidelines, as it were, but tell us, from what's happening in France right now, we've seen the optics play out, but when you're talking about the relationship between Modi and Trump, it seems to have a different kind of meaning as far as both the leaders are concerned. How exactly is it likely to play out before this meeting takes place, where an important deal, a trade deal, and the way that Trump does business with the rest of the world, compare that with India now? How is this likely to stand out?
Well, thank you so much for this question. We are in a different place now than a year and a half ago because the international community and the United States in particular is facing multiple crises ongoing at the same time. We are just getting out of from a major energy crisis, which was beneficial to the U.S. Energy company, but not necessarily to the American population and not necessarily to its trade partners. So U.S. has some bargaining power for sure in terms of energy concerns, but it also needs India. It also has suffered setbacks with regards to its trade deals and its attempts to strong arm China with regards to critical minerals because U.S. simply has not found their refining capacity. It's also dealing with upheaval and tough negotiations with Iran regarding various security matters. So this is not the time for Donald Trump to try to create a very hostile negotiating optics in front of in G7 or in front of the international community. He's going to try to make this a friendlier, more amicable, more partner-like negotiations, even if behind the scenes the talks about the details are going to be still tough, and still he's going to try to get as much out of it as possible, as is his job as the U.S. president.
Well, Professor Jahangir, I want to take that point across to you that Irina is making. This is a difficult time for the US as well. Getting that Iran peace deal hasn't been easy. The signing of the MOU, that is due at the end of this week. But how much does that change the dynamics of this meeting taking place between Modi and Trump? You did say that the American side has leverage over the Indian side. But as far as Iran is concerned, it hasn't been easy going for the Americans. So does that put some pressure on them right now to be able to ink this deal quicker than they would have otherwise?
Thank you. It's true. I don't mean to say only Trump has more leverage because he's Trump and he's more into deal making. America is a very highly, let's say, competitive economy and developed world. India doesn't have much to offer in general. So I think the deal will not be on much of India's terms. India is basically offering a large market to the American products. And the demand of the American companies is that you have to reduce the tariffs. And if India doesn't reduce those tariffs, which are primarily to safeguard those sectors, what I mean to say is that these are structural weaknesses of India. These are not weaknesses of Narendra Modi's diplomatic skills. That's one. Second, the Iran deal is a nightmare in the Donald Trump's foreign policy. We understand that even if it is signed on Friday, the details are very, very thin at the moment. The deal is eventually will be signed after 2 months when the nuclear deal is going to be finalized. So what are we going to do is to have Friday an agreement that we do stop here and we are going to give 2 months to the nuclear issue. So yes, this period will be a very nervous, again, nerve-breaking period for the rest of the world, and India will be part of it. But at least Donald Trump has assured that Hormuz is closed. He's having a tough fight for this with Israel. You know, the current ambassador to Israel, and right now I'm in Tel Aviv, he just defied by saying America will not survive if it is not Israel that's there, which means to say he has a lot to do and he will be busy man. But India's trade deal is a completely different game that India has to struggle for, no matter Trump is in the office or not.
And that struggle has been ongoing. I'm just wondering, Ambassador Dayal, if India is in a better position after this peace deal gets signed, at least the MOU gets signed on Friday. Do you think India is better positioned than it was to be able to get more out of the Americans because Trump has other battles to fight, because this war is not ending as such? It's got several kind of permutations and combinations, especially the Israel factor.
Well, the war in which the United States got involved in the Middle East certainly distracted the Trump administration's attention from a whole host of other important issues, including, of course, relations with long-standing partners. Now, Professor Jahangir said that while India has a lot to get out of a favorable relationship with the United States, the other way around is not true. In other words, the US doesn't stand to gain much. Now, this point of view is not correct. The US has a lot to gain out of a healthy relationship with India, particularly in the geopolitical sense. One of the most important foreign policy objectives of the Trump administration, and indeed of earlier administrations, was the containment of China. China's growing influence in the Indo-Pacific region is a matter of great concern to the United States. And in this context, India can play a vital role as a partner of the United States. Now, of course, there are other important aspects. You know, India is the world's biggest importer of defense equipment. The United States is the world's biggest exporter of defense equipment. The US defense production industry, which is called the deep state of the United States, has a great interest in a closer relationship with India because they want to increase defense equipment supplies to India. They work very hard on that. And the deteriorating relationship has been a setback for the US defense production sector.
Yes.
So they want the relationship to improve. They have a lot to gain. Similarly, in a whole lot of other areas, for instance, high-tech, where the bilateral relationship, if it is strong, helps both sides, including, of course, the US tech sector. So it is not that the United States doesn't stand to gain much out of a healthy relationship with India, and that only India stands to gain. That's not true. It would be beneficial for both sides, and that is something that both sides do realize.
We'll have to see how much they realize and how much that actually plays out. This is a meeting that is something which is going to be very closely watched. There's no taking away from that. But President Trump often views relationships through the lens of reciprocity. Does India have enough leverage today to negotiate with Trump as an equal rather than as a partner seeking any kind of concessions? It's an important question to ask. We'll do that after taking a small break. Our panelists stay with us. You don't go away either. We'll be right back on Deals and Diplomacy.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
एयरपोर्ट साकार करने की दिशा में आगे बढ़ रहा है.
It is the result of Uttar Pradesh's rapidly expanding air connectivity that the number of air passengers has surged from 60 lakh in 2016-17, 14 crore 23 lakh in 2024-25.
Hello again. We're talking about deals and diplomacy just ahead of that all-important meeting between US President Donald Trump and Indian Prime Minister Mr. Modi. They are going to meet very shortly and we'll see exactly what comes through from that meeting. It's going to be an important one to track. But Professor Jungid, at the kind of level that talks have come for the trade deal between India and the US right now, where exactly is this entirely poised when we're talking about Israel and the Gulf states? They have been both deepened over the last decade, if you see the kind of relationships that India has had. So when you put that in context with India's relationship with the United States, has New Delhi managed to get its balancing act right in West Asia? Since you're a specialist over there, I'm asking you specifically, or do you think it's become more complicated before and post the Iran war?
That's actually a very interesting angle of looking at India's foreign policy and its relations with America. And I agree with your assumption that it has actually improved. If we look at India's position on the Iran issue, it didn't condemn American or Israeli attacks. It didn't delay condemnation of attacks by Iran on the Gulf countries, which is to say, India diplomatically and publicly took a position in favor of Israel, US, and its Gulf allies, which makes very natural sense. A lot of people think that, oh, this is a weakening of India. Not at all. India takes care of its relations with Gulf countries and the trade relations and the Indian workers, close to 10 million working there. So I think this is a larger multilateral kind of a position that India has with the United States, geopolitically speaking. And that should favor, that I think should be a factor in the mind of Donald Trump, because he has realized in this Iran sordid saga that a lot of countries could really just not in a way sit very quiet with his international positions.
Correct.
And India is not one of them.
Irina, how much do you agree with what Professor Jangid is saying? You think Washington is genuinely accepting India's strategic autonomy? Or do you think it is ultimately expecting India to align more closely with American interests?
I think, of course, the U.S. wants as many countries to align with the U.S. interests as possible, including India. That said, we have seen some very strange moves from this, and for that matter, previous administration. For instance, there's been statements that supposedly the U.S. wanted India to actually buy Russian oil. That doesn't seem to be in line with the official stated U.S. position on the region and the conflict, because Russian oil has been helpful to Iran for many years now, not just in the recent chain of events. So all of these contradictory policy moves send very mixed messages to India and to the international community. Also, this latest incident, the firing on the firing on the sailors who were commercial sailors, even if they were transporting Iranian oil, the correct move would have been to arrest and to investigate, not to kill unarmed civilians over what appears to be a commercial issue rather than a military confrontation. So these things seem to indicate that the policy has not been very consistent, has not been very coherent, and while the U.S. certainly would want India to be as close as possible, it has certainly not gone out of the way to bring it to the table with relation to the Iran dispute, the way it has coordinated, for instance, with Israel. Of course, India is not party to the conflict, so to some extent that is to be expected. But it is a major international player. It is a country that could have some weight on various angles, especially the commercial angle and the trade angle, the geopolitical angle as well, with the new corridors that are developing in response to the Strait of Hormuz closure, for instance. India should have some place at the table, even if it's not a party to the conflict. The fact that U.S. has not done more to have more direct and more coordinated conversations, that to me seems indicative that the strategy has not been well thought through. It's not for the lack of interest in India, it's lack of coherence overall.
So if there is that one takeaway from this first half hour of our coverage on deals and diplomacy at G7, it is that the world is moving away from old certainties. Trade is now getting strategic. Technology, of course, is geopolitical. Energy security, now that is diplomacy. And every major conversation between leaders increasingly carries these consequences that go far beyond the countries in the room. And this meeting between Modi and Trump matters not simply because of who is meeting whom, but because it offers a window into how the next phase of the global order may be negotiated. I want to thank our panelists for joining us, Ambassador Dayal, Professor Jangid, Irina. Thank you for helping us decode the many layers behind what is far more than just a bilateral meeting between Trump and Modi. But of course, we will take a small breather again. Our focus is on that all-important meeting. It's about to unfold minutes from now. We'll take a quick breather and talk much more with another set of experts joining us on this very show. We'll be right back.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's
Hello again, you're joining us on Deals and Diplomacy at G7 here on NDTV Profit, and our focus remains on the Modi-Trump meeting at the summit in France. Of course, the prospects for an India-US trade deal as well, and what the conversations unfolding there are going to reveal about a rapidly changing geopolitical and economic landscape. But let's broaden that conversation with our next panel. And joining us on the panel this evening, we've got Trump's media conference also happening later, but Sierra Claire is joining us to tell us what we can expect over there. Foreign policy analyst joining us from California. Good to have you with us. And she, of course, tracks the evolving dynamics of Washington's engagement with allies, with partners around the world. Karan Datta is also with us, a geopolitical and capital markets researcher. And he closely follows the diplomacy and the economics and global risks as well. So thank you both for making the time for this conversation. Sierra, now that President Trump is at the summit, he's having some difficult conversations. They're looming with several allies, yet the Modi meeting appears to have been among his highest profile bilateral engagements, at least from where we are looking at it. What does that tell us about where India sits in Washington's strategic priorities today?
Well, I mean, I think the G7 summit is a great forum to highlight this, because we're talking about our European allies who we have formal allyships with, and, you know, so much shared civilizational history, civilizational values. And our European allies are facing so many challenges right now that makes it very difficult to partner with them. And so this India meeting being such a success at this summit, when we're surrounded by all of these, you know, traditional allies, I think it really highlights how India is rising and how the United States and India are facing a lot of shared concerns and also shared hopes for the future.
Talking about shared concerns, Karan Datta, over the past month or so, we've had a war situation in Iran. There has been a ceasefire. There is the renewed focus on the Strait of Hormuz. Now there are trade negotiations that are dominating the G7. Do you think this underlines how tightly energy security and economic security, how the two are so closely linked?
Thanks for inviting me, Vikram, on the show. You're absolutely right. The two go hand in hand. In fact, I'd add another dimension to it, which is national security.
Yes.
So it's national security, energy security, and economic security, which combines to make a nation powerful. Missing any one of them can be very damaging to a nation, and which is why India has to protect its own interests. And one thing that I just want to share with the audience out here is that this seems to be no longer G7. For the last 5 years, Prime Minister Modi has been representing India continuously at G7. It almost looks like a G8 to me now, which also means that India's stand in the global order is starting to show up. And hence the point you made at the beginning that energy security and economic security go hand in hand is true. And India has done whatever it takes to get that security in order. Whether it was Russian oil at one point in time, whether it was gas, and now whether it is buying oil from Venezuela or even taking gas from America.
You know, Sierra, Karan is making a very valid point about a possible G8 over here, considering the consistency of that seat being taken. But when you consider trust as a major factor at this summit, whether it's trust in allies, or trust in institutions, or indeed trust in economic partnerships as well, that is the recurring theme at the G7. But now it seems like it's become the scarcest commodity right now in the transactional nature that we do business in. So in international relations, how do you think trust is now playing out between nations that you're seeing play out at this summit itself, Sierra?
Well, the first thing I would say is that the prerequisite for trust from the American perspective is that America is a strong country and we ourselves are doing what we need to do to take care of our country and our people. And under Trump, we are doing that, which is creating so much more trust between world leaders than there has been in the past. So I think this is just trending in a positive direction, and it's going to continue to do so as America implements Trump's America First policies. In terms of the transactional nature, of course, geopolitical strategy is, based on transactional nature. It's based on what is strategically valuable for each country. But that's what differentiates tactical partnerships from friends. And I think that there is trust among India and the U.S. because we do consider each other friends and not just tactical partners. And of course, there's going to be friction in that relationship. But I think ultimately, this meeting between Trump and Modi shows that there can still be productive relationships and there can still be productive outcomes when there is a friendship that's built on trust.
Karan Datta, would you agree that the relationship between the US and India is now based on trust? We are still tackling the first tranche of that trade agreement, Section 301, with the possibility of tariffs coming back on the table if we don't sign off on this deal quickly enough, and the possibility is that it would happen towards the end of this week itself. But Prime Minister Modi has spent the last few weeks engaging on multiple fronts: the UK trade deal, the G7 outreach that we are seeing currently in play, and there is the ongoing American trade negotiations. Also, the Gulf diplomacy has been seen. It's in the spotlight. So you think India is deliberately trying to de-risk its economic future by diversifying partnerships, but because we may not be able to trust our allies, including the US?
Vikram, I won't use the word cannot trust our allies, but I'd certainly take your point that India is signing free trade agreements with many, many countries, and then across the board, across the region. We've also done that with nations as far as New Zealand, and then, of course, you alluded to the Middle East. And that is not just being done by India. In fact, many nations across the world are signing free trade agreements with each other because they do realize that trade cannot stop. So you've got the Chinese on one side and you've got the US on one side. And between the two large nations, the entire world is now figuring out how to get trade going. And which is why free trade agreements are being signed across with each other bilaterally and across many, many nations. Now, I'm not sure if trust is the issue out here. The question is all about sustainability for the future. And that is what is coming to the fore out here. I just wanted to make a point which is kind of important in this discussion, that if you look at the Indian point of view, Sierra alluded to the American lens. I just want to get it back to India and say very few nations are in the capacity right now to be dealing with Israel and Iran together. We also deal with the Americans and the Russians. So very few countries right now have that trust building capacity like India does. And I think under Prime Minister Modi, we're beginning to see that is what is kind of building the bridges of trust out here.
But Sierra, when we are talking about that entire factor, we are considering how Pakistan has played this mediation role in arriving at a peace deal with the Iranians. So considering that aspect of it, even as this entire trade deal pans out with India, how is that likely to affect relations going ahead? We've got the issue with sailors who have been killed in the Hormuz crisis. All of that is on the table when the two get into conversation.
Yeah, absolutely. I mean, the first thing I would say is the trade deal needs to get done. I think that's very important, and I think it's a priority for President Trump and probably for PM Modi too. And the reason it's important is because some of these other areas of friction in the relationship can be addressed through the trade deal. So, the H-1B kind of controversy, those type of things. When we have a productive trade deal with India where Indian economy is adding jobs, as well as investments are flowing between both countries, a lot of these frictions are going to be alleviated. So I think that's going to help a lot of things. And then the second thing on the Pakistan issue, President Trump has pursued a kind of relationship with Pakistan in his second term. It is controversial. I think in terms of the Iran conflict specifically, Pakistan was, one of the few who was willing to do it. Because, as I've said before, it was going to be such a public failure, and not many countries were willing to do that. And I personally, I think it's a good thing that India didn't lead the mediation. But because it's not gone well. I mean, we're finally getting somewhere, but I think it's damaged Pakistan, and because of the way they've conducted themselves. Certainly, they're not helping themselves, but overall, the situation probably damaged Pakistan's reputation a little bit. And so, but we do have an Iran deal possibly now, and President Trump has shown his responsiveness to the global community by prioritizing, ending the blockade in the Strait of Hormuz and things like that. When he was pursuing this deal, that was the number one thing that this deal got done, was opening the Strait of Hormuz. So I think we're seeing a responsiveness from President Trump, which also goes back to the trust thing, and it builds trust. And so, the Indian sailors, I mean, again, an unfortunate incident, but there are things that India and the U.S., India has put India first, America has put America first. This is about American national security. And these shadow oil fleets fund terrorism around the world. So it's really an issue for the global community. And yes, we need to, protect sailors who may not know, what kind of ship they're getting on and things like that. But it's an issue for the global community to address. The U.S., is taking the lead on it. But I think we have to, if we want to protect sailors, we have to see more cooperation from places like India and other countries as well to stop terrorist financing through illicit oil trade.
Karan, how much do you agree with what Sierra is saying? From India's perspective, do you think Pakistan's role, the mediatory role that it's played, do you think that matters less than the fact that stability has returned now to one of the world's most important energy corridors, as temporary as it may be, because the risks do stand?
Couple of things here. First, let's go with the fact that definitely stability is going to return, because the war technically stopped about 25, 30 days ago, and you did have bits of skirmishes in between, but the war had come to a standstill because there was nothing left to hit. It's very clear that Iran's really suffered a lot. The blockade has also worked in favor of the Americans, because blockage has meant Iranian oil could not leave ports, and that's really meant that oil rigs at some point were running. They were running afloat. So basically, the Iranians had to shut down oil rigs because there was no space to store the oil that was flowing out. So I think all of that has worked well. And I see no reason why this agreement will not go through. The Americans are one piece in this entire puzzle. The real story is the Israelis. Exactly. That's the piece that we are missing out here. The Israelis are not going to stop till they have complete control of the fact that no nuclear weapons will be available to Iran. I think we're getting there. It's taken some time, but we're getting there. On the second point, as far as Pakistan is concerned, it's very strange that Sierra did mention about terror financing through shadow fleets, but this is one nation which finances terrorism across the world. The Americans would have seen that with 9/11 and the fact that most terrorists are caught in Pakistan. For the Americans to hyphenate India with Pakistan is the last thing that we need to build trust. And I think that's the one sticking point that kind of is the big elephant in the room. The hyphenation is something which the Indian people and certainly the Indian government doesn't take very kindly to. Hopefully that should come to an end.
Hopefully that should come to an end, but this trade deal that we're talking about, and that is going to be the prime mover as far as relations between India and US are concerned. Sierra, we're talking about the Iran deal. And like Karan pointed out, at this juncture where Israel starts becoming the most important factor in the lasting nature of this ceasefire, if that is an important play, regardless of what Trump has said just ahead of this meeting between himself and Mr. Modi, he has touted this entire great victory that the Americans have had in respect to Iran and said they have been clobbered out of shape, etc. But Israel remains that all-important factor. How much leverage do you think Trump now has with Netanyahu to be able to contain any kind of action from the Israeli side that would hamper the ceasefire and this entire peace deal?
Mm-hmm. Well, when I talk about America first and also that doctrine kind of being applied to other nations, right? We want to put America first. We also expect other nations will put themselves first. I think the relationship between the US and Israel is one of the most successful examples of that. We don't always align, and Israel does put Israel first, and yet America and Israel maintain a very close partnership and friendship. But navigating that can be tricky. I think right now, especially, the two are at odds. America wants peace in the region. Israel, is continuing to pursue a war and self-defense. And they do need self-defense. Nobody's arguing that. But there's also a bigger picture that if we can get peace in the region, which is President Trump's vision, is bringing a coalition of nations together, not just always the American policy has been a strong Israel keeps the Middle East safe because they can fight against the bad people in the Middle East. But what if we have a coalition of strong, stable, peaceful Middle Eastern countries rather than just Israel trying to, at one point they were fighting a 7-front war. That's just not sustainable for any nation. So I think it's about the vision. And it's about Israel and the Israeli, not only the politicians, but really the Israeli people understanding that there is that vision and that is what America is working towards. And so, of course, it's good for Israel in the end, too. And I think that we'll get there. But yeah, it needs to be, President Trump needs to maintain a very strong lead on this right now to kind of shepherd this process through and make sure that, anything that Israel is doing, that we're aware of it and that it's not going to damage the negotiations.
Well, we've got news that's just coming in. Donald Trump is lauding Prime Minister Modi, something he has done consistently. He's calling Prime Minister Modi calm, cool, and a total killer. Those are the words coming in from the American president right now. And he says, Mr. Trump says that I'm not as calm as Modi. He's praising Prime Minister Modi at that working lunch that is currently underway. This is breaking news. And of course, we will see what the Indian side has to say, and perhaps what the Indian side has to say is going to come through as the outcome of that meeting between President Trump and Prime Minister Modi. But there is one takeaway from this part of our show, Deals and Diplomacy at G7. The world is moving away from old certainties. Trade is now getting strategic and technology is geopolitical. The energy security is diplomacy right now. And every major conversation between leaders is getting more and more about the consequences that go far beyond the countries. And now we are looking at that all-important meeting between Trump and Modi. It is going to be a very important one to track. The outcome of it is really going to decide how exactly we are poised as far as global power is concerned and how it's moving right now. All of that is going to be at play, at least from the Indian perspective. How close we are to signing off that deal is going to be the one to look at. And of course, I need to thank our guests for joining us, Karan and Sierra. Many thanks for putting all the issues here in perspective for us, and earlier, of course, all our guests. This is our special show, Deals and Diplomacy at G7. I'm Vikram Oza. Thank you indeed for joining us. Of course, our coverage of that all-important meeting and everything happening at the summit continues. We'll take a small break and return with the bottom line. Do stay with us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How
The show that sets the prime time agenda.
we'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Hello and a very warm welcome to this edition of The Bottom Line. I'm Vikram Oza. This is the show that tells you why the headlines really matter. These are our top stories we're tracking on the show this evening. The big bilateral between Prime Minister Modi and US President Donald Trump is to begin shortly on the sidelines of the G7 summit in France. Regional security, tariff and trade are on the table. Prime Minister Modi holds his trilateral meeting with EU leaders. The European Commission President Ursula von der Leyen saying that India-US are going to sign the free trade agreement by the end of the year and will step up security and defense cooperation. 2 days ahead of the deal, Trump says that the memorandum of understanding with Iran is not final yet and is threatening Iran that he will not be okay if he does not like the deal and that the US will strike again. Oil prices continue to slide amidst hopes for peace and opening of the Strait of Hormuz. Crude is hovering below $80 a barrel at a 3-month low now, but Iran disputes the claim, saying it can charge fees for maritime services. Today in the equity markets in India, we've ended higher for the fourth session on the trot. Nifty near the high point of the day, holding above 24,000 ahead of the US FOMC meet outcome. It's expected tonight, and the rupee also has ended higher for the fourth day on the trot, closing at 94.53 against the US dollar. The RBI temporarily eases NRI deposit rate norms to attract overseas funds. The RBI withdraws the interest rate ceiling on 3 to 5 year FCNR deposits. In an exclusive conversation with NDTV Profit, the CEO of Coforge, Sudhir Singh, is saying that the company is aiming to hit a $5 billion revenue target by FY30. India's defense production has hit an all-time high of 1.78 lakh crore rupees in 2025-26, and the defense minister is saying that India's defense production has hit an all-time high of 1.78 lakh crore rupees in 2025-26. In football fever, Messi's magic continues. A hat-trick in Argentina's 3-0 victory at the FIFA World Cup 2026. He adds another major milestone in his elaborate career. Now, all eyes are on June the 19th, when the US, Iran and Israel are expected to formalize a peace agreement. The one that could redraw the geopolitical map of the Middle East, so to speak. But even before that deal is signed, the fault lines are already emerging. Israel has continued strikes in southern Lebanon, while Iran claims the understanding has been violated multiple times since the Memorandum of Understanding's announcement has been made. And the Israeli Prime Minister, Benjamin Netanyahu, has also reiterated that Iran will never be allowed to go nuclear, deal or no deal. So at the G7 summit in France, US President Donald Trump has struck a rather mixed note. On the one hand, he says the Strait of Hormuz could reopen in the next day or two. He also, though, makes it clear that the MOU with Iran is not final and is warning that if he does not like what he sees, then the US could strike again. But of course, markets are choosing to focus on the possibility of peace, rather, with shipping through Hormuz now resuming, supply fears easing. Oil prices have tumbled to 3-month lows. Brent is now trading around $79 a barrel as we speak, and WTI has slipped to the mid-70 range. The geopolitical risk premium that had driven crude oil prices higher is now beginning to evaporate. Now let's listen into what the exact remarks were by President Donald Trump that could put a spanner in the works.
The Strait is going to be opening. It's already partially opened. It's going to be opening up soon in full over the next day or two. And the market has gone wild, and oil has come tumbling down. Oil is at $73 to $74. No, it's not final. It's a memorandum of understanding. And if I don't like it, we'll go back to shooting at them, dropping bombs on their head. If I don't like it, if they don't behave, we'll go right back to dropping bombs right smack in the middle of their head.
Bombs right smack in the middle of their head. This is the word that we got from President Donald Trump not too long ago, right there in France, where the G7 summit is happening. So the bottom line on this is that markets have priced in peace, but diplomacy in the Middle East has a history of moving in reverse. For India, of course, that real story is still about crude oil and prices, because every dollar move in oil matters when it comes to our economy, our inflation. Also, it matters to how our currency, the Indian rupees, does and how our growth trajectory pans out. So all of that is still in play. Meanwhile, Prime Minister Modi and American President Donald Trump are going to soon hold their high-stakes bilateral meeting on the sidelines of that summit in France. The two leaders looking at steering the India-US relationship through this changing global order. The discussions are going to span trade, artificial intelligence, supply chain resilience, also global security. It's all happening at a time when the world is grappling with conflict in West Asia, shifts in global trade also, and the race for emerging technologies. So this is going to be the first in-person interaction between Trump and Modi in over 16 months. And that meeting comes as India pushes to conclude the first phase of that trade agreement with the United States, also trying to deepen cooperation in critical technologies, in AI, in investment flows too. So trade officials from both sides are expected to continue negotiations in the coming weeks. For India, the timing of this meeting is crucial. From energy security to stable sea routes through the Strait of Hormuz, the outcome of global diplomacy today is going to have direct implications for India's growth story. Hence the bottom line on this, that in this fractured world right now, the strategic partnerships are becoming as important as the economic ones. And for India, few relationships matter more than the one with the United States. And that's why this meeting is going to be a very crucial one to track. We keep saying that, but we've got our eyes and ears on this. We take a very quick breather on that note here on this edition of The Bottom Line. Much more coming up after the break. Do stay with us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our...
Hello again, you're joining us on the bottom line here on NDTV Profit. The Fed is set to hold rates steady again. Markets are watching Kevin Walsh's debut, and it's being watched very closely. Focus is on whether the Fed drops its easing bias and shifts to a more data-driven, less guided policy stance. Let's find out where expectations are pegged. And for that, my colleague from our research team, Hiral, is joining us. Hiral, tell us exactly what we can expect at the end of the current FOMC meet.
Absolutely. It's going to be an interesting one to watch out for because, yes, everyone knows that rates probably will be on hold. That's the expectation. But the focus is going to shift to the speech tonality as well. Now, Fed Chair Kevin Walsh, this is going to be his first FOMC meet and the first press conference from an incoming chair perspective. Let's look at the key expectations. They're likely to keep the policy rates on hold, as we said, and this is going to be the fourth consecutive meet where the policy rates will be on hold. The rates we're expecting is in that 3.5 to 3.75%, and what is interesting is that it is going to be a unanimous support. That is what is on the cards. Now, the committee will also likely drop its dovish or cutting bias. That is what is indicated so far. Now, let's quickly first understand what are the challenges that are being faced by Walsh as he's come in. First up, there is pressure from the White House in regards to where lowering rates goes. So he has to somewhere figure out how to meet with those expectations. Secondly, you're looking at higher inflation, which is resulting from the Middle Eastern crisis as well. And there is a two-speed economy that you're looking at, wherein there is strong AI activity, which is contrasting with the much weaker other part of the economy in the US. So that's the two-pronged or two-speed economy that you're looking at. Moving from there on, if you have to look at the key monitorables, one, the markets will be assessing whether the Fed's language is signaling a shift in its policy outlook or not. Secondly, the forecast updates in terms of the SEP. Now, whether Walsh will actually participate in the dot plot, that is going to be interesting. If there is any potential shift away from the forward guidance, that will be one of the key monitorables for us to watch out for. And whether Walsh is leaning towards a dovish tone in the press conference. Lastly, if there is any change in terms of the committee or what they're considering on its communication side of it, that is going to be the key monitorable as well. Very lastly, Kevin Walsh's debut communication strategy, what is that going to look like? First up, shift in tonality on the cards. So removing the easing bias is what you're looking at. Less forward guidance is number two. Third, his stance in terms of where inflation goes, future rate hikes, AI and productivity, and balance sheet management. And lastly, markets are expecting him to signal transition towards greater data flexibility. So all of this is on the cards, but the question is, everyone's going to be wanting to hear his speech and in terms of the press conference.
That's true. We are going to get an insight into how Kevin Walsh's working style is and his thought process. So that speech is going to be all important. Meanwhile, turning it back to our central bank, the Reserve Bank of India opening the door to higher foreign currency inflows. In a move, the RBI has withdrawn the interest rate ceiling on fresh FCNRB deposits with maturities of 3 to 5 years. So it has also eased rate restrictions on fresh non-resident external, the NRE deposits. And that gives banks more flexibility to offer attractive returns to the non-resident Indians. This move is aimed at drawing overseas funds, also boosting foreign exchange inflows and supporting external sector stability amidst this uncertain global environment that we are currently in. Meanwhile, India's digital wallet companies are seeking relief from the RBI's proposed norms for prepaid payment instruments, and they're warning that tighter transaction and loading limits could hurt business growth, also slow down digital payments adoption. My colleague Piyush is joining us with more on this. Piyush, tell us about the concerns here.
PPI companies, prepaid payment instrument issuers, are actually caught in a fix with the RBI's proposed new guideline, covering the entire sector. What PPI companies are saying are if the proposals come into effect, then they fear severe, massive business loss. Some of the smaller PPIs may actually shut shop. Now, what are the concerns? The concerns are that the limit that the RBI has set with regard to the PPI debit limit at 2 lakh, further P2P transaction, monthly transactions have been capped at around 25,000. Earlier it was around 2.5 lakh a month. So this limit has been shrunk very sharply, and apart from that, the cash loading facility on a wallet has also been reduced to around 10,000 rupees from 50,000 rupees earlier per month. Now what PPI companies are saying is that a blanket approach for all the PPI players is not necessary at this stage. The RBI may consider introducing a sandbox wherein they test a set number of users in that sandbox and apply these guidelines to them and see if there is a massive fall in the volumes and the value of transactions done using PPI wallets. Now, there are major PPIs in the country. Some of them are Amazon Pay, MobiKwik, Navi, PhonePe, Pine Labs, and Razorpay.
Piyush, thanks very much. That helps us understand exactly where those concerns lie. Meanwhile, for the Civil Aviation Ministry's Passenger Assistance Control Room, now to